Hello CMA final students. All of us are aware of the syllabus of the indirect taxes, which is huge. Master it with our in-depth CMA final marathon revision recorded in 100% English. If backed up by right efforts, the conceptual clarity that you gain by watching this marathon will surely help you to score 60 plus marks in the public exams. So this video is recorded by our top rated senior faculty, C.A. Rajshekhar sir, with 17 years of rich teaching experience. So this video is meant for December 2024 as well as further attempts. And in this 12 hours of detailed marathon, faculty has covered every crucial topic, ensuring a thorough revision for over 75 plus marks. And here is a summary of the chapters featured in this 12 hours marathon video. For easy navigation, we provided timestamps information in the description of this video and highly recommended to watch this video in the same order and at normal speed. And we captured this marathon in live face-to-face classes, and it is not a pre-recorded or studio recorded video. So click like so that more number of students can find this video on the YouTube. If this video helped you in preparation, then don't forget to share it with your friends so that they'll also get benefited. So drop your feedback in the comment section, which will surely motivate us to bring more videos like this. You can freely download the exclusive material shown by the faculty while teaching this marathon. Here is the step-by-step process to download the same. First, go to Google Play Store in some Android mobile or Android tab and install our Android app Mastermind's online classes. So you need to give your mobile number and other details and sign up. And once after signing up, in the home screen on the top left corner you will see 3 horizontal lines. So click on the same. So you will find a menu. In that menu, so choose the option free material. So in that, choose the tab document. And in the document tab, open the folder CMA Final Marathon Classes for December 2024. And in that folder, click the subfolder Indirect Tax Laws. So in that subfolder, you will find the document and you can open it using an Acrobat reader or some other PDF reader app. So after opening, either you can share or you can download or you can even print the same document. The countdown is on. The marathon videos for all the remaining subjects of CMA final will also be made available soon. So subscribe to this channel and press the notification bell icon so that the moment we upload the video, you will receive a notification. Now you can start enjoying the marathon. All the best, my dear students.
We are going to discuss about the marathon session with respect to CMA final. And in this session, we are going to cover the areas which will get you at least 60 to 70 marks in total. Okay, ma'am. This is a overall view of your CMA final syllabus. And if at all you are able to concentrate on these areas, definitely you will get an exemption here. So that's why I named it as Sure Success Strategy and ABC Analysis with respect to CMA final, ma'am. So I just divided the concepts into category A and category B and category C and like this. In this, actually, if at all you are able to study category A chapters, then definitely you will get, see how many marks with respect to category A. The modules are not with respect to our Masterminds modules. These are with respect to your CMA final board material ones. So regarding that, what is the position? Module 1, 2, 3, 4, 5, 6, 7, like that, those are the module numbers. And the chapters you need to keep focus is these areas like here, supply, exemptions, time of supply, place of supply, valuation, ITC, and zero rated supplies and deemed exports are generally covered under this actually FTP related concept. We'll see there. TDS and TCS, GST returns, accounts and records, even though it is there in this particular category, you need to study on your own. Pure theory chapter, no logics will be there. That's why I'm not going to cover it in the marathon. And this is with respect to customs, valuation, baggage and export promotion schemes. These are the areas we are going to cover in this marathon. Apart from that, In category B also, I am going to cover these three areas. RCM, composition scheme and e-way-bill. And if possible, I am going to cover DBK also, depending upon the time. So these are the areas I am going to cover. Category C and remaining ones we are going to ignore. So in this marathon, we are going to cover how many marks? Supply 7, exemptions 7, almost it will be there in every attempt. Place of supply 7, valuation 7, ITC, TDS and GST returns. So these are the areas we are going to cover. So 7, 7, 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9 sevens, 63 and 14. Approximately 70 to 80 marks, and including RCM and composition scheme, they are going to ask occasionally. See, these are every attempt questions. Supply, exemptions, place of supply, valuation, ITC, and TDS, GST returns, pure theory topics. These two are generally they are keeping on. TDS and TCS, they are asking most probably theory questions. And in the same way, GST returns will be there. So with respect to GST returns, what is the position there? It is also a theory one. So next one is with respect to customs, valuation, baggage and FTP, few schemes. So these are the areas we are going to cover. Apart from that, in B category also, I am going to cover RCM, composition scheme, e-way-bill and duty drawback. Okay, so these are the areas I am going to cover. Initially, we need to start with supply chapter. So this is with respect to supply here. So if you observe here, what is the taxable event with respect to supply? The taxable event with respect to GST is supply. What is meant by the word taxable event? When tax is levied, when tax is attracted, or what is the triggering point of taxation, it is known as taxable event. What is the taxable event with respect to this particular GST? Supply. What is the section number that deals with supply? What is the section number that deals with supply? Section 7. Here in that section 7, the definition of supply was given under 7.1a. The definition of supply was given under 7.1a. Okay, ma'am. So with respect to 7.1a, there are 6 conditions. In fact, practically 7.1a covers 4 conditions that are required to be satisfied. If those 4 conditions are satisfied, then it will be called as a taxable one as per 7.1a. What are those 4 conditions, First one, it must be a supply. First one, it must be a supply. Second one, it must be of goods or services. Third one, it should be made for a consideration. And fourth one, it should happen in the course or furtherance of business. If all these 4 points are satisfied as per 7.1a, GST is needed to be levied. Okay. First one, it includes all forms of supply. What is meant by the word supply here? What is the word supply covers? Supply covers all these areas. Sale, transfer, barter, exchange, license, rentals, lease, disposal. These are the forms of supplies it will cover. What is meant by the word sale? If the ownership is going to be transferred, it is called as sale. Without transfer of ownership, the physical possession is going to be shifted. It comes under transfer. It comes under transfer. That means, what is example for transfer? Hire purchase. With respect to hire purchase, when the ownership is going to be transferred? Upon the payment of last installment. In those cases, when this actually, the ownership will transfer upon the payment of last installment. That's why when the physical movement started, the ownership is not transferred. That's why it comes under transfer. Transfer is also a form of supply. What is the difference between barter and exchange? If two parties exchanges non-monetary consideration, it is called as barter. At least some part of the consideration involved therein is money. It comes under exchange. Mobile to mobile comes under barter. Mobile plus some amount is equal to another mobile comes under exchange. What is meant by the word license? Permission to use the brand name or trade name. Permission to use the IPR. IPR means intellectual property rights. Intellectual property rights. And intellectual property rights means? Intellectual property right means intangible assets. Intangible assets examples, brand name, trade name, etc. So using permission to use those names. Next one is lease and rentals. Generally with respect to lease, it will be used for movable property. Rental will be used for immovable property. Disposal. What is meant by the word disposal? At the end of the lifetime, if the asset is going to be sold as a scrap or a second-hand one, it will be called as disposal. That is the point we need to remember. And it includes agreement to supply the goods or services also. That means when the goods are supplied, GST is attracted. When the goods are going to be supplied, technically it is agreement to sell. That means sale is covered under supply as well as agreement to sell is also covered under the word supply. This is the first condition. That supply must be of goods or services. What is meant by the word goods, ma? Supply must be of goods and services. What is meant by the word goods here? Goods means movable property, excluding money and securities. Goods means movable property, excluding money and securities. Okay, ma? What is meant by the word movable property? If the item can be shifted from one place to another place in the same condition, it is movable. If it requires dismantling and re-erection, it will be called as immovable. It will be called as immovable. Okay, ma? Goods means every kind of movable property is a good. Every kind of movable property is a good. Okay. So every movable property is a good. That is okay. But excluding money and securities. Why money was excluded, ma? Because money is going to be there in legal tender. If at all it was there within the scope of money, it will be tax on tax, ma. It may lead to cascading. So that's why money was excluded as well as securities. What is the example for transactions in terms of money, ma? What is the example for transactions in terms of money? A specific example for that. Depositing the money in the bank, withdraw the money from the bank, giving the loans, or what we can say, making payment of the loan. All these things here comes under the word money. They are neither the goods nor the services. And securities. What is meant by the word securities here, ma? Shares, debentures, etc. These things comes under the word securities. These things comes under the word securities. Okay. These things comes under the word securities, ma. But keep it in mind, sale of securities, no GST. Facilitating in securities, there will be GST. Sale of securities means it will comes under your capital gains in income tax. Therefore, no GST will be there. Facilitating in securities means stockbroking services. With respect to the stockbroking services, what is the position, ma? With respect to the stockbroking services, what is the position? Definitely is like zero, the upstocks like that. They will facilitate the trading in the shares. Definitely it is a supply of service. On that, GST is needed to be paid. Okay, ma. Next one. Service means anything other than goods includes use of money. Service means anything other than the goods including use of money. That means if at all it is not a good, automatically it is a service. My doubt is here, what about sale of the land and building? Is it a supply of service? Sale of the land, sale of the building, is it fit in the supply of service? Is it fit in the supply of service? Answer is yes. They fit in the definition of service. The reason is land is movable? No. Building is movable? No. If at all it is not a movable, it is not a good. If at all it is not a good, automatically it is a service. But by the power that is given by 7 subsection 2, negative list of GST, government says that on sale of the land, sale of the building is neither the supply of the good nor the supply of service. This is the point you need to remember. But as per the definition, it will fit in the word service. Because if it all anything other than goods, if it all it is not a good, automatically it will become a service. That is the point. Next one. And includes use of money. Sir, just now you said that on money no GST na. Then what is this use of money here? What is the amount you will pay for use of money? What is, yes, what we will pay ma? Interest. For this, what is the amount we will pay? Interest. Sir, that means now I am linking this interest with exemption chapter. Transaction in money, no GST. But for use of money, for using the money, what is the additional consideration you are paying ma? Interest. Definitely interest is taxable. Interest is taxable, it comes under supply of service. Now I am linking this interest with the exemptions chapter. Which interest is taxable? Which interest is exempted? Interest on credit card, taxable. Interest on credit card, taxable. All other interest incomes exempted. Interest on credit card only taxable. All other interest incomes are exempted. Interest on credit card only taxable. All other interest incomes are exempted. Sir, all other interest income means which one will come? Which one will come? Interest on housing loan, interest on personal loan, interest on gold loan, whatever other loans that will be there, whatever the interest you will pay, it is exempted and you are not liable to pay any GST. Okay. So interest on credit card only taxable, all other interest incomes are exempted. That is a point you need to remember. And goods includes actionable claims also. What is meant by the word actionable claim? What is meant by the word actionable claim? The claim on which we can take legal action even though there is no security, it is called as actionable claim. It is called as actionable claim. But any example for actionable claim? Promissory note, for example. Even though there is no security offered to that, but still we can go to the court of law and enforce it. So, what is meant? What is example for actionable claim? What is example for actionable claim, ma? Promissory note. With respect to promissory note, even though there is no security offered to that, but still we can go to the court of law and enforce it. Therefore, promissory note is a actionable claim. The point is here, any other example apart from promissory note? Every negotiable instrument is a actionable claim. Every negotiable instrument is a actionable claim. Apart from that, arrears of rent, insurance claims, betting, gambling, lotteries, cash notes, horse races, online money gaming, all these things will come under the word actionable claims. Sir, that means on every actionable claim are we liable to pay the GST? Answer is no. Only on specified actionable claims. Only on specified actionable claims we are liable to pay GST. Sir, what are those specified actionable claims? 6 points will be there. Just now we discuss lotteries, betting, gambling, casinos, horse races, online money gaming. These are the 6 actionable claims that are specified as specified actionable claims. On them only we are liable to pay the GST. On the rest of the actionable claims, we are not liable to pay any GST. Lotteries, betting, gambling, casinos, horse races, online money gaming. These are 6 specified actionable claims. On those actionable claims only we are liable to pay the GST. On the rest of the actionable claims we are not liable to pay GST. These are the important points in goods and service definition, second one. Why we are discussing about these things? We are discussing about 7.1a. As per 7.1a, there are 4 conditions primarily. First one, it must be a supply. Already we completed. Second one, that supply must be of goods or services. That is the thing we just completed. Next, what is the next one, ma? It must happen in the course of, it must happen for a consideration. That is the third condition. So with respect to consideration, it includes monetary payment as well as non-monetary value. That means consideration can be divided into 2 types. One is monetary consideration. Second one is non-monetary consideration. Monetary consideration means in terms of money. Non-monetary consideration means in kind. Both are treated as valid considerations. And it excludes government subsidies. This is, that means subsidy from government excludable. Subsidy from any person other than government includable. Subsidy from government excludable. Subsidy from any person other than government includable. And another important point in consideration is deposits are only considered when applied as a consideration. Deposit means here security deposit. Security deposit is not a consideration unless otherwise it is adjusted for the payment. Any example for that? Caution deposit. While you are studying intermediate in Masterminds, you may have paid the caution deposit. That caution deposit, if at all it is refunded to you, then it is not a consideration. You are not liable to pay any GST. But if the caution deposit is not refunded to you, it is adjusted for the payment. In that case, it will be treated as consideration. You are liable to pay the GST. Same point is applicable to mobile phone deposits. Generally, with respect to postpaids or something, you need to make some advance deposit. Generally, deposit will be carry forwarded. Then it is not a consideration. In the last month, when the bill was not paid, the caution deposit, security deposit will be forfeited. Then definitely in that month in which it was forfeited, definitely it is a consideration and we are liable to pay the GST. So simply, when security deposit was given, it is not a supply. It is not a consideration. But in the month or on the day when that security deposit was forfeited or adjusted for some payment, then only it is a consideration, then only you are liable to pay the GST. That is a point you need to remember. So these are the important points in consideration topic. Okay, so the next one is, it must happen, in this the most important ones in the exam are going to be asked only 2. One is government subsidy, or one is subsidy, second one is security deposit. In consideration, so many other points can also be there. But in exam, they are repetitively asking based on these 2 points only. One is subsidy, second one is security deposit. One is subsidy, second one is security deposit. Third condition is, what is the fourth condition that is there? Business. What is the fourth condition that is there, Business definition. So business means trade, commerce, manufacturing, profession, occasion. What is meant by the word trade? Buying and selling of the goods is known as trade. What is meant by the word commerce? If buying and selling happens in large scale, it is called as commerce. What is meant by the word manufacturing? Converting raw materials into finished goods is known as manufacturing. What is the difference between profession and occasion? In order to exercise a particular thing, prescribed experience, prescribed education qualification is required, then it is called as profession, like doctors, CAs, lawyers, etc. And if at all there is no education qualification, but by birth, whatever the natural talent you are having, by that natural talent, if at all you are able to earn a regular flow of income, it comes under vocation. What is meant by the word vocation? Even though there is no education qualification, but by birth, whatever the natural talent you are having, by that, if at all you are able to generate a regular flow of income, it comes under occasion. What is the example for that, ma? Sachin Tendulkar, MS Dhoni, all these people come, Virat Kohli, or singers, artists, painting, all these things comes under occasion. Because by qualifying in any exam, you cannot go for international matches. For that, education qualification is not required. For playing Dhoni helicopter shot, actually no education qualification is required. Na? But by skill, whatever the natural talent they are having, by using that you are generating a regular flow of income, it comes under occasion. But anyway, whether it may be trade, manufacturing, profession, vocation, everything will be covered under the word business. Everything is covered under the word business. And it includes facilities by the club to its members. In fact, this point is linked to 7.1AA. So, in fact, it will be treated as 7.1AA. Why 7.1AA was created? Ma? Anybody knows the reason for that? Because there was a case between one club and the department. Ma. And court said that club and the members are one and the same. Therefore, it will come under self-service. You are not liable to pay any GST. But when this happens, department actually hurted a lot. When department hurts, what it will do? Retrospective amendment. What it will do? Retrospective amendment. Therefore, by retrospectively, they created a concept of 7.1AA. What 7.1AA will say? Club and the members, even though they are not separate persons, they are deemed to be separate persons. Therefore, it is a supply. Deemed to be a supply. Okay, ma. What 7.1AA says? Whatever the facilities that are provided by the club to the members, even though it is a self-service, even though it is a self-service, what is the position, ma? It will be treated as a supply. And it is a business activity. That is the point. Next one. It covers admissions to premises like zoo, museum, movie halls, etc. That means whenever there is any entry fee is needed to be paid, whenever there is any entry fee is needed to be paid, those activities are also treated as business activities. I can link this point with exemptions. Anybody remembers what is exemption you will get here? With respect to the cases like dance shows, music shows, award functions, sports events, ticket prices less than or equal to 500, it is exempted. More than that, full amount will be taxable. And with respect to zoo, museum, national park, tiger reserve, in these four cases, irrespective of the amount, they are exempted. Are you able to recollect exemptions chapter, ma? With respect to this, admission to event is a business activity. It is a supply. But with respect to few cases, if the ticket price is less than or equal to 500, it is exempted. Simply remember these four, ma. Then other things comes under 500. What are these four? Zoo, museum, national park, tiger reserve. With respect to these four, irrespective of the ticket price, they are exempted. Irrespective of the ticket price, they are exempted. But whereas with respect to remaining cases, depends upon ticket price. Like less than or equal to 500, it is exempted. More than that, full amount will be taxable. And last but not the least, whatever the activities the race club will do, the bookmakers, generally horse races will be there. Na? They will bet on those number of so-and-so number horse like that. Those things comes under bookmaker activities. So whatever the activities the race club and the bookmakers will do, it is also a business activity. Definitely we are liable to pay the GST. So these are the points what we have discussed. Okay, ma. So we completed 7 1A now. And next one is, sir, just now you said that consideration is mandatory for treating any activity as a supply. Na? That means, is there any case where even though there is no consideration, but still it is deemed to be a supply? Yes, those activities are covered under 7.1c, read with Schedule 1. 7.1c, read with Schedule 1. So that is the point one need to remember. Okay, ma'am. 7.1c, read with Schedule 1. In this case, how many activities are covered? That means 7.1c simply says that the activities that are specified in Schedule 1 or deemed supplies, even though it happens without consideration. How many activities are specified in Schedule 1, ma? 4 activities. What is the first one there? Permanent transfer of business asset on which ITC was claimed. It includes permanent transfer of business asset on which ITC was claimed. On which ITC was claimed. So as per 7.1c Schedule 1 with respect to first point, 3 points are there. One is business asset. Second one is on that ITC was claimed. Third one is it must be permanently transferred. If all these 3 conditions are satisfied, even though it happens without consideration, but still it is a deemed supply. Best example for that is Masterminds transferred their old computers to the orphanage. Is it a deemed supply? Masterminds transferred their old computers to the orphanage. Is it a deemed supply? In that, we need to check these 3 conditions are satisfied or not. First one, it must be a business asset. Is it a business asset? Yes. Is it, on that IDC was claimed? Yes, on computers, it is not a blocked credit. Therefore, definitely we can claim the ITC. Third one, permanent transfer. Yes, it is permanently transferred to orphanage. All the 3 conditions are satisfied, even though it happens without consideration, but still it is a deemed supply. So deemed supply without consideration includes permanent transfer of business assets on which ITC was claimed. That is the first point. Second one, related party transactions. What is meant by here? 2 types of transactions are covered under supply without consideration. One is related persons, second one is distinct persons. So any transaction that happens between related persons or distinct persons, even though it happens without consideration, but still it is a deemed supply. Even though it happens without consideration, but still it is a deemed supply. Okay, ma. So with respect to related persons, ma, there are actually 9 points. Anybody remembers those 9? Common directors, that means officers, directors, partners, employer and employee, more than or equal to 25% of voting power, holding and subsidiary, third party controlling these two controlling a third party, same family members, sole selling agent. In this, the most important from the examination point of view is only 2 points. One is same family members, second one is employer-employee relation. You need to keep focus on these 2 points only generally. Okay, ma. So see, partners, officers, directors. Now come to these same family members. When the persons are treated as same family members, ma, when the persons are treated as same family members? Only that one you remember. Oh, the spouse and children, whether financially dependent or not. Spouse and children, whether financially dependent or not. Whereas with respect to grandparents, parents, brother, sister, when financially dependent, then they are treated as same family members. Spouse and children, whether financially dependent or not, but whereas with respect to grandparents, parents, brother, sister, when financially dependent, then only they are treated as related persons. Okay. And next one is covers employer-employee relation. When employer-employee relation will be covered under GST? Generally, it can be divided into 2 points. Employee to employer, always taxable under, income tax, no GST will be there. Employee to employer, whatever the things he will do, as per the employment agreement, I will add, as per employment agreement, whatever the things employee will do to the employer, as per the employment agreement, no GST will be there. Okay. And in the same way, whatever the benefits the employer gives to the employee, as per the employment agreement, then also no GST will be there. Then also no GST will be there. Sir, when it will comes under GST? When the things are outside the scope of employment agreement, then only those activities are covered under GST. Whether the services by employee to employer or employer to employee, as long as they are within the scope of employment agreement, they are covered under that your income tax, but not under our GST. But whatever the things the employer will do to the employee, which is outside the scope of employment agreement, then what is the position, ma? It is taxable under GST. Let's take the example, rent-free accommodation within your employment agreement, then it is taxable under salaries. But whereas gifting a car on Diwali as a Diwali bonus, it may not be there in the agreement. If at all it is not there in the agreement, it is within the scope of GST. So, employee to employer or employer to employee, whatever the things they will do, they are within the scope of employment agreement, they are taxable under income tax. But whatever the things they will do outside the scope of employment agreement, they are taxable under GST. That is the thing you need to remember. Okay. Next one includes the entities with shared control or ownership. I told you, holding and subsidiary, more than or equal to 25% of voting power. These two controlling the third one. A third one is controlling these two. Those activities will come under this. But we need to keep focus on same family members and employer-employee. So any and I just forgot to tell you, with respect to employer-employee relation, if it all it is outside the scope of employment agreement, it is covered under GST. But if the value exceeds 50,000, then only you are liable to pay the GST. If the value is less than or equal to 50,000, then you are not liable to pay any GST. Even though it is outside the scope of employment agreement, but the value is less than or equal to 50,000, then what is the position, ma? No GST. If the value is more than 50,000, then only we are liable to pay the GST. Okay. This is related persons. Related persons, two important points. One is same family members. Second one is employer-employee relation. Next, distinct persons. What is meant by the word distinct persons, ma'am? When the parties are treated as distinct persons, when you are having separate registrations, whether within the same state or different states, but those establishments are of same entity. When they are treated as distinct persons, establishments of same entity is having the separate registration, whether within the same state or in different states, they are deemed to be distinct persons. Establishments of the same entity. When they are called as distinct persons, this is the first condition. They must be the establishments of same entity. I just wrote there. Second one, they must have the separate registration. If these 2 points are satisfied, they are called as distinct persons. Sir, that means if at all they are in different states, separate registration is mandatory. If at all they are in the same state, separate registration is optional. But once taken, they are deemed to be distinct persons. Okay, sir. If they are deemed to be distinct persons, then what is the position? Then whatever the stock transfer happens between these distinct persons, it is a deemed supply. Even though it happens without consideration, but still it is a deemed supply. That is the second condition, second point in deemed supplies. Okay. Next one. There is now coming to third point here. What is the third point here, In deemed supplies, what is the third point here? Principal-agent relation. How many types of agents will be there generally? 2 types. One is buying agent, another one is selling agent. One is buying agent, second one is selling agent. With respect to this concept here, what is the point here, ma'am? Just wait. Third party to, okay. So third party to buying agent and buying agent to principal. From third party, buying agent purchases the goods and send the goods to the principal. Even though this transaction happens without consideration, but still it is a deemed supply. Even though the transaction happens without consideration, but still it is a deemed supply. Okay, ma. Okay, ma. So third party to buying agent to the principal. Even though the transaction happens without consideration, but still it is a deemed supply. Same point. Principal to the selling agent and selling agent to the customer. Principal is sending goods to the selling agent is sending the goods to the customer. Even though it happens without consideration, it is a deemed supply. Even though it happens without consideration, but still it is a deemed supply. Okay. But government has given one relaxation. What is the relaxation government has given here? What is the relaxation government has given here? Anybody remembers? What is the relaxation that was given? That is note point. While receiving the goods by the buying agent or while selling the goods by the selling agent, if the invoice is in the name of principal, then deemed supply concept not applicable. Deemed supply concept will not be applicable while receiving the goods by the buying agent or while selling the goods by the selling agent, even though it happens without consideration, while receiving the goods by the buying agent or selling the goods by the selling agent, if the invoice is in the name of the principal, then the concept of deemed supply will not be applicable. That means when the concept of deemed supply will be applicable? If the invoice is in the name of the agent, then only the concept of deemed supply will be applicable. This is the third point. While receiving the goods by the buying agent or while selling the goods by the selling agent, if the invoice is in the name of the principal, then the concept of deemed supply will not be applicable. If the invoice is in the name of the agent, then only the concept of deemed supply will be applicable. This is the third point. Now we need to see the fourth one. What is the fourth one, ma? Import of services from related person for business purpose. Even though it is without consideration, but still a deemed supply. That means for this 7(1)(c) import, 4 conditions are required to be satisfied. Is it import of service? Yes. Is it without consideration? Yes. Are they related parties? Yes. Is it for business purpose? Yes. For all these 4 questions, answer is yes. Then only the concept of deemed supply will be applicable. What are those 4 questions, ma? Is it import of service? Yes. Is it without consideration? Yes. Are they related parties? Yes. Is it for business purpose? Yes. For all these 4 questions, answer is yes. Then what will be applicable, ma? 7(1)(c) is applicable and you are liable to pay the GST. That is the point one need to remember. Okay, fine. So there ends 7(1)(c) also, ma. Now what is 7(1)(b) now? 7(1)(b). How many? For 7(1)(b), technically only 2 conditions are required to be satisfied. First one, it must be import of service. Second one, it must be with consideration. There ends. If at all it is with consideration, we will not check whether they are related or unrelated, whether they are business, non-business, everything will be a supply. But with respect to few cases, exemption was there. That is different story. But whether as per 7(1)(b) it is supply or not is a different story. Whether it is a supply or not. So 7(1)(b), first condition, it must be import of service. Second condition, it must be with consideration. If these 2 conditions are satisfied, then even though it happens without, even though it is for business or non-business, in both cases, it will be a supply. It does not matter whether they are related or unrelated, whether it is business or personal, everything will be covered under 7(1)(b) as a supply. Okay, ma? This is 7(1)(b), 7(1)(a) and 7(1)(c). Now, what are the next points we need to see? Seven subsection 1A. Before 7(2), 7 subsection 1A is there, na? What is 7 subsection 1A deals with, ma? What is 7 subsection 1A here deals with? Classification. Whether it is a supply of the good or a supply of service will be taken care by 7 subsection 1A. Sir, why we need to classify it? What is the need of classification? Why we should classify them as a supply of the good or as a supply of service? What can be the reason for that? Tax rates are different for both goods and services. That's why we need to identify which are supply of the goods and which are supply of service. Yes, ma. In that, the first point is regarding this one, transfer of title in the goods is classified as supply of the goods. What is meant by the word title? Ownership. Whenever the ownership is going to be transferred, definitely it will be called as supply of the goods. Okay, ma. But ownership can be transferred immediately or at a future date. The ownership may be transferred immediately, that is called as sale, or at a future date. At a future date means agreement to sell. But whether it is sale or agreement to sell, in both cases, the ownership is transferred. No? That's why supply of the goods or supply of service, supply of the goods. Without transfer of ownership, only right in the goods is transferred. Without transfer of title. Without transfer of title, only the possession is going to be shifted. In that case, supply of the goods or supply of services, ma. It is called as supply of service. Okay, ma? With respect to transfer of right in the goods, without title comes under supply of service. Simply ownership is transferred or going to be transferred, supply of the goods. Without transfer of ownership, only the possession is going to be shifted, comes under supply of service. Okay. Next one, land and buildings. With respect to land and buildings, already we know that sale of the land, sale of the building, there is no GST because they are covered under 7 subsection 2. Because they are covered under 7 subsection 2. But whereas lease of building or tenancy or letting out of the building or land, with respect to them, any ownership is going to be transferred? No. That's why is it a supply of the good or a supply of service? Supply of service. It comes under supply of service. And already I told you, with respect to construction, it can be divided into 2 types. Consideration paid before completion of construction. Consideration was paid after the completion of construction. If the total consideration was paid after the certificate of completion, it comes under sale of building, no GST will be there. But whereas here some part of the consideration was paid, that before the certificate of completion, then it comes under supply of service and it is taxable. See, construction services are taxable if the consideration received before completion. Okay, ma. So construction services are taxable if the consideration is received before completion. While the property was under construction, we received some part of the consideration. It is a supply of service and it is taxable. Next one is IPR. Next one is IPR. What is, oh, sorry. Next one is IPR. So what is meant by this IPR here? IPR means here, intellectual property rights means intangible assets like patents, copyrights, trademarks, etc. Is it a supply of the good or a supply of service? IPR. IPR is a supply of the good or a supply of service? It depends. Okay. It depends, ma. If at all it is a permanent transfer. If at all it is a permanent transfer, it comes under supply of the goods. If at all it is a temporary transfer, then it will comes under supply of service. Okay, ma. If IPR is going to be transferred permanently, it will comes under supply of the goods. But whereas if the IPR is going to be transferred on a temporary basis, it comes under supply of service. Okay, ma, that is the difference. So next one is some specific service categories. I use the word. Specific service categories means even though both goods and services are involved in that, law specifically says that it is a supply of service. I divided them into 3 points here. Even though both goods and services are involved in the transaction, law specifically says that it is a supply of service only. It is a supply of service only. Okay, ma. With respect to this, restaurant and catering services. Restaurant and catering services. With respect to restaurant and catering services, what is the position, ma? Food is sold and served in a plate. Food is sold and served in a plate. In that case, sale as well as service both are there. In that case, what is the position, ma? Supply of the goods or supply of service? Law says that it is a supply of service only. Same point is applicable to works contract. What is meant by the word works contract, ma? Works contract means construction of immovable property. So construction of immovable property is known as works contract. like bridges, dams, canals, etc. Those things comes under this works contract. Okay, ma. What is the end result? Immovable property. But in this case also, goods and services both will be there, na? So in order to construct this building, iron, sand, cement, wood, plus labor, all are needed, na? Both goods and services, both are needed. But law specifically says that it is a supply of service only. Last but not the least, in 7.1a, job work. What is meant by the word job work, ma'am? What is meant by the word job work? Job work means it is in relation to movable property. It is in relation to movable property. Any goods plus service both are involved. It will be a job work and it is always classified as supply of service. Take the example of tailoring. We just suppose, for example, S as given is shut to R. Okay. So here, with respect to this fellow, he just gave the cloth. Now, this on this cloth, actually, they made, this tailor has done the stitching work and actually written the shirt. But while making the shirt, stitching, labor was involved. Plus, in order to do the stitching, buttons are needed, thread is needed, some other major raw materials are needed. Yes. In this case, labor, service is there, buttons, thread, like that, goods are also there. Both goods and services are involved. But what is the end result? Mobile or immobile? Mobile. Those things are covered under job work. Job work, even though both goods and service both are involved, it will be still classified as a supply of service. So these are the points. I covered almost 7.1a in detail. But simply, if the ownership is going to be transferred, it is a supply of the goods. Without transfer of ownership, only the possession is going to be shifted, is comes under supply of service. This is 7 subsection 1a. Okay, ma'am. What is the next one we need to see now? What is the next one we need to see? Schedule 3. Activities not considered as supply. Simply 7 subsection 2. Negative list of GST. They are neither the supply of the goods nor the supply of service. In this, what is the first point that is covered here, ma? Services by employee to the employer in the course of employment. If at all it was done in the course of employment, then definitely what is the position, ma? Is it within the scope of GST or outside the scope of GST? That is the point they just wrote here. They are outside the scope of GST. Next one. Services by court or tribunal. That means justice must be provided equally to all. In order to make it happen, whatever the court fee or tribunal fee that is there, on that fee, there will not be any GST. They are neither the supply of the goods nor the supply of service. Next one. Functions performed by constitutional authorities. Functions performed by constitutional authorities. Like what we can say here, we can divide this point into 3 types. One is people elective members. Who are the people elective members, ma? MP, MLAs, MPs, MLAs, ward members, corporators, all these people, what they have done, ma? They are people elective members. What they will do in that capacity, it is neither the supply of the goods nor the supply of service. That is a point one need to remember. Okay. So the next point is second one is constitutional post holders. Who are these constitutional post holders? President of India, Governor, Chief Justice, COG, Comptroller and Auditor General of India, these people will be called as constitutional post holders. In that capacity, what they will do, it is neither the supply of the goods nor the supply of service. And the third one is government bodies. In that bodies, as a chairman, as a member, or as a director, if he holds anything, then also in that capacity, what you will do, it is neither the supply of the goods nor the supply of service. That means SEBI, IRDA, Telecom Regulatory Authority of India, RBI, in them as a director, as a member, as a chairman, what you will do, it is neither the supply of the goods nor the supply of service. Okay. Next one, already we know that sale of the land and completed buildings. See, what is the word I used? Completed buildings. That means when it will be called as completed building, certificate of completion was issued and the total consideration was paid after that certificate of completion. Then it is covered under 7 subsection 2 and we are not liable to pay any GST. First condition, it must be a completed building. Second one, the total consideration was paid after that construction is completed. Then what is the position, ma? Definitely in these cases, it will be called as negative list of, it is neither the supply of the goods nor the supply of service. Next one, I told you actionable claims other than specified actionable claims. What are those specified actionable claims? Lotteries, betting, gambling, casinos, horse races, online money gaming. With respect to the specified actionable claims, we are liable to pay the GST. Other than the specified actionable claims, we are not liable to pay any GST. And the next one is funeral, burial, crematorium, mortuary, like deceased person services will be there. Na? Those are also neither the supply of the goods nor the supply of service. And another 2 points, which are relevant to customs. One is high sea sales, and second one is bond to bond transfer, and the third one is merchant trading. These points are also neither the supply of the goods nor the supply of service. First one is high sea sales, second one is bond to bond transfer, and the third one is merchant trading. Third one is merchant trading. So these are the 3 cases. What is meant by merchant trading first of all? What is meant by merchant trading? What is meant by this merchant trading? Merchant trading means, let's say this fellow was here in India. He purchased the goods from UK, sending the goods to US directly. Purchased it from UK. Now the goods are directly sent to US, sold, without touching any Indian territory. Goods purchased from UK are directly sent to US without touching Indian territory. It comes under merchant trading. It is neither the supply of the goods nor the supply of service. And in the same way, what is meant by merchant trading, ma? Goods purchased from one country, sold directly to another country without touching India. It is called as merchant trading. It is neither the supply of the goods nor the supply of service. Next one is high sea sales. What is meant by high sea sales, ma? High sea sales means once the goods started from, let's say, goods started from UK. They are coming to India in a ship. Yes, I try to write the ship. Yes, Titanic. Okay. So while the goods are there in the transit, but the goods are sold to somebody else. The importer sold the goods to somebody else. That is called high sea sales. Once the goods are coming to India from outside India, while the goods are there in the transit, the importer sold the goods to somebody else. Those transactions are high sea sales. On those high sea sales, we are not liable to pay any GST. Okay. Next one, bond to bond transfer. Okay, the goods reached the port area. The goods are stored in a warehouse. Now, while the goods are there in the customs warehouse, if the goods are sold to somebody else, that new fellow need to give the fresh bond to the customs department. That's why this type of transactions are known as bond to bond transfer. These type of transactions are known as bond to bond transfer. Okay. So with respect to this bond to bond transfers, what is the position, ma? Even the goods are there in the customs warehouse. The goods are there in the customs warehouse. With respect to that, what is the position, ma? While the goods are there in the customs warehouse, if the goods are sold to somebody else, then what is the position? It is neither the supply of the goods nor the supply of service. And these are the points, ma. Apart from that, few circulars which are important in this supply chapter. First one is donations and gifts. With respect to donations, what is the position? Donations without quid pro quo, not considered as a supply. That means without any obligation. That's why donations can be divided into two types. That is, donations can be here divided into two types. One is conditional donation. Second one is unconditional donation. Conditional donation, definitely it is a supply. Unconditional donation, not a supply. Donations without quid pro quo means without any obligation. Donations with obligations comes under conditional donations. Definitely they are supplies. Donations without consideration, definitely they are unconditional ones. It is not a supply. Okay. And apart from that, whose name is going to be displayed will also specify that. If the business name is displayed within the premises, it is a supply. And personal name is displayed, it is not a supply. Business name is displayed, definitely it is a supply. Personal name is displayed, it is not a supply. Okay, ma. That is the point you need to remember with respect to donations. And I told you with respect to employer-employee relation already, na? With respect to gifts to employees, value up to 50,000 per year, they are not taxable. They are not taxable. That is a point you need to remember. Already we know that. So what is the next one, ma? Sales promotion schemes. So what is meant by the sales promotion schemes? What is meant by the sales promotion schemes? Here like that, see, free samples. What about the free samples? Free samples generally happens without consideration. Na? Therefore, is it a supply or not a supply? They are not considered as a supply unless they are covered under Schedule 1. Unless they are covered under Schedule 1. What is Schedule 1? Deemed supplies. Unless they are covered under Schedule 1, deemed supplies, whatever the free samples generally you will give, it is neither the supply of the it is not a supply, because it will happen without consideration. Next one, buy one get one free offers. This buy one get one free offer, even though I did not tell you section 8 till now, you know what is section 7 and 8, ma? Section 7 individual transactions, section 8 as a bundle. Buy one get one means for one item another item is given as free? No. Law assumes that two items are here supplied for a single price. Two items are here supplied for a single price. In that case, these two items as a bundle will be treated as single supply and section 8 will come into C. Buy one get one means two items are supplied for a single price. Therefore, it will be treated as a single supply. In those cases, what will be applicable, ma? Section 8 will come into C. Okay, next one. Already I told you principal agent relation. That means taxability depends upon invoicing arrangements. If the invoice is in the name of the principal, then deemed supply will not be applicable. It is not a supply. If the invoice is in the name of the agent, then it is a deemed supply and we are liable to pay the GST. And in the same way, declaratory agents have specific tax treatment for interest on advances. What is meant by declaratory agent, ma? What is the difference between normal agent and DCA? Normal agent will only market the product of that particular person, sells the product on a commission basis. But DCA, declaratory agent, will guarantee the payment of the amount also. That's why he will get the additional commission. DCS. Here the question is, seller will be there, DCA will be there, buyer will be there. Here, when within the due date, if the buyer fails to make the payment, DCA will make the payment to the seller and he will recover the money from the buyer. He will recover the money along with interest. Now the question is here whether that interest is taxable or not. Here who is given the loan? DCA. And we need to check under whose name the invoice is there. If the invoice is in the name of the DCA, then definitely interest is includable in the taxable value of the DCA. If the interest is in the name of the principal, then in that case, it is exempted, DCA, because with respect to interest on credit card only taxable, all other interest incomes are exempted. Therefore, this interest will be exempted. See, seller, DCA, buyer. While selling the goods by the DCA, if the invoice is in the name of the supplier, then interest is exempted. While selling the goods to the buyer, invoice is in the name of the DCA, then definitely the money plus interest, everything will be taxable under GST. If the invoice is in the name of the supplier, then interest is exempted. If the invoice is in the name of the DCA, then what is the position, ma? Interest is also includable in taxable value. Got the point, ma? Next one, movement of conveyance. With respect to movement of conveyance, what is the position, ma? Any interstate. First point is any interstate physical movement must be there of the vehicle is not treated as supply when any of three purposes. First one, for the sake of transportation of goods. Second one, for the sake of transportation of services. And third one, repairs and maintenance. For any of these three purposes, interstate physical movement of the motor conveyance was there. It is neither the supply of the goods nor the supply of service. It is neither the supply of the goods. Sorry, I just forgot. Yes, it is correct గా చెప్పాను. అంటే మీరు డౌట్ఫుల్గా పేసి దాని సెంటెన్స్ రాంగ్ చెప్పానేమో డౌట్ వచ్చింది. Okay, fine. In those cases, definitely it is neither the supply of the goods nor the supply of service. When ma? Any interstate physical movement of the vehicle for any of the three purposes like transportation of the goods, transportation of passengers. I just wrote service. Transportation of passengers and repairs and maintenance. Any of these three purposes, physical movement of the motor vehicle is there. On that motor vehicle, we are not liable to pay GST. But those services are taxable. Transportation of the goods is taxable. Transportation of passenger is taxable. Repairs and maintenance are also taxable. Sir, what is not taxable, sir? That motor vehicle value is there now. On that value, we are not liable to pay any GST. I told you the example of Morning Star bus at that time. Morning Star bus is moving from Guntur to Hyderabad. Guntur is there in AP, Hyderabad is there in Telangana. Therefore, both are needed to be taken separate registrations. Then, Guntur and Telangana will be treated as deemed to be distinct persons. When they are deemed to be distinct persons, bus is a business asset which is moving from Guntur to Hyderabad. But for which purpose bus is moving there? Transportation of passengers. In that case, on the bus value, we are not liable to pay any GST while sending the bus from Guntur to Hyderabad. But on the transport of passengers or transport of the goods, repairs and maintenance, or for further supply, definitely they are liable to GST. These are few important circulars. Not everything I covered, but what I thought most important for the exam I just covered here. And last but not the least, what is this, ma? Composite and mixed supply. So what is this composite and mixed supply here? Section 8. So what does section 8 here deals with, ma? If the item is going to be supplied individually, section 7 will be applicable. If the item is going to be supplied as a bundle, in those cases, section 8 will come into C. In those cases, what will be applicable, ma? Section 8 will come into C. Okay. So here, section 8 will divide the point into two parts. One is composite supply. Second one is mixed supply. So what is meant by composite supply, ma'am? Minimum 2 or more supplies. 2 or more taxable supplies must be there, not supplies. That means in composite supply, all the supplies must be taxable. All the supplies must be taxable. And they must be naturally bundled. They must be naturally bundled. What is meant by the word natural bundle? Without the other, the entire bundle is useless, or customers expect them in such a way, or there is a tradition in that particular business to supply them together. In all these cases, it will be called as natural bundle. Then one of the supply must be a principal supply. One of the supply must be a principal supply. If all these three conditions are satisfied, first one, minimum 2 or more taxable supplies must be there. Second one, they must be naturally bundled. And third one of the supply should be a principal supply. If all these three conditions are satisfied, even though it happens, definitely it is a composite supply. Okay. Then what is the rate that is applicable to this? Principal supply rate is equal to composite supply rate. Principal supply rate is equal to composite supply rate. That is a point you need to remember. This is composite supply. Now what is meant by mixed supply, ma'am? With respect to mixed supply, 2 or more individual supplies supplied for a single price, not naturally bundled. If these points are there, then what it will be called as, ma? It is a mixed supply. First condition, 2 or more individual supplies. Second one, they must be supplied for a single price. Entire bundle should have a single price. And third one, it is artificial bundle. If all these three conditions are satisfied, it is a mixed supply. And what is the rate that is applicable to that, ma? Highest rate will be applicable. Highest rate will be applicable. Highest rate is equal to mixed supply rate. Okay, ma? Minimum 2 or more individual supplies, single price, and artificial bundle. If all these three conditions are satisfied, it is a mixed supply. And what is the rate that is applicable, ma? Highest rate. There ends our supply story, ma. Okay, ma. So the next point will be, the next topic we need to see is, ma, RCM reverse charge mechanism. Before going to discuss about that, one need to know what is meant by the word intrastate supply and what is meant by the word interstate supply. So here, based on that, initially with respect to levy and collection, I think in your material the chapter name will be, it will start with section 9 here with respect to CGST and section 5 with respect to IGST. And in that 9.1 deals with normal levy, 9.2 deals with petroleum products, 9.3 and 9.4 deals with RCM, and 9.5 deals with ECO. 9.5 deals with ECO. Okay, ma. So, if at all it is the intrastate supply, already you know that CGST plus SGST or UTGST will be levied. If at all it is the interstate supply, IGST will be levied. And what is the maximum rate of CGST that will be levied, ma? 20%. And what is the maximum rate of IGST that will be levied, ma'am? 40%. So these are the basic things one need to know with respect to levy and collection. Now you need to study these key terms in GST, ma'am. But I have done one thing. In this PDF, even though those things will not be discussed in marathon, but in order to understand the marathon session, say, because with respect to RCM, one need to know who is the supplier and who is the recipient. Na? Then only you are able to understand the concept of this RCM. Even though for the time restrictions, we are unable to say those things, but you can study on your own and easy to understand these things. That's why I use the word key terms in this particular chapter. Supplier definition I just gave there. Recipient definition also I just given there. And what is meant by the word RCM I just given there. And who is taxable person I have given there. Even though I am unable to discuss them due to the time constraint, but definitely you can study on your own and understood those concepts. So I have given those things also. See example, supplier. Who is supplier? Supplying the goods includes agents. I'm telling you the overview. Supplier means the person who is supplying the goods or service and includes agents. Agents means the agents who issues invoice in their own name. The agents who issues invoice in their own name are treated as suppliers. Recipient. Who is called as recipient, ma'am? Who is called as recipient? When there is a need to pay any consideration. When there is a liability to pay that consideration, who is paying that consideration? The person who is paying that consideration is the recipient. But sometimes you are not required to pay when there is no consideration involved. If there is no consideration involved with respect to goods whom they are delivered and with respect to services whom actually they are rendered, that person will be the recipient. And agents means here buying agents. Supplier, selling agent will be covered there and buying agent can be covered under RCM. Okay. Next point is, sir, what is meant by the word RCM here? What is meant by the word RCM? Shifts the tax payment liability from the supplier to the recipient. Recipient is responsible for compliance and tax deposit under RCM. Under FCM, who will pay the GST to the government? Supplier. Under RCM, who will pay that? Recipient. That means the compliance requirement, that is to take the registration, payment of tax, filing of returns. All these are the responsibilities of the supplier under FCM. Now these points will shift to RCM. Now this point will shift to RCM. Okay, ma. Next point is, who is the taxable person? The person who is liable to be registered either under section 22 or under section 24, those people are treated as taxable person. What does 22 deals with? 24 deals with compulsory registration. 22 deals with when your turnover exceeds the specified limits of 10 lakhs, 20 lakhs or 40 lakhs, then you are required to take the registration depending upon the state. And 24 deals with compulsory registration irrespective of your turnover limits. So the people who are required to take the registration either as per 22 or as per 24, that person is a taxable person. That person is a taxable person. Okay, now we are going to enter into our RCM concept now. That is, we're talking about 9.3 first. Under 9.3, even though so many other points are there, I'm only focusing on examination important areas being a marathon session. So with respect to this one, okay. So regarding this one, so the first sector I am going to discuss under RCM will be transport and motor vehicle sector. With respect to GTA services, when it is taxable under RCM, anybody remembers? With respect to GTA, you are having two options. With respect to GTA, you're having two options. One is you can follow FCM at the rate of 12% with ITC. And what is the another option for you? RCM at the rate of 5% without ITC. With respect to GTA, you're having two options. One, you can follow either FCM or you can follow RCM. If we want to follow FCM, what is the rate of tax mark? 12% and with ITC. RCM 5% without ITC. With respect to GTA, another point is also there. So regarding this particular GTA, if at all that person is a registered person, GTA to registered person is only taxable. But if at all GTA is providing services to unregistered person, then we need to check whether they are specified persons or not. Specified persons, then only it is taxable under RCM, not, then it will be exempted. So with respect to GTA to registered person also, in one case actually it is exempted. Anybody remembers when it is exempted? Registration taken only for TDS purpose. Registration taken only for TDS purpose. That means as per section 51, you are required to take deduct the TDS as per 15(2) TCS. In those cases, what is the position? You are required to take compulsory registration as per 24. For that sake, you have taken the registration. Now I am coming to this particular point. In total GTA, you are having two options. FCM 12% with ITC, RCM 5% without ITC. Now GTA will provide the services to two categories of people. One to the registered person, second to the unregistered person. GTA to registered person, generally it is taxable. Unless they are TDS deductors or TCS collectors, it is exempted. And whereas GTA to unregistered person, specified recipients only it is taxable, others it is exempted. Who are those specified recipients, ma'am? Factory, society, cooperative society, body corporate, partnership firm, CTP, like that those specified people are there now. These specified people, even though unregistered persons, they are required to take the compulsory registration as per 24 and it is taxable under either FCM or RCM. Okay, but if at all they are not specified persons like individuals, HUF, any person who has taken for personal use, then definitely it will be exempted. This is with respect to GTA in relation with exemptions, the topic. Second one is, what is the second point that is there, ma? Renting of motor vehicle for passenger transport. What is this renting of motor vehicle for passenger transport? Here also two options are there. You can follow either FCM or RCM. The rate of tax remains the same. FCM 12% with ITC and RCM 5% without ITC. But who can be the supplier? Anybody remembers? With respect to renting of passenger vehicle, who can be the supplier? Supplier to recipient, na? Okay. Okay, supplier to recipient. Then what is the position, ma? Supplier to, who can be the supplier? Any person other than body corporate. Other than body corporate. Recipient must be a body corporate or a registered person. When this RCM is applicable, supplier must be any person other than body corporate and recipient must be a body corporate. Then definitely the concept of RCM can be applied. In rest of the cases, what will be applied, ma? FCM will be applied. So with respect, and another point I just forgot to write here is author to the publisher. Author to the publisher also are having two options. You can follow either FCM or RCM. Okay, ma. But in order to follow the FCM, 4 conditions are required to be satisfied. Anybody remembers what are those 4 conditions, ma? Author must be a registered person. He must give intimation to the commissioner, and once this particular option is selected, within a period of 1 year, you shall not withdraw that. And on the invoice also, it must be specified that you are paying the GST under FCM. If all these 4 conditions are satisfied, FCM will be applicable. Any one of these conditions are not satisfied, then RCM will be applicable and publisher is liable to pay the GST. Okay, ma. Next one. These are the 3 important points where FCM and RCM both are applicable. From now onwards, the points we will see is only RCM is there. Only one option, either FCM or RCM. That means. So the next service is here, legal sector. Who are the suppliers? Individual advocates, senior advocates, or law firms. And who is the recipient? Business entity. Then only RCM is applicable. But we can link this with exemptions also. Anybody remembers? Business entity. And we can modify it further in link with exemptions chapter. We need to check whether it is registered person or unregistered person. Registered person taxable under RCM, unregistered person exempted. So legal services by the advocates to the business entity, we need to check whether it is a registered one or an unregistered one. If at all it is a registered one, it is taxable under RCM. If at all it is an unregistered one, it will be exempted. In link with exemptions, I am telling you. Okay, next one. Arbitral tribunal services to business entity. Here also the point remains the same. Business entity is a registered person, taxable under RCM. Unregistered person, it will be exempted. Okay, ma'am. This is the third one we need to remember. So what is the next service, ma'am? Insurance and banking related. So with respect to insurance agent to insurance company, recovery agent to insurance agent to insurance company, recovery agent to bank, financial institutions and NBFCs. In these cases, RCM is applicable. Who is liable to pay the GST, ma? Recipient is liable to pay the GST. That means bank and insurance companies are liable to pay the GST. And another 2 points also covered under banking services, under various banking related services. That important is business facilitator to the bank or agent to the business correspondent. These 2 are also covered under RCM. And recipient is liable to pay the GST. Business facilitator to the bank, agent to the business correspondent. Those 2 services are also covered under RCM. Bank and business correspondent is liable to pay the GST. But I can tell you another point here in link with exemptions. When it is taxable, when it is exempted? Urban areas, rural areas. Urban areas taxable under RCM, rural areas it will be exempted. Business facilitator to bank or agent to business correspondent, it is covered under RCM. Urban area it is taxable under RCM, rural area it is exempted. Okay, ma. Next one. Government related. So services by government, local authority to business entities. And another one is renting of immovable property by government. Here with respect to this point, what we can say, ma? Other than renting of immovable property, what are the other services that can be provided? Apart from renting of immovable property by the government, what are the other services that can be provided? Apart from postal. Hoardings comes under immovable property. Apart from liquor license, mining license, firecracker license, 2G spectrum license, something, 4G, 5G license, these things will come under the services by government to business entity. In those cases, definitely it is covered under RCM. Those cases it is covered under RCM. And why here 2 points are there, ma? renting of immovable property by the government. If the recipient is a registered person, then only RCM is applicable. But whereas here, if the recipient is a business entity, then actually it is covered there. Here, any supplier, government, service, any other service, recipient, business entity, then RCM. Whereas service, renting of immovable property, supplier, government, recipient, registered person, then it is taxable under RCM. I will show you the slide in relation to that in exemptions chapter. Okay. A link with this one, later on. Next one is construction services. I think you remember, no? Transfer of development rights. You know what is meant by development rights, ma? Landowner will be there. He will give his land to the builder for development. After construction of the building, ratio will be there. Based on the ratio, they will divide the flats. Those things. What the landowner will do? He will transfer his development rights to the promoter. Promoter means builder. Promoter means builders. So definitely those people who are required to pay the GST there, ma'am, under RCM, promoter is liable to pay the GST. And long-term lease means more than or equal to 30 years. Any long-term lease is given to any promoters, then also it is covered under RCM. The promoters are liable to pay the GST. In the same way, sponsorship services. Supplier can be any person. Recipient is body corporate or partnership firm. Then also it is covered under RCM. And director to the company is also covered under RCM. But keep it in mind, in the personal capacity, anything done by the director, it is covered under FCM. In the capacity of director, what he will do, it is only covered under RCM. Whatever the things he will do in his personal capacity, it is covered under FCM. Let's say director has given his flat on rent to the company. Then definitely, in both cases, it is taxable. But director has done in the director capacity in his individual capacity. Individual personal capacity. In that case, it is covered under FCM or RCM? FCM. Whatever the things he will do in the director's capacity, those things are only covered under RCM. If the director is doing anything in his personal capacity, it is taxable under RCM. Personal capacity, FCM. Personal capacity, FCM. Director capacity, RCM. That is the point. There ends the important points with respect to RCM. I'm covered almost 70% of the topics there. Those are most important ones. And another one I just forgot to tell you. Supplier is any person. Recipient is a registered person. And the service is renting of residential house. Then also it is exempted. Supplier any person, recipient is registered person, the service is renting of residential house for residential purpose. Renting of residential house for residential purpose, it will be covered under RCM. And the recipient is liable to pay the GST. I told you the example of Infosys in the classroom. No. Infosys has taken a building on a rent to give it as a rent-free accommodation to its employees. Here, supplier any person, recipient Infosys, which is a registered person, and residential building was taken for residential purpose. Therefore, it is covered under RCM, and Infosys is liable to pay the GST. This is 9.4 concept you need to remember. Okay, ma'am. This is 9.4. What is 9.4 deals with, ma, here? With respect to 9.4, what is the position, ma? What is this 9.4 here? What is the point I wrote? Effective GST rate for new projects by the promoter. Anybody remembers what are the output tax rates under 9.4? We divided the point into three types. Affordable houses, 1% without ITC. Non-affordable houses, 5% without ITC, and commercial apartments where commercial area is less than or equal to 15% of the total space, then also what is the rate that is applicable, ma? 5% without ITC. These are the output tax rates what we have discussed, ma. One is what is the point? Affordable houses, 1% without ITC. Second one, what is the second one, ma? Non-affordable houses, 5% without ITC. Apartments, where the commercial area is less than or equal to 15% of the total space. In that case, what will be applicable, ma? 5% without ITC. Okay, what is meant by affordable house? Anybody remembers? In metros, I think 60 square meters, and non-metros 90 square meters, plus value cap is less than or equal to 45 or something, 40 lakhs I think. It was less than that. It was there in the notes, you can check it. Then definitely what it will be called as, ma? Affordable house. Affordable house, 1% without ITC. Non-affordable house, 5% without ITC. Whereas with respect to commercial apartments, where the commercial area is less than or equal to 15% of the total space, in these cases 5% without ITC. And next one. Sir, what are the input rates that are applicable to them, sir? What are the input rates that are applicable under 9.4? Anybody remembers? With respect to cement, 100% must be purchased from registered person. Any purchases from unregistered person, then RCM will be applicable at the rate of 28%. Cement must be purchased 100% from registered person. Any purchases from unregistered person, RCM at the rate of 28 is applicable, and the builder or the construction contractor who is the recipient is required to pay the GST. In the same way, with respect to capital goods also, 100% must be purchased from registered person. Any purchases from unregistered person, then RCM is applicable at the rate of applicable rates. That means with respect to each plant and machinery, separate rate will be there, na? Based on that particular rate, it will be applicable. So capital goods must also be 100% purchased from registered person. Any purchases from unregistered person, RCM is applicable at the rate of their individual rates. Apart from cement and capital goods, any other inputs, then 80% must be purchased from registered person. Any shortfall, 80% must be purchased from registered person. Any shortfall, then on that RCM is applicable at the rate of 18%. For example, you purchased only 60% from registered person. In the remaining inputs, what is the shortfall? 80 minus 60, 20. So on the 20% of the purchases, you need to pay the GST under RCM at the rate of 18%. This is 9.4. Okay, ma. Now the next point is 9.5. So what does 9.5 deals with, ma? ECO. So who is ECO? Is the aggregator. Is neither the supplier nor the recipient, but brings both supplier and recipient onto a common platform, either by using mobile application or website. That particular person is known as ECO. Example, take the example of Amazon. Is neither the seller nor the buyer, but brings both supplier and recipient onto a common platform by using mobile application or website. That particular person is known as ECO. Okay. And sir, in every case ECO is liable, sir. ECO is responsible for GST on specific services like passenger transportation, hotel accommodation, housekeeping services, and restaurant services. Okay. So what are they? The point will be in this case, the point will be with respect to 9 subsection 5, ECO. Here, who are the ECOs? Anybody remembers? 4 types of ECOs are covered under this 9.5. What is the first one? Directly housekeeping. Okay. First respect, the first point is transportation of passenger like Ola, Uber, like that. Here the point is divided into two ways. One is omnibus and second one is others. Omnibus means minibus, tempo travelers will be there. Na? In case of omnibus, we need to check who is the supplier. If the supplier is a company and others. If the supplier is a company, company will pay the GST under FCM. If at all it is others, then ECO will pay the GST. With respect to other, always ECO is liable to pay the GST. This is a point you need to remember, ma. With respect to transportation of passengers, we need to check who is the supplier, whether it is, which is a vehicle. If at all it is omnibus, others means normal bus, car, bike, rapido, everything will be covered there. If at all it is omnibus, if the supplier is a company, supplier company will pay the GST under FCM. Others, that means other is running the omnibus, ECO. Other than omnibus, in rest of the cases, it is immaterial who is the supplier. Always who is liable to pay the GST, ma? ECO is liable to pay the GST. That is the first point. And what is the second point, ma? Anybody remembers what is the second one? This is the first point. So with respect to second one is here, what is that? Hotel accommodation plus housekeeping services. Hotel accommodation plus housekeeping services. Hotel accommodation means example, Make My Trip, Trivago, those are also there, na? So those are actually hotel accommodation, ma. And with respect to housekeeping, urban companies example. In these two cases, we need to check if the supplier is a registered person, supplier is a unregistered person. Supplier is a registered person, supplier will pay the GST. Supplier is an unregistered person, ECO will pay the GST. Hotel accommodation and housekeeping, we need to check whether the supplier is registered or unregistered. If the supplier is registered, supplier will pay the GST. Supplier is unregistered, ECO will pay the GST. Okay, this is the second one. And now what is the third one, ma? Anybody remembers? What is the third one? Sorry, 2 and 3. 2 and 3 are already covered there. And what is the third one? Restaurant. With respect to restaurant, that is food aggregators, ma, like Zomato or Swiggy. With respect to them, we will again divide the point into two types, whether it is restaurant or a hotel. If at all it is a restaurant, always ECO will pay the GST. What is the difference between restaurant and hotel, ma? Only food facility is there, it is called as restaurant. Food plus accommodation, both are there, it comes under hotel. If at all it is a restaurant, always ECO like Zomato or Swiggy is liable to pay the GST. If at all it is a hotel, we need to check room rent. Room rent is less than or equal to 7,500 per day, or room rent is more than 7,500. Less than or equal to 7,500, ECO will pay the GST. More than 7,500, supplier hotel will pay the GST. This is the point, ma. With respect to restaurant, always ECO is liable to pay the GST. With respect to hotel, we need to check this room rent, ma. Less than or equal to 7,500 per day, ECO is liable. More than that, hotel will pay the GST. This is 9.5. Okay, ma, can I proceed to the next one? And what is the last point here? Yes. Liability to determine is based on ECO's presence in India. That means if ECO, physical presence is there in India, if ECO, physical presence is there in India, in that case, physical presence is there in India, ECO will pay the GST. ECO, no physical presence, then authorized representative will pay the GST. no physical presence nor no authorized representative must appoint any person to pay the GST. This is the point, ma. ECO physical presence means, take the example of Ola. I think it is an Indian company, na? Its physical presence is there in India, na? Then that company, that register office will pay the GST. Take the example of Uber. I think its certificate of incorporation may not be there in India. And take the example of any other like foreign ECOs will be there, na? Definitely in those cases, no physical presence. Then there must be an authorized representative. Na? That authorized representative will pay the GST. Neither the physical presence nor the authorized representative then must appoint any person to pay the GST. Otherwise, we cannot continue the business. This is 9.5. Okay, ma? And these are the types of supplies. Already you know, supplies can be divided into 3 points here. Taxable supply. What is meant by the word taxable supply? Which are subject to GST, and this is important one. This includes zero rated supplies also. In ITC chapter, these 3 words will play a key role, ma. So what is meant by this zero rated supplies? No. Zero rated supplies means exports and deemed exports. Exports and deemed exports will be called as zero rated supplies. Because nil rated supply is different, zero rated supply is different. Nil rated supplies means taxable at the rate of 0%, no ITC is allowed on them. Zero rated supplies are deemed to be taxable at 0%. That is a speciality. Zero rated supplies are deemed to be taxable at 0%. It will cover only 2 points. One is export, second one is deemed exports. On them definitely we can claim the ITC. And next one is non-taxable supply. What is meant by the word non-taxable supply? No levy will be there. What is no levy will be there means alcohol, petroleum products. Those are the examples for non-taxable supplies. And it includes nil-rated supply. What is meant by the word nil-rated? Just now I told you. The tax rate that is specified in the Act itself is 0. It is nil-rated supply. What is meant by exempted supply? Levy at a specified rate, but no collection will be there. What is meant by nil-rated supply? Nil-rated supply means the tax rate that is specified in the Act itself is 0. It is nil-rated supply. What is meant by exempted supply? Levy at a specified rate, but no collection will be there. But anyway, this exempted supply includes all the 3. And exempted supply means 100% exempted supply, 100% exempted supplies plus non-taxable supplies plus what is the third one, ma? Nil-rated supply. All the 3 are treated as exempted supplies only. On the exempted supplies, we cannot claim the ITC, and in rest of the cases, we can claim the ITC. This is section 9 relevant topic, ma. Now we are going to enter into composition scheme. Okay, ma. So the next topic we need to see is, ma. Where it is? This is next topic we need to see here, that is composition levy under GST, that is section 10. In this, what is the first point we need to see, ma? Applicability and turnover limits with respect to composition scheme is the thing what we are seeing now. So with respect to this one, so goods and restaurant services, ma. With respect to goods and restaurant services, what is the section number that is applicable to that? 10.1 and 10.2. And it is called as normal composition scheme. This normal composition scheme under section 10.1 and 10.2 is applicable, is in fact is designed for supplier of the goods only. The one and only service that was eligible for 10.1 is restaurant service. This 10.1 and 10.2 are designed for supplier of the goods only. It is not designed for supplier of service. The one and only service that was eligible for this normal composition scheme is restaurant service. So what is the eligibility criteria for this? Aggregate turnover limit of 1.5 crore in the preceding financial year in most of the states. Special category states except Himachal Pradesh, Assam, Jammu and Kashmir have the limit of 75. Others will have the limit of 1.5 crore. That means 8 special category states will be there, Nama, Northeast states. So with respect to them, what is the registration limit? In the preceding financial year, if your turnover is less than or equal to 1.5 crore or 75 lakhs in the preceding financial year, then in the current year, you are eligible for composition scheme. In the preceding financial year, your turnover is either less than or equal to 1.5 crore or 75 lakhs. In those cases, what will be applicable, ma? This composition scheme, you will become eligible. That is the point. Second point. Sir, what about the services, sir? Is there any scheme that is exclusively designed for services? Yes. For other services, that means other than goods and restaurant service, other services, there is another scheme for that. What is that another scheme? 10.2a. What it will be called as? CRS, concessional rate scheme. What it will be called as, ma? CRS, concessional rate scheme. And what is the eligibility criteria for this concessional rate scheme? 50 lakhs in the preceding financial year. Aggregate turnover limit of 50 lakhs in the preceding financial year. Then in the current year, you are eligible for 10.2a. Sir, is this any special categories also there here? No, it is applicable to all the states. Whether it is special category state or normal state, what is the limit, ma? 50 lakhs. So 10.1 and 10.2 are applicable for goods and restaurant services. Whereas with respect to other services, 10.2a, concessional rate scheme was there. And what is the eligibility criteria, ma? 50 lakhs in the preceding financial year, and it is applicable to all the states. Sir, just now you said that 1.5 crore, 75 lakhs or 50 lakhs, na sir. How to decide that? How to compute that aggregate turnover? That is the next point, ma. Sir, state-wise turnover will be considered or country-wise turnover is needed to be calculated? Country-wide for the same PAN. It is considered on all India basis for the persons with the same PAN. It is considered for all India basis for the persons with the same PAN number. And what is the formula that? It includes taxable supplies, exempted supplies, interstate supplies and exports, excludes inward supplies under RCM charge, GST and interest on loans, deposits and advances. Now what is the formula for that, ma? Taxable supplies plus exempted supplies plus exports plus deemed supplies minus GST minus RCM purchases minus exempted interest. What is the amount we will get? It is known as aggregate turnover. Taxable supplies plus exempted supplies plus exports plus deemed supplies minus GST minus RCM purchases minus exempted interest. It is called as aggregate turnover. Based on this formula, we need to compute that 1.5 crore, 75 lakhs or 50 lakhs. That is the point. Next point. What is the next point, ma? Eligibility criteria. What is the eligibility criteria or conditions? What are the conditions you are required to satisfy in order to be eligible to continue in this composition scheme is next point we will see, ma. Okay, the point in this case will be, already we know turnover limits. Turnover limits already I discussed in the previous points. Must not exceed specified turnover limits for respective categories. Limits vary based on the nature of business, whether it is a good or a service, and depending upon state location, it will change. Okay, ma. In the current year, turnover limits means in the current year, up to which extent these composition rates are applicable? I think I did not write. Yes, this is a point. Yes. So in the current year, up to which turnover these rates are applicable, ma? Are you able to recollect those ones? So if at all you are eligible, say previous year is there, current year is there. Eligibility is less than or equal to 1.5 crore. Then in the current year also, up to 1.5 crore, composition rates are applicable. After 1.5 crore, normal rates are applicable. If your eligibility criteria in the previous year is 75 lakhs, then in the current year, up to 75 lakhs, composition rates are applicable. After 75 lakhs, normal rates will be applicable. If your eligibility criteria is 50 lakhs, then in the current year, up to 50 lakhs, composition rates are applicable. And after 50 lakhs, normal rates will be applicable. Normal rates will be applicable. That is the point you need to remember. Okay, ma? So that is what this point is saying. Based on the state turnover limits in the current year, what is the eligibility criteria that was there? Up to that extent only in the current year, composition rates are applicable. In excess of that, normal rates will be applicable. Okay. Sir, nature of business oriented restrictions or conditions are there? Yes. Based on nature of business, what is the position, ma? Who are the not eligible persons? See, not eligible for the manufacturers. Not eligible for the manufacture of ice cream, pan masala, tobacco, aerated water, building bricks, fly ash bricks, roofing tiles, fossil mills bricks. All these people are not eligible for this composition scheme. Who are the manufacturers that are not eligible, ma'am? Ice cream, pan masala, tobacco, fly ash bricks, building bricks, roofing tiles. All these are not eligible for this composition scheme. But keep it in mind, manufacturers are not eligible. No restriction on trader of the goods. So manufacturers are not eligible. Manufacturers are not eligible. Traders of all the goods are eligible, including the notified goods. That is the point I wrote there. No restriction on trader of the goods. It includes notified goods also. Okay. Next one. Sir, supply based restrictions, are there any on the composition dealer? Any supply based restrictions can be there? Yes, cannot engage in interstate outward supplies. This composition dealer cannot engage in any interstate supplies. Keep it in mind, interstate sales are not allowed, interstate purchases are allowed. Interstate outward supplies, sales are not allowed, but purchases are allowed. Interstate sales not allowed, interstate purchases allowed. That is the one restriction. Second one, he should no supply of non-taxable goods, that is example petroleum products and alcohol. That means if at all you are making any non-taxable supplies, you are not eligible for this composition scheme. Why, sir? There is a slogan I told you in relation to composition scheme. Go for all or go for none. That means if at all you are having two place of businesses, unit 1 and second one is unit 2. Unit 1 is making a taxable supply. Unit 2 is making a non-taxable supply. Unit 1 is making a taxable supply. Unit 2 is making a non-taxable supply. What is the slogan for composition scheme? If you want to go for composition scheme, go for all or go for none. Based on that, if you want to take the composition scheme, you need to take it for 2 units or for these 2 units you should go to normal scheme. But the problem is here, one of the unit when making a non-taxable supply, automatically these 2 units will become ineligible for composition scheme. Ineligible for composition scheme. That means even though this unit is making a taxable supply, but still it will also be not eligible for composition. Why ma? Because one unit is making the non-taxable supply, even though another unit is making the taxable supply, will become ineligible for composition scheme. That is the point, ma. Okay, got the point? This is the point I wrote there. Next. What is the next point, ma'am? E-commerce transaction restrictions. This is an amendment. I think one amendment is there in this, and if at all composition scheme is asked, they will test this particular point. I think so. With respect to e-commerce, in olden days, the point is you cannot make supplies through ECO, whether it may be good or a service. Now the word is good is removed. This restriction is now applicable to service only. That means you cannot make any supply of services through ECO. We are talking about 10.1 as well as 10.2a also, na? Because talking about composition scheme as a mixed. That's why I told you the difference in the first point itself, first page. Okay. So in this case, in olden days, any person who is supplying the goods or service through ECO is ineligible for composition scheme. Now the word goods is removed. That means, what is the position? Any person who is supplying the services through ECO, he is not eligible. Any person who is supplying the services through ECO, he is not eligible. Okay. In that case, what is the position mark? Cannot supply through ECO. Applies to services. And next one is, this point is applicable only for 10.1 and 10.2. That is the first point. This point. Sir, you said that 10.1 and 10.2, normal composition scheme is designed for the supplier of the goods only. Na? Is it possible that along with the supply of the goods, that person can make any services also? Along with the supply of the goods, in case of 10.1 and 10.2, is it possible to make any supply of service also? Answer is yes, up to a specified limit. What is that specified limit? For goods or restaurant category, service supply limited to 10% of the turnover or 5 lakhs, whichever is higher. In the preceding financial year turnover 10% or 5 lakhs, whichever is higher. That is the point you need to remember. Okay, ma'am. Up to that extent, along with the supply of the goods, supply of service can also be made in case of 10.1 and 10.2. And already I told you, while computing those 10% limit, specified limit, exempted interest will be excluded. Not only in the case of aggregate turnover, while computing the service limit also, exempted interest will not be considered for the 10% or 5 lakhs, whichever is higher limit base. That is the point. This is turnover limits. Next point is procedural aspects. We just entered into procedure for opting and withdrawal of this composition scheme. If at all it is a new registration, then there is no need for any separate application. What is the form number for registration? REC01. In REC01 part B, if at all it was intimated, then that is sufficient. To attract the, sufficient for this composition scheme selection. From which date this composition scheme will be effective then? From the date of registration. When the date RC was granted to you, from that particular date itself, composition scheme will be applicable to you. Sir, if at all is a existing registered person, then is there any prescribed application is there? Yes. What is the form number? CMP02. When he need to give that? Before the start of financial year. That means, what is the position, ma? If you want to go for composition scheme in the financial year 24-25, In that case, what is the thing you need to do? You must file the CMP02 on or before 31/3/2024. Then you can go for this composition scheme in the financial year 24-25. From which date now this composition scheme will be valid, ma? From the beginning of the financial year. When you opted for composition scheme, IDC must be reversed on the closing stock, na? In order to make it happen, you must submit a statement within 60 days along with your closing stock details for IDC reversal. Sir, is it possible to withdraw from this composition scheme voluntarily? Yes. First point is mandatory withdrawal if the conditions not met. Like if at all, another point I just forgot to tell you, CTP or NRTP is not eligible. And in the same way, what is another thing that is there, ma'am? Like what we can say, you should not make any interstate outward supplies. Like that few conditions are there, na? Those conditions are not satisfied or their turnover limit exceeded, that 1.5 crore, 75 lakhs or 50 lakhs. In those cases, what is the position, ma? Definitely you need to exit from composition scheme. That is mandatory withdrawal. Second one is voluntary withdrawal option. That means you don't like the scheme. You want to quit. Is it possible? Yes, definitely it is possible. But 7 days before that withdrawal, you file the intimation or application for withdrawal. And once you exited from this composition scheme, ITC will be given to you, na? Because previously you are there in composition scheme. Now you exited from composition scheme and comes to this normal scheme. Therefore, in order to get the ITC, that stock details must be submitted to the department within 30 days. And last but not the least in this composition scheme is compliance requirement. So with respect to this compliance requirement, first one is billing and disclosure. With respect to this billing and disclosure, if at all you are a normal scheme person, then what you will issue? Tax invoice. If at all you are a composition dealer, what is the document you need to issue? Bill of supply. That bill of supply must have these wordings. I am a composition taxpayer, not eligible to collect the tax on the bills. And not only on the bill of supply, at his place of business also, he must display the words that he is a composition taxable person. That is the point. And another one is input tax credit. Cannot claim ITC. That means a composition dealer, whatever the purchases he will make on that, he cannot claim the ITC. He cannot claim the ITC. And not allowed to collect tax from the suppliers. What are the tax rates, ma? I just wrote here. What are the tax rates under composition? So these are the tax rates. See, these tax rates under composition scheme is for goods manufacturers, 0.5% CGST and 0.5% SGST. It will be 1% on the aggregate turnover. For traders, 0.5% CGST and 0.5% SGST will be on taxable supplies only. Here, the 1% will be based on taxable turnover. For restaurants, 2.5 plus 2.5, 5% on the aggregate turnover. Other services means 10 to A, 3% CGST and 3% SGST. It will be 6% on aggregate turnover. Here, the only thing is you need to keep focus on the word trader. Trader is required to pay that 1% on taxable turnover. In rest of the cases, you are required to pay those tax rates on aggregate turnover. Okay, ma. Manufacturer will pay 1% on aggregate turnover. Restaurant will pay that 5% on aggregate turnover. 10 to A services also will pay that 6% on aggregate turnover. But whereas with respect to traders, that 1% is needed to be paid on taxable turnover. These are the rates, ma'am. Okay. Now come to this point. This 1%, 5%, 6% must be paid by the composition dealer out of his own pocket. He is not allowed to collect the tax from the customer. And whatever that 1%, 5%, 6% tax liability is there, it must be paid in cash. It must be paid in cash. That is a point you need to remember. Okay, ma'am. The next one is penalties for non-compliance, ma'am. Okay. So the next point will be in this case, penalty and non-compliance. With respect to irregular availment leads to penalties and tax liability under 73 and 74. That means you are not eligible for composition scheme. Say you are a CTP or a NRTP, but still you claimed the benefit of composition scheme. If the department knows about that particular thing, then what is the thing we can do? The department will do? It will issue the show cause notice and ask for you the proper explanation. If the explanation is not satisfactory, then the differential tax is needed to be paid along with interest and penalty. Fine. This is a point already I told you. All businesses under the same plan must opt for this composition scheme. That means if you want to go for composition scheme, go for all or go for none. There ends this levy and collection chapter. So exemptions here can be divided into two types. One is absolute exemption. Second one is conditional exemption. What is meant by this absolute exemption, ma? It will be granted for the whole or part of the tax. The registered person must not collect the tax beyond the effective rate. That means absolute exemption means technically it is without any conditions. What is meant by absolute exemption? Generally, it will happen without any conditions. Then it is called as absolute exemption. It can be granted either to the whole of the tax, that means 100% exempted. Part of the tax means partial exemption. That means the absolute exemption can be either 100% exempted one or a partially exempted one. But once this absolute exemption was given, then registered person must not collect the tax beyond the effective rate, means it should not be collected. Say for example, the original tax rate is 18%. But it is a partial exemption, only 10% was needed to be collected. If at all it was absolute exemption, in that case, what is the maximum amount? What is the amount that the supplier can collect from the recipient? 10% only. What is the effective rate? 10%. We can collect only 10%. Remaining 18%, we shall not. So remaining 8%, we shall not collect that. Okay. Second one is conditional exemption. This exemption is optional for the registered person. The person may choose to avail or not to avail the exemption. That is the difference. Absolute exemption means everybody should follow that. Just like I think in your income tax depreciation is mandatory. Just like that, if at all it is absolute exemption, there is no choice for you. You should not collect the tax which is beyond the effective rate. But what is meant by conditional exemption? It is optional. If you want to take the exemption or to follow the normal scheme, it depends upon the intention of the registered person. The person may choose to avail or not to avail the exemption. This is the difference between absolute and conditional exemption. And second one is, sir, sometimes for the exemption notifications, clarifications will be issued. Clarifications will be issued. So what is the clarification purpose? What is the purpose of clarification? Sometimes clarification will be issued with respect to exemption. The purpose of clarification will be, it clarifies the scope or applicability of any exemption notification or order. That means once exemption notification was issued, sometimes there can be ambiguity, confusion. In order to avoid that particular confusion, these clarifications will be issued. Sir, what is the time period to issue this clarification? Within 1 year. What is the clarification time period? Within 1 year from the issue of such notification. Sir, from which date this particular clarification will be valid? Effective from the date of issue of notification or the date when it was inserted, whichever is latter date. That means the date of issue of original exemption notification or the date of issue of such clarification, whichever is latter date. Simply it can be affected prospectively only. It can be affected prospectively. It cannot be affected retrospectively. Generally, in CA final level, there is no need to discuss these things. But in CMA level, sometimes the paper is unpredictable. They are asking theory. In those cases, they will ask you, please write about different types of exemptions and clarifications. They may issue like so. In order to answer those questions, I just made the chart on that. Please explain the concept of tax exemptions and clarifications. They may ask for some 7 marks or 4 marks. So because CMA finally is somewhat a little bit unpredictable, that means they are not asking tough questions. They are asking the questions which are less important for the CMA final standard. Sometimes they may ask even features of indirect taxes also. We can't say these are unimportant. Sometimes they may surprise you, not with difficult questions. With less asked questions, they are going to ask. Okay. So in exemptions, it is a lengthy chapter, but whereas they're asking repetitively from few exemptions only. That's why I just restricted to those important exemptions only here in this marathon. So in that, the important one is charitable activity. The first important one is charitable activity. So who will do this charitable activities, ma? Entities registered under Income Tax Act, 12AB, something AA like that or there now, those entities. So with respect to the charitable activities, if the supplier, who is the supplier, is the entity that is registered under 12AA or 12AB, simply charitable trust. And what is the service? Charitable activity. Who is the recipient? Any person. It is exempt. The question arises in the student's mind is, sir, what is meant by charitable activity then? I think I just wrote here. Just wait. Okay, fine, no issue. Regarding this, what is meant by charitable activity? Anybody remembers as per the Act, what is meant by charitable activity? Generally, 4 types of activities are covered under this. First one is promotion of religion. Second one is promotion of yoga. Third one is promotion of spirituality. And fourth one is with respect to specified diseases, awareness, creating awareness in relation to specified diseases. Fifth one, education programs in relation with orphans or old-aged people. These are called as charitable activities. Promotion of religion. What is the example we can say? ISKCON Temple. ISKCON Temple is the promotion of religion. If at all it is doing any charitable activity with respect to promotion of religion, it is exempted. Yoga, Baba Ramdev. And spirituality, Isha Foundation, Jagi Vasudev. Isha Foundation is there now. That one. Sadhguru Jagi Vasudev, something, his name. That one. And awareness of specified diseases like HIV or some other specified diseases, creating awareness regarding them. And education programs with respect to orphans, school children, etc., and old age people who are aged more than 60 years. These 5 are notified as charitable activities as per our GST. Any of these services are provided, the recipient can be any person, it will be exempted. This is the first exemption with respect to charitable activities. Second one, sports coaching. This is the important one. Generally, this point can be twisted in the exam. Who is the supplier? Charitable trust. And what is the service? Coaching in sports. Coaching in sports. And who is the recipient? Any person. It is exempt. But in the exam, they will ask like that. Mr. Raj has provided sports coaching in relation to some XYZ. In this case, is it exempted or taxable? Taxable. Only by the trust sports coaching was given, it is exempted. Any individual who is providing the sports coaching, it will be taxable. Any individual who is providing the sports training or coaching, it is taxable. Only the charitable trust that is providing sports training or coaching, it is exempted. Next one, old age homes. Here the supplier is charitable trust, the service is old age home, and the recipient is aged 60 years or more. That is more than or equal to 60 years. And when it is exempted, if the consideration is up to 25,000 rupees per month per member, it will be exempted. 25,000 rupees per month per member, it will be exempted. Okay. Who is the supplier? Charitable trust. What is the service? Old age home. Who is the recipient? Aged more than or equal to 60 years. What is the consideration? If less than or equal to 25,000, it will be exempted. What is the next one? Rehabilitation means psychiatric problems will be there. Na? Then you will go to psychiatrist. Na? Those persons, those professionals, suppliers. Recipient, rehabilitation services. Recipient can be any person. Technically, it is a healthcare service. It will comes under counseling. So that's why definitely it will be exempted. Even it is provided by the charitable trust. Next one is renting of religious premises. Who is the supplier? Charitable trust or religious trust. What is the service? Renting of religious place. Which are exempted? If the recipient who is receiving rooms and halls are taxable. When they are taxable, anybody remembers? With respect to rooms, rent is less than 1,000 rupees per day. With respect to community halls or Kalyana Mandabs, less than 10,000 rupees per day. With respect to shops, less than 10,000 rupees per month, it is exempted. When it is taxable, that means when it will be taxable, ma? If the room rent is more than or equal to 1,000 rupees per day, if the hall rent is more than or equal to 10,000 rupees per day, if the shop rent is more than or equal to 10,000 per month, it is exempted. 10,000 per month, it will be exempted. Okay, ma. So sorry. This is these are taxable ones, and this is exempted one. Less than 1,000, less than 10,000 is exempt. More than or equal to 10,000 or 1,000, it will be taxable. Next one, conducting religious ceremonies. That means marriages, etc. Regarding them, conduct of religious ceremonies. Who is the supplier? Any person. What is the service? Conducting of religious ceremony. Recipient can be any person, like marriages or any receptions, whatever the religious functions that are there. So naming ceremony, whatever it is, definitely all those things will be exempted. Next one, pilgrimage services. Who is the supplier? Specified organizations, like with respect to Manas Sarovar Yatra, Uttarakhand state government will provide those services, those organizations, and Makkah Medina. Hajj committee will be there, na? Those Hajj committee services in relation to Makkah Medina, definitely it is exempt. Okay, next one. See, other than these two, one is Uttarakhand state government or Hajj committee, even any religious yatras that are provided by charitable trust also taxable. Only provided by the state government or Hajj committee, those specified organizations only exempted. Apart from those two, any other, even charitable trust or a religious trust will provide the religious yatras, definitely it will be taxable. Next one, coaching in recreational activities. What is meant by recreational activities? Painting, music, etc. Arts or culture. Even coaching is given by the individual, it is exempt. But whereas sports, only charitable trust is exempt. Rest of the cases it will be taxable. But whereas recreational activities related coaching, even supplier is providing the coaching, it will be exempted. Next one, fitness and aerobics, etc. Who is the supplier? Individual, definitely it is taxable. Any fitness, aerobics, coaching, etc. Even the supplier is individual, it will be taxable. And with respect to educational institutions, it was there in separately these two. This is the point. See, with respect to charitable activities, some other activities that are there, this chart was prepared on the based on exams, some exams related points. I just made this particular chart. Even though it is a part and parcel of so many other topics, but the major concentration in this particular chart is charitable ones. So these things are asked in the exam. I just made a chart out of those points here. Okay, based on exams, I just made this. Some adjustments will be given in the exam now. Based on that, I just created this one. With respect to charitable trust, see, I told you health related care and counseling. They used these words, health related care or counseling that is given by the charitable trust, exempted or taxable? Exempted. They will also use these words like activities focused on care, counseling, public awareness to the relating to health. Like I told you, some specified diseases, they are using these words in the exam. One trust which is established under 12A or 12AB is providing the activities which are focused on care counseling. So they will give you some amount of 10,000 or 20,000. Whether it is exempted or taxable, exempt. See this point also. Advancement of religion, spirituality or yoga. I just told you previously. So this point they are focusing in the exam. Includes fee for participation or lodging and boarding relating to these activities. What is this point here, So advancement of religion, spirituality, yoga includes the fee for the participants or lodging and boarding relating to these activities. What is this point here, Sometimes, let's say in Himalayas, actually one yoga camp was conducted. At that particular place, generally food is not available outside. Food is also needed to be provided by the charitable trust, as well as accommodation also must be provided by the charitable trust. In that case, that food and accommodation provided by those charitable trust is exempt or not is the question they are asking in the exam. What can be your answer? Why it is exempt, if at all it is exempted? Because food and accommodation is not a charitable activity, then why it was exempted? Why it was exempted? So, it is a part of composite supply. Section 8 in supply chapter. What is the principal supply here? Promotion of yoga, which is a charitable activity. What is its supporting activity? Food and accommodation. In that case, with respect to composite supply, what is the rate that is applicable? Principal supply rate. What is the principal supply here? Charitable trust, which is exempted. Therefore, food and accommodation also exempted. This point is actually asked in the exam 2 or 3 times. Next one. They are using this word also. That means a charitable trust who is providing education and skill development programs. To whom programs for orphans, mentally abused individuals, prisoners, or the persons over 65 in rural areas. All these activities are also exempt. They will use the word like this. A charitable trust which is providing education and skill development programs to the old-aged people who are more than 65 in rural areas. It will be exempt. And environmental preservation. It is also a charitable activity. What is it? Save soil, save water, like that. Those will be there now. So these activities relating to preservation of the environment, including watersheds, forest, wildlife, they are also charitable activities. They are also exempted. Now the question is here, sir, what are the taxable ones? These are the taxable activities, ma'am. These are the taxable activities. In that, what is the first one? advertisement and event admissions. Advertising on the premises or publications and admission to events against a fee are taxable. Any example for this? Advertisement on premises, donations. Charitable trust received the donation. After receiving the donation, a business name is displayed within the premises. In that case, definitely it is a supply and it is taxable. And what is this admission to event? Let's say, if you observe, Isha Foundation, Sri Jaggi Vasudev, that person on the occasion of Sivaratri, Mahasivaratri, he will conduct a very big function like event. So many celebrities also will come to that particular event. Let's take the example, you just put entry fee for that. Some 2000, for example. In that case, whatever the money they will get, they will use it for charity. That is okay. But he is raising the money by way of admission to event. It is not a charitable activity now in that case. Is it exempted or taxable then? It will be taxable. Next one. See, provision of food and accommodation. Exclusively providing the food and accommodation is taxable. Let's say, with respect to Tirumala, Sri Sailam in Andhra Pradesh, if you go for any pilgrimage, then community-wise inns will be there. In our Telugu, we'll call it as Satram. Okay. Then you can make a call to them and tell them that if at all you belongs to that particular community, then you can call them and will say, sir, we are actually 10 members who are coming to Sri Sailam or Tirumala. Sri Sailam actually I saw that. We are coming on a particular day. So please arrange the food for us. You will say and he will arrange the food for you and he will take the money from you. Only to that particular community people they will provide the summaries. That is a religious trust. That is a religious trust. Even though it is a religious trust, then what is the position, ma? What it is doing? Food and accommodation only. It is not doing any charitable activity. Therefore, it will be taxable. Sir, previously you said that it is exempted. Na? Then why are you saying that it is taxable now? Why you are saying that it is taxable? Before some 2 minutes I said that it was exempted. Na? Then why I am saying that it is taxable now? Why that case is exempted? Why this case is taxable? That is a part and parcel of charitable activity. As a part of yoga camp, it was provided. Here, it is not a charitable activity. So that's why, if at all, they are providing exclusively food and accommodation. Whatever the inns I told you, community-wise inns, they will not do any charitable activity. They simply receives the money from their community members and provide food and accommodation to them. That is the only thing. Just like a hotel. It is a religious hotel. It is a religious hotel technically. That's why it is not doing any charitable activity. Na? What is meant by charitable activity? Promotion of religion. They are not doing any promotion. They are not promoting spirituality. They are not promoting yoga. They are not providing any education service. They are not providing any environment protection activities. They simply take money from you and provide you food and accommodation. Therefore, is it exempted or taxable, ma? Taxable. Next one. Hostel accommodation services. So, hostel services provided by the trust to the students are not considered as charitable and are taxable. Like in Guntur also, community-wise hostels will be there. Those community-wise hostels will take some 500 or 1000, some amount from the students and they will provide you the accommodation. Here what they are doing, ma? They are providing hostel facility. They are not doing any charitable activity. In that case, is it exempted or taxable? Taxable. And supply to charitable trust. Supply by charitable trust is exempt. Supply to charitable trust is taxable. Unless exempted, all the supplies made to a charitable or the religious trust are taxable. By charitable trust, it will be exempted. To charitable trust, it will be taxable. Okay, ma. These are the points that was asked in the exam as adjustments. I just made them in the form of a chart here. Okay. So, what is the next service ma? With respect to exemptions we need to see is agriculture. So with respect to agriculture, what is the first service that was exempted ma? Agricultural extension services. What is meant by agricultural extension services? Application of scientific research like soil testing, seed testing, like that, those activities, and focus on farmer education and training, means creating awareness to the farmers in relation to drip irrigation or some other fruitful methods of doing the farming, and enhances agricultural practices like what is that movie, what is his name, Srikaram, who is the hero name in that movie, Sharvanan. What they will encourage there? Joint farming or cooperative farming, they will encourage there. Those are enhancing the agricultural practices. Doing all these things comes under agricultural extension services. They are exempted or taxable ma? Definitely they are exempted. What is the next service ma? Renting or leasing of agro machinery and land. Leasing of machinery for agriculture purpose, renting of land for agricultural use is also exempt. Leasing of agro machinery like tractors, and in Rangasthalam movie, actually hero will use what is that motor to put water, no, I think. In that movie, the hero livelihood is based on that water facility which is going to the agricultural lands. That comes under leasing of agricultural machinery. And what is the hero name? Ram Charan. So Mr. Ram Charan is not liable to pay any GST there because he is leasing the machinery which is used for agriculture purpose. And renting of vacant land, in our Telugu it will be called as Kaulukivadam. So definitely those activities are also exempted. Next one, supply of farm labor. That means provision of workforce essential for various farming activities is exempt. In olden days it was there ma, farm labor, but nowadays everything is going to be done by the mission only. In olden days for all these so many harvesting, sun drying, what we call it as threshing means that with respect to tobacco, just like the way in which actually we will put clips for the clothes, in the same way these tobacco leaves will be actually some hanger or something will be there, on that it will be just put like that. Okay, those things in olden days it was done by the normal people, farm labor. So supplying the farm labor is generally is exempt. And next one is processing of agriculture produce. What is this processing of agriculture produce ma? Process that do not alter the essential features of agriculture produce is exempt. Means tomatoes, agriculture exempted. Tomato ketchup, taxable. Potatoes, agriculture exempted. Potato chips, taxable. And tea leaves, agriculture. Tea powder, non-agriculture, taxable. Paddy, agriculture. Rice, non-agriculture. And sugarcane, agriculture. Sugar, non-agriculture. Pulses with husk, agriculture. Pulses without husk, non-agriculture, pottu in our Telugu. Okay. So double hearts, minapagullu, taxable. Okay, fine. So those are the cases that definitely that will be taxable. Okay. Until its basic nature changes, it is a agriculture produce processing and exempted. Once the basic nature changes, definitely it will be taxable. Next one, aimed at making produce marketable for primary market. What is this? Aimed at making product marketable at primary market means in order to fit it to the primary market, bulk packing. Retail packing is taxable, but bulk packing is exempted. Like with respect to rice, what we can say, up to 25 kgs it is taxable bag. More than 25 kgs is exempt. That's why nowadays the people are doing 26 kgs in a bag. in order to avoid the GST. Seriously, 26 kgs bags are available nowadays. Because up to 25 it will comes under retail packing, whereas in excess of that comes under bulk packing, which is for primary market. Secondary market, retail packing. Primary market, bulk packing. So bulk packing is exempted, retail packing will be taxable. Next one. Exclusions from exemptions. That means these are taxable. Exclusions from exemptions means these are taxable ones. Processed products like tea, coffee, spices, they are not considered as agriculture produce, I told you, and definitely those things are taxable. And milling of paddy, this was asked in the exam so many number of times. Milling of paddy is not an intermediate production process, changes the essential features of paddy, therefore it is taxable. Because rice mill owner will be called as business person and is not a farmer. Therefore, is it exempted or taxable? Taxable. Let's see. With respect to storage and packing, special exemptions are there. What are the special exemptions? With respect to agriculture produce, any packing, loading, unloading, storage is exempt. Packing of agriculture produce, loading them into the lorry, unloading them into the lorry, Hamali charges, we will pay for that. And storage services of agriculture produce is exempt. And rice, specifically exemption was given. Even though it is non-agriculture, with respect to rice, rice is a non-agriculture product, but still it is a daily necessary. So that's why what it has done, a special exemption was there for storage of rice. Therefore, storage of rice, even though non-agriculture, it is exempted. Cereals, pulses, fruits, vegetables, storage and warehousing of cereals. Cereals means, that means, okay, what we can say, corn actually comes under cereals, na? Corn, sweet corn, you relate corn, mokkajonu, dhanyal in our Telugu. Korralu, like that, those items will be actually comes under cereals. Pulses, that means minapop, etc. I think those items will come there. Fruits and vegetables, regarding them, storage and warehousing is definitely is exempt. Minor forest produce like that means bubble nut, etc. And Girijan honey, soap oil. Soap nut, okay, sorry. So, okay. So, soap nut, or what is the next one? Girijan honey. Definitely those items, what is the position, ma? Their warehousing also comes under exempted. Okay, ma. So, the next point will be marketing and commission related activities, ma. Who will do these activities? Agriculture Produce Marketing Committee will do these activities. In simple language, we will call it as market yard. In Guntur, the Asian biggest ad was there, Mirchi ad. It is Asia's biggest one, not only India. Okay. And for generally, these marketing committees will levy some fee or license fee on the merchants for doing the purchase and sale of those items. And there may be, I think, more than 200 to 300 shops will be there in Guntur Mirchi ad. Those shops are belongs to this market yard. Those shops will be given on rent to these merchants. So renting of shop is not agricultural activities, it is a commercial activity, therefore it is taxable. But if at all the commission agents who will come there to the Mirchi yard to purchase agriculture produce, further they will charge some commission, it is exempt. Because commission on the agriculture produce is exempt. Commission on agriculture produce will be exempt. So these are the important points with respect to exemptions. So the next point is with respect to this, what is the next service? Educational institutes is the next exemption we need to see. So the next point is here, categories of educational institutions. That means Which educational institutions are covered under the exemption notification is covered by this point. So what are the institutions that are covered under this educational institution notification? What are the types of institutions that are covered here? Preschool and higher secondary school, courses recognized by Indian law, vocational training centers. These three are regarded as educational institutions: preschool and higher secondary school, courses recognized by Indian law like CA, CMA, like that, and approved vocational coaching centers or training, ITA, Polytechnic will be there. Na? Those are the institutions that are covered under this exemption notification. What are the services that are exempted? What are the output services that are provided by these educational institutions will be exempt? Services to the students, faculty and staff. Example, lodging and boarding, etc. That means whatever the fee the student will pay to these educational institutions will be exempted. Sir, then why the fee paid to the masterminds is taxable? Then why the fee that is paid by the masterminds is taxable, ma'am? Because masterminds is not an institution which is recognized by Indian law. It is providing the coaching to the courses that are recognized by Indian law. Exemption will be given to those organizations which can give certification. Here, who can give the certification? ICA. Therefore, exemption will be given to ICA but not to the masterminds, because MM will only provide the coaching to those organizations. So, those type of students. Next one. What is the other thing that is exempted? Conducting entrance exams. In order to join in those schools or education institutions, some entrance exam is needed to be conducted. Na? Further, they will collect some amount. Na? Those are also exempted. See, application fee, CA exam application fee, it is exempted. And eligibility certificate. Generally, self-paced modules, you need to get eligibility certificate. Na? Okay, CA. Okay. CMA, there is no such thing, but till now. CA self-paced modules are there, I think. In order to write final exam, I think you need to qualify the self-paced exam and they will give you some eligibility certificate or something. Na? You need to submit that certificate at the time of filing the application for final exam. So for that, I think they will charge some amount, some 500 or 1000 something. They may charge. Na? Those amounts can also be exempted. Migration certificate in schools, it will be there. What is this migration certificate fee? TC. Student needs TC, transfer certificate, na, in order to go from one school to another school. TC is needed. Na. Further, they will collect some 500 or 1000 like that. Definitely, they are also exempted. Okay. These are the exempted output services that are. Next one is exempted input services. What are the services that are exempted if received by? What is the above point? Provided by. Provided by these educational institutions, those are actually exempted. And provided to these educational institutions, these are exempted. What are the exempted ones? Services relating to transport, catering, security, housekeeping, online journals, conduct of examination. Here, I think you know this one, transportation, catering, security and housekeeping, exemption will be given only to the school. If the recipient is the school, then only it is exempted. Other than that, 3 education institutions are covered here in this notification. One is school, second one is courses recognized by Indian law, and what is the third one, ma'am? Vocational training centers. So these are the things, the 3 organizations are there here, but in those 3 organizations, which one is exempted, ma? Transport, catering, security and housekeeping. If at all they are provided to school, recipient is school, then only it will be exempted. And with respect to online educational journals or periodical, exemption is given to courses recognized by Indian law only. That means CA student journals. I think CMA also student journals will be there now. CMA student journals will not be there. Okay, for CA student journals are there, I know that. So with respect to those CA journals, somebody will write up some articles there now. So supplier, the person who is writing the article, recipient, ICA, those services are exempted. There is no need to pay any GST. And entrance exam to all the three. All the three means schools, vocational training centers, and what is the third one? Courses recognized by Indian law. All the three institutions will get exemption in relation to examinations. Okay. Next one is some other exempted services here. That means miscellaneous, just like separate points. So just now you said that vocational training centers are exempted. Na? Here vocational training will be given by two types of ITAs. One is private ITAs. Second one is government ITAs. Which ones are exempted and which ones are taxable? Which ones are exempted and which ones are taxable, ma? Private ITIs, if at all they provided designated trades. Okay. With respect to private ITAs, what is the position, ma? Only designated trades. That means what are treated as vocational training centers, only those are exempted. Only those are exempted. That means what are the designated trades like cell phone repair, TV repair, or saloons, haircut related services. Those things, self-employment will be there now. Those self-employment activities will be, what is the position, ma? Those are only exempted if at all they are provided by private ITAs. But whereas with respect to government ITAs, all the services are exempt. That is the difference, ma. With respect to private ITAs, only the specified courses are exempted. With respect to private ITAs, specified courses are exempted. With respect to government ITAs, all the courses are exempted. See what is the sentence that is there? Private ITAs qualifies as educational institutions, that is, services for designated trades, services for specified courses only exempt. See the second point? Government ITI services are exempt as they align with the services provided by government. Therefore, all the courses provided by government ITI are exempted. But whereas with respect to private ITI, only specified courses are exempted. Got the point, ma? Got the difference? Okay, fine. Next one, IIMs. What is meant by IIM? Indian Institute of Management. What are exempted? Long duration programs awarding diplomas or degrees are exempt. Like 5 years integrated programs, 2 years management programs, that is MBA, and FP fellowship programs, PhDs. These are the long duration programs, more than 1 year. As per the definition, more than 1 year duration is there. It is known as long duration program. Those courses are exempted. Like 5 years integrated programs, 2 years management programs like MBA, and fellowship programs like PhD. Their duration is more than 1 year. In that case, is it exempted or taxable, ma? Long duration programs provided by IIMs exempt. So what is the next point? Central and state boards services for conducting exams are exempt. There's a point here, only for conducting exams are exempt. What are the board? Any example for boards? Any example for boards, ma? Central and state board? And with respect to state SSC board, I think intermediate, board of intermediate, I think intermediate board, that means board of intermediate. So those AP intermediate board, I mean to say with respect to AP, those people will conduct exams, na? Intermediate exams, 10th exams. Up to exams only they are considered as educational institutions. Sir, apart from them, what are the other things they will do? They will give what we call as recognized by Indian government, recognized by AP government. Stars are given, some rankings are given by these organizations. Those are taxable. What are the things that are exempted? If at all they are done by these boards, only conducting exams, conducting 10th exams, conducting intermediate exams, only those things are exempted. That's why exam fee, simply 10th exam fee, intermediate exam fee is exempt. We are not liable to pay any GST. Sir, conducting exam means only conducting exam means exam application only? No, no. First you need to give the notification in the paper. And hall tickets, admit cards is needed to be printed. And in the same way, question papers are needed to be prepared. And what do they call as mark list is needed to be printed. All these things are also exempt. So in relation to conducting the exam, whatever the other activities we will do, those activities are also exempt. Sir, what about Anganwadi schools? What about Anganwadi schools, ma? They are also comes under these educational institutions because they will provide preschool education. Because they will provide preschool education, Anganwadis, therefore it is exempted. Providing food to Anganwadis, what we call it as midday meals and what is it? Balamrutam, I think. They will provide you in Anganwadis. Providing this Balamrutam to Anganwadis is exempted or taxable? Exempt. Because catering, any midday meal schemes are also exempt. Next one is maritime training institutes, means marine training. So marine training, submarine training will be there now. Navy people, it was there in Vizag. In the nationwide, the most suitable place is Vizag for this submarine training. That's why we're having one institute there. Those marine training institutes are also covered under this educational institution definition later on, and they are also exempted. So these are the things we need to remember with respect to this education. And last but not the least, I think we need to go by taxable ones. Till now, whatever we discussed is exempted. Now we are seeing what are the things that are taxable here. First one is here, private coaching, like masterminds. CA coaching services will be there, Nama. Definitely they are taxable. Training by the private coaching institutes and qualifications recognized by foreign countries. What are those activities? CPA, ACCA, like that. Those courses which are recognized by foreign law, which are actually exempted, recognized by Indian law, then only they are exempted. If at all they are recognized by foreign law like CPA, ACCA, definitely they will be taxable. And with respect to IIMs, short duration courses conducted by IIMs with the participation certificates are not exempt. Definitely they are taxable. Less than 1 year courses. More than 1 year courses, definitely they will be exempted. Less than 1 year programs are definitely taxable. And next one, fee from employers for campus recruitment by IIMs are taxable because the amount is not collected from students. The amount is collected from employer, prospective employers. Therefore, is it exempted or taxable? Taxable. And other services for education programs. So, accreditation services for institutions, recognition, I told you, recognition services and recognizing the professionals. That means providing for our CAs, CA membership will be with there. On that membership fee, there is GST. Because they are giving certification to the professionals there. We are not the faculty, we are not the staff, we are not the student, we are the members. Therefore, providing any service to the member by ICA, that means it comes under professionals, definitely it is taxable. So these are the points maximum they are asking in the exam with respect to this education. What is the next service, ma? Important one is healthcare service is the next important one in the exemptions. With respect to healthcare services, what are the things that are exempted here, ma? ICU, intensive care and critical care units, ma, irrespective of the amount, they are exempted. ICU, CCCU, ICCU, whatever the critical care or emergency wards that will be there, all those emergency wards, room rents are exempted. And what about the normal rooms? They will be exempted if the room rent is up to 5,000 rupees per day. With respect to normal rooms, emergency ward rooms, irrespective of the amount, they are exempted. But whereas with respect to normal rooms, rent up to 5,000 rupees per day, it will be exempted, and more than that, full amount will be taxable. More than that, full amount will be taxable. And reconstructive plastic surgeries, if at all they are done as a part of medical treatment to restore any anatomy or functions of the body due to the defects, abnormalities or injury, then they are exempted from the taxes. Somebody will have 6 fingers, somebody may have some additional like some other parts will be there. No? So those due to by using this surgery, they will remove those parts, abnormalities, which are not generally should be there in the body. So those things comes under our healthcare services, ma. Definitely they are exempted. And what are the things that are taxable? I told you, rooms with the rent over 5,000 per day are subject to taxes. That means full amount will be taxable. And cosmetic and hair transplantation. Cosmetic and hair transplantation means always it comes under beautification. Cosmetic surgery, hair transplantation generally will be done for the sake of beautification. Therefore, they are taxable. If at all they are done as a part of medical treatment, then it can be exempted. Next one, non-healthcare related services like hospital, in big multi-speciality hospitals, shops will be there, medical shops. For it, it can be given as rent. Coffee shops can also be there. Conference halls will be there, which can be used as auditoriums by some conferences and all these things. And display of advertisements with respect to few medicines, boards will be there. Na? Use this medicine, that medicine, like that. And on the terrace of the hospital, hoardings will be there. On that hoarding, some advertisements can be given. All these are not in relation to healthcare service. Definitely they are taxable. What is next one, ma? I think it will be in relation to government services, ma. So with respect to government services, what is the position here? Functions entrusted to local bodies, that is municipality or panchayat functions. Means sanitation and what is the street lights, parks, like that, some basic amenities that must be there to the citizens. Na? Those things comes under panchayati or municipality functions. Ma? So any person who is providing these constitutional entrusted functions to these local bodies like municipalities, it is exempted. That means supplier, any person, here 2 municipalities they are doing. So sometimes two are exempted. That means by municipality is exempt, 2 municipalities also exempt. Which ones? These functions entrusted by the constitution, like municipality or panchayat functions provided by government is exempt, as well as provided to government in relation to these activities is also exempt. See, this is services related to municipality or panchayat functions by the government is exempt. See this? Services provided to government here. The word is here by government. The word is here to government. In relation to municipality or panchayat functions, it is exempt. The first line is by government providing these services is exempt. Any person who is helping the government in providing these functions also exempt. That are the two lines. Next one is composite supply involving goods and services to the government with the goods not exceeding 25% of the total supply. Take the example of street lights. Street light was a contract that was given to some outsourced person. Now, along with repair of those street lights, sometimes bulbs are needed to be changed. Na? In that case, goods plus service both are involved. Na? If goods plus service both are involved, it is called as composite supply. But in the entire contract value, the goods value shall not exceed 25%. Then it is exempt. Then it will be exempt. That is the point you need to remember. Let's say total contract value is 10 lakhs. In that the goods value shall not exceed 2.5 lakhs. Then definitely it will be exempt. Okay. Next one. Services from fair price shops under PDS, public distribution system. And what does it mean? Ration shops. The services that are provided by the ration shops is exempt. Next one. Okay, fine, ma. So the next one is milling of flour or paddy into the rice for PDS. That means in order to supply the rice to the common people like us, the government will have a tie-up with rice mills. Ma. Rice mills tie-ups will be there. What those rice mills will do? They will convert paddy into rice and give them to the government to distribute them to the ration shops. Here, what is the ultimate agenda here? To distribute them as a ration to the poor people. Therefore, milling of this flour or paddy into the rice, for which purpose PDS distribution is exempt, even though it is non-agriculture. Because we are using it for PDS. Next one. Insurance services, where the government pays 100% of the premium. Generally, with respect to army people, government will do that. Life at risk, na? So 100% of the premium will be paid by the government. Whenever 100% of the premium is paid by the government, those insurance services are exempted. Next one, training and development programs. So with respect to training and development programs, government training programs with 75% of the expenditure is covered by the government, then it will be exempted. Like summer camps will be conducted by Rotary Club or some clubs or charitable organizations, Tally free coaching, PGDCA free coaching, like that they will offer you. Free coaching means for you it is a free coaching. From where they will get the amount? Ma? Government. Here in that, in the entire expenditure of those programs, minimum 75% of the expenditure is borne by the government, then definitely it will be exempt. Based on this line, it was asked in the exam 3 times. They just say you some government or some education or training program was given where the total expenditure was 90,000. In that, 63,000 was borne by the government. This is a sentence what they have given. In that case, is it exempted or taxable? Taxable. 90,000, 63. What is the total expenditure? 90. 63,000 means 70% only. Minimum 75%, then only it is exempted. Less than, therefore, is it exempted or taxable now? Like that, they will ask in the exam. These type of questions based on this line. Next one. Services provided by National Skill Development Corporation. And like those organizations are exempt. The most famous scheme is here DDU GKY. Deen Dayal Upadhyay Gramin Kaushalya Yojana. Like that, those skill development programs, they will come under, those are exempted. And in the same way, already we know that vocational training related council services are also exempted. Next one is with respect to financial and legal services, where consideration and interstate government services. Services where the consideration does not exceed 5,000, all those services by government are exempt. Where the consideration charged by the government is less than 5,000 rupees, then all those services are exempt, even though the services are provided by the government there. In the same way, intergovernment services. Intergovernment services means between center, state, UT and local authorities. In between them, any services are provided, definitely they are also exempted. Next one. Same point will be applicable to government entities also. Service by one government entity to another government entities are also exempt. In the same way, government giving guarantee for the loan taken by the PSUs are also exempt. What is any example for PSU? IOC or NTPC, and IRCTC also a PSU. Railway touring. I mean, ticket booking is website is there now. It is also PSU, public sector undertaking. Any loans that are taken by these PSUs are guaranteed by the government. Generally, giving guarantee is a supply of service. But still, here who is providing the guarantee there? Government. Therefore, is it exempted or taxable, ma? Exempt. Next one. What is the next one, ma? Regulatory and certification services. In that first one is registrations and certifications. Registrations required under any law. Registrations required under any law means like with respect to your company law, based on authorized share capital, you need to pay the registration fee na? For registering the company. For incorporating the company based on authorized share capital, you need to pay registration charges, some other amounts to the government. Stamp duty also will pay at the time of incorporation. Okay. So those amounts, definitely regarding them, registrations required under any law, on the company law in our example, the registration fee you will pay na? On that there will not be any GST. Testing, safety checks and certifications like respect to fire extinguishers, if you observe there, fire department certification will be there. I think it is not in the class. On that date will be there. I think in Pawanputra campus the date is November 2024 or something, 25 or something, the date is there. October 2025 or something. Every year all these fire extinguishers need to move to the fire station. They will remove the old gas or old liquid powder what is there, and they will fill it with new one every year. Whether you use it or not, this is the process, and they will certify that it is fit for any fire accident. Those certifications, safety checks, testings that are done by the government, further they will charge some consideration. Those amounts are also exempted. Next one, granting national permits to goods carriage. You will see national permit on the trucks, etc. Lorries, on lorries backside or something, you will get national permit lorry like that. Those national permits are exempted. And issuing passport, driving license, visa, birth certificate, death certificate, all those are issued by the government now. Those things are also exempted. And next one is rehabilitation services. That one provided in hospitals is exempt, or provided by charitable trust is exempt. I told you before you come. Okay, now this point is here. They are providing at government hospitals. Government centers will be there. Government counseling centers will be there. They are not hospitals, government counseling centers. At those places, if they provide these services, they are exempted. In the same way, military mess, army mess, navy mess, or what is that? Air Force mess, all these things will be definitely exempted. But regulatory bodies like SEBI, Pollution Control Board are not considered as government entities now. Therefore, because they are there in the negative list. Already they are there in the negative list now, 7-2. That's why exemption is not needed for them. And police security services to private entities are taxable under RCM. That means audio functions, video functions. Nowadays, whenever Salman Khan will go, police security is much more needed. Yes or no? Definitely in those cases, police department will provide the security. It's not free. It's not free. Salman Khan need to pay for that. But to get the policeman, definitely he need to pay for that. It is making payment to the government there. Therefore, is it exempted or taxable? Taxable, that too under RCA. This is with respect to government related services. Next one is transportation of the goods. With respect to transportation of the goods, so first one is road transportation. With respect to road transportation, other than GTA and courier agency, whosoever provides this transportation, it is exempt. Take the example of APSRTC. APSRTC is also transporting the goods. It is neither the GTA nor the courier agency, but still it provides the road transportation. Is it exempted or taxable now? Exempt. By GTA, it is taxable. Courier agency also taxable. But with respect to GTA, few relaxations are there. Anybody remembers? GTA related few exemptions are there. In the morning session, I told you already. That one is okay. Those are the tax rates. With respect to GTA, we can divide this point into two types. I think we're having here like this. I just wrote those names below. But here you can observe random goods. So definitely they are exempted. With respect to other goods, specified persons taxable, whereas others exempt. What is the random goods? I just wrote there. Relief materials. A means agriculture, N means newspapers, D means defense, O means organic manures, and M means milk, salt like daily necessaries. These things are exempted, random goods. Other than random goods, specified persons like factory, society, cooperative society like that, those are taxable. If the recipient is any other person, it will be exempted. If the recipient is any other person, it will be exempted. Okay, ma. So the next one is aid transportation. With respect to aid transportation, ma, if at all, custom station in India, it is an import technically. With respect to import, aid transportation will be exempted. Why, ma? Already it is included in customs value. If at all you are able to recollect your childhood days, when customs valuation is there, freight is includable already. CAF includes, cost includes and freights. On that already BCD is there. On that already IGST is there. Already IGST is also there as per Customs Act. That's why here exemption was given. Next one. Place outside India, export is taxable because there is no tax on export goods. Export goods not taxable. But whereas transport service, it can be taxable. But taxable, but refund will be given to you. That means what it will call it, a refund of IGST or something. Okay, so that is the point. First it will be taxable, but later on, not as per this act, exemption will be given. As per customs, some exemptions will be there. As per FTP, foreign trade policy and customs, some exemptions will be there. Okay. Next one is rail transportation. With respect to not all cases, except, my opinion is I just wrote the point at last, except random goods. Except random goods, whatever the other goods that are transported by the rail, definitely they are taxable. And water transportation, inland water goods. So inland waterways means specified sea routes. Any goods exempt. Other case, again we can divide into 2 points. Random goods exempt. Others taxable. What are the random goods I just gave here? See. But not in that order I just gave it. Agriculture produce, A, milk, salt and food grains, organic manures, newspapers, relief materials and army people things. These are transportation of the above. Goods by air is taxable, by any other means, it is exempt. That's why by road, by train, by vessel, it is exempted. Random goods with respect to air, definitely it will be taxable. That's why I did not specify with respect to air any random goods exemption. Other than flight, any other mode, those random goods are transported, definitely they will be exempted. And transportation of railway equipment or materials by the rail or vessel is also taxable, because they are not there in the random goods list. Previously, they are there in the random goods list. Before some 1 year or 1.5 years back, these are there in the random goods list. But later on, they are removed. Therefore, now that's why it can be asked in the exam sometimes like this. Transportation of railway equipment or materials by railways are also taxable, because it is not a random good. If it already is a random good, then only it will be exempted. Okay, ma. The next one is, what is the next one? Transportation of passengers, I think it will be. What is the next one there, ma? Transportation of passengers. So with respect to transportation of passengers, what is the position, ma? First one is road transportation. With respect to road transportation, types of road transport is here. Rickshaws, auto rickshaws, etc. exempt. Metered cabs or taxis, exempt. Radio taxi, what is meant by the word radio taxi? Two-way GPS tracking will be there. That means your location will be known to the driver and driver location will be known to you. Those are called as radio taxis. Radio taxi is taxable. And what about the bus? What about the bus there? Bus can be divided into two types, ma. One is contract carriage, second one is stage carriage. What is meant by the word contract carriage and what is meant by the word stage carriage? Stage carriage example I told you is Palevelgu, that means village buses. Every stage the bus will stop. Contract carriage is nothing but non-stop, just like origin and destination. If it already is AC, taxable, non-AC, exempt. Whether it is contract carriage or stage carriage, AC is taxable, non-AC is exempt. But even though contract carriage is non-AC, for these cases it is taxable. Contract carriage is even though non-AC. For hire, tourism, charter are definitely taxable, even though it is non-AC. If it already is not for hire or tourism, like means normal cases, it will be exempt. This is with respect to road transportation, the important ones. Next one is, what is the next one, ma? Air transportation. With respect to air transportation, categories of air travel, here it was divided to or from northeast or Bagdogra in West Bengal. Whether origin or destination is one of those states, then economy class is exempt, business class and any other class will be taxable. To or from northeast or Bagdogra in West Bengal, definitely with respect to them, economy class is exempt, business class or any other class, definitely it will be taxable. And what is the next one, ma? Rail transportation. So with respect to rail transportation, types of rail transport, ma? Train, first class. In train first class, taxable. AC, taxable. Non-AC, generally exempt if it already is a second class or sleeper. Non-AC, unless it is a first class, sleeper and second class will be exempted. And metro rail, monorail, tramway, these comes under special railways, always they will be exempted. This is with respect to rail transportation. Next one is water transportation. So with respect to water transportation, what is the position, ma? Public transport open to the public, privately or publicly owned. The owner may be a private person or owner may be a public person. But it must be used for public transport, then it is exempted. That means ferries will be there now, which is launch in our Telugu, Ballakattu like that. Those ferries, definitely, if at all they are used for public transport, in just like in Kerala, definitely they will be exempted. And not predominantly for tourism. That means they are not for tourism. Then also they will be exempted. But exclusively if those small boats are something used for tourism like shikara, cruise ships, etc., definitely they will be taxable. This is a point you need to remember with respect to water transportation. Next service is tour operator service. With respect to tour operator service, what is meant by tour operator? What is meant by tour operator, ma? Yes, like North Indian tour, South Indian tour, like that they will arrange the guide. Guide also will be there. Accommodation, food, everything will be taken care by him, and you need to pay a fixed package to him. Those are called as tour operator services. If the tour operator service in India, that means tour operator is there in India, but service was provided fully outside India, it comes under technical export, therefore it was exempted. And 100% of the service is provided in India. Even though it is provided to a foreign tourist, but in India the service is provided, it is taxable. Next one, foreign tourist tours. Partly in India, partly outside India. 100% outside India, 100% exempt. 100% in India, 100% taxable. Partly in India, partly outside India. Then what is the position? Calculation should be done by how many number of foreign days to total number of tour days. In the total number of tour days, how many number of foreign tour days are there? We need to calculate that into that number of days into tour package amount, or 50% of the tour package, whichever is lower is exempt, rest of the amount is taxable. Okay, ba. Number of foreign days divided by total number of tour days, ma. How many number of days we will get, percentage something will get, na, into tour package amount, or 50% of the tour package, whichever is lower, that amount will be exempted, rest of the amounts will be taxable. And last but not the least, if above road transport is there, na, those road transport services are supplied through ECO, then even though it is originally exempted, if at all it is provided by ECO, it is taxable. In road transportation, passengers, some are exempted, na? With respect to non-AC bus, stage carriage is exempt. But if those stage carriage services are provided through ECO, you just booked the ticket through ECO, in that case everything will be taxable. Originally it is exempted, but if at all it is provided through ECO, definitely it is taxable under 9.5. There ends exemptions. So with respect to goods, section 12 is there. With respect to services, section 13 is there. With respect to this particular section 12, total how many subsections are there? 6 subsections. 12.1, 12.2, 12.3, 12.4, 12.5, 12.6. 12.1 naam ke vaste. Therefore, we need to start with 12.2. What does 12.2 deals with, ma'am? Okay, what does 12.2 deals with? FCM. 12.2 deals with here FCM. Under FCM, what is the time of supply here? Date of invoice or last date for the issue of invoice, whichever is earlier. Date of invoice or last date for the issue of invoice, whichever is earlier, will be the time of supply. Date of invoice can be found out from the invoice itself. How to find out the last date for the issue of invoice? As per section 31 means 4 cases. When physical movement was there, I just wrote there, where I just wrote, I think it is not here. No, I just wrote. So simply with respect to this one, whenever physical movement was involved, on or before removal, whenever there is no physical movement of the goods, on or before date of delivery, continuous supply of the goods, date of periodic statement or date of payment, whichever is earlier, sale or return basis, date of approval, or from the date of removal 6 months, whichever is earlier. So those are the last dates. These last dates will be compared with the date of invoice. In that, whichever is earlier will be the time of supply. And next one is RCM 12.3. With respect to 12.3 RCM, what are the 3 dates, ma? What are the 3 dates? Date of receipt of the goods, date of payment, from the date of invoice, 31st day. whichever is earlier, that one will be the time of supply. Date of receipt of the goods, date of payment, from the date of invoice, 31st day, whichever is earlier in these 3 dates, that one will be the time of supply. If those things does not works out, when the supply entered in the books of accounts of recipient, that one will be the time of supply. This is with respect to goods. Now what is the next point we need to see here with respect to services? That is FCM 13.2. With respect to 13.2, if invoice is issued within the time limit prescribed under section 31, what is the time limit that is prescribed under section 31? Normal cases 30 days, banks, financial institutions, etc. 45 days. From which date this 30 days or 45 days shall be counted from? From the date of completion of service. Within 30 days or 45 days, invoice must be issued. If invoice is issued within 30 days, then what is the time of supply? Date of invoice or date of payment, whichever is earlier, will be the time of supply. If invoice is not issued within 30 days or 45 days, then date of invoice or date of service, whichever is earlier, will be the time of supply. And there is a special provision with respect to excess amount not exceeding 1,000. Anybody remembers that? The amount must be in excess of invoice value, but the amount should be less than or equal to 1,000. In that case, for such excess amount, there is no need to issue any supplementary invoice. Instead of that, present month bill cycle invoice date, next bill cycle invoice date, it depends upon the supplier intention. I told you the example of Airtel postpaid at that time. Postpaid bill is 2,000. We paid postpaid bill is 1,600, but we paid 2,000. Excess 400 was paid. For that 400, there is no need to issue any separate invoice. Present bill cycle, when the amount is received, that invoice date, for which month it was adjusted, next bill cycle, that invoice date, it depends upon the Airtel company intention. Next one, 13.3. What is 13.3 deals with, ma'am? RCM. So with respect to RCM, what is the position, ma? 3 dates will be there. Date of payment, from the date of invoice 61st day, and what is another one, ma'am? Sorry, 2 dates only in here. Why only 2 dates are there here? Because there is no need to transport the things. That's why date of receipt of the goods is not there. Date of payment or from the date of invoice 61st day, whichever is earlier. Sir, what is meant by the word date of payment? Entered in the books or debited in the bank? Which one shall be considered? Which one is earlier? That is the date of payment. That date of payment will be compared with from the date of invoice 61st day, whichever is earlier, that is the time of supply under RCM. And there is a special provision with respect to associated enterprises located outside India. What is the provision? What is the time of supply in relation to associated enterprises, mutual interested organizations, like the organizations which are having substantial interest in one another's business, and the supplier is there in outside India? Then what is the time of supply, ma'am? Date of payment or date when it is entered in the books of accounts, whichever is earlier. When the date of payment or date when it is entered in the books of accounts, whichever is earlier, that is the time of supply with respect to associated enterprises. Next point. Common points for goods and services: 12.4, 13.4, 12.5, 13.5, 12.6, 13.6. First point is with respect to this one. Okay, this is with respect to, this point is linked here. That is with the date of receipt of amount or the date when it is entered in the books. That means when it is entered in the books or date of payment, that is amount credited in the bank, whichever is earlier. That is the point I told you with respect to associate enterprises. By mistake, I just linked it here. Okay. Next one, with respect to vouchers. With respect to vouchers, what is the time of supply? If at the time of issue of voucher supply is identifiable, issue of voucher will be the time of supply. If at the time of issue of voucher supply cannot be identified, redemption of voucher will be the time of supply. At the time of issue of voucher supply can be identified, issue of voucher. At the time of issue of voucher supply cannot be identified, redemption of voucher is the time of supply. And what about the 12.6, this one, additional consideration. The date when that additional consideration is received, that is the time of supply. That means contractual penalties will be there now, like late fee, interest, penalty for delayed payment. In those cases, the date when that money is received, the date when that additional consideration is received, that one will be the, what we call it as time of supply. Residuary provision 12.5 or 13.5, where it is not possible to apply 12.2, 12.3, 12.4. In those cases, 12.5 will come into scene. If GST return was filed, filing of GST return. Otherwise, date of payment will be the time of supply. If GST return was filed, filing of GST return. When no return was filed, date of payment will be the time of supply. Next one. Section 14. What is section 14 here deals with? Change in rate of tax. That means from the date of supply, generally with respect to time of supply, 3 dates are important. Date of supply, date of invoice, and date of payment. In between these dates, any tax rate changes, it is then section 14 will come into scene. The date is known as effective date. Okay, regarding that, here supply was done before change means before effective date. Simple story I will tell you. Supply was done before effective date. In that case, in date of invoice or date of payment, which one is before, that one will be the time of supply. We need to check what is the effective date. Second one, on which date the supply was done. If supply was done before effective date, then in date of invoice or date of payment, which one is before, that one will be the time of supply. If both are after, then whichever is earlier. Okay, see this. When invoice is issue of invoice and payment, both are after the effective date. In that case, date of invoice or date of payment, whichever is earlier, will be the time of supply. See here, what is the position? Invoice is issued before, payment was after. What is the time of supply now? Date of supply was there before. Date of invoice before, date of payment after. What is the time of supply? Time of supply will be invoice. Second one. See, supply when? Supply was after here. In that case, invoice and payment, both are before. Then what is the thing we need to do? Whichever is earlier. Both are before, Supply was after the effective date. Date of invoice, date of payment, both are before. In that case, whichever is earlier will be the time of supply. Here, payment is before and invoice is after. What is the time of supply now? In this case, supply was done after effective date. Payment is before. Invoice is after. Which one is after now? If supply was done after, after will be considered. If supply was done before, before will be considered. Okay, in this particular case, supply was after, payment before, invoice after. What is the time of supply now? Payment. Next one. This is okay. Sometimes payment is done. What happens is, let's say, this is effective date. This is effective date. Let's say 1/1/2024. Supply was done before effective date. Oh, no. Supply was done after the effective date. And the date of invoice is also after. But date of payment entered in the books of accounts before. And amount credited in the bank account after. Now, what is the time of supply now? Now, what is the time of supply now, Okay, fine. So what is the effective date? January 1st, 2024. For that, with respect to that, what is the position here? Books of accounts. See this, supply was done after the effective date. Date of invoice is also after the effective date. But in date of payment, entered in the books of accounts before the effective date, amount credited to the bank account after the effective date. In that case, which one can be considered now? Here we need to check from the effective date within 4 working days. If the amount is credited to the bank account in between these 2 dates, whichever is earlier will be the time of supply. If the amount was credited after 4 working days, then date of invoice or the credited in the bank, whichever is earlier, those things will be the time of supply. That is the point. See, date of receipt of payment is the date of entry in the books of accounts or credited in the bank, whichever is earlier, that is okay. If credit in the bank account is after 4 working days from the date of change in rate of tax, the rate of credit will be the date of payment. In that case, date of invoice is after, date of payment is after, supply is also after. There is no need to apply section 14. In that, whichever is earlier will be the time of supply. There ends time of supply topic. So the next topic will be value of supply. So whereas with respect to value of supply, total 5 subsections will be there. 15.1, 15.2, 15.3, 15.4, 15.5. In that, what are the important ones? We will see one by one. So the overview of this value of supply here, that means value of supply is a crucial concept in GST taxation because it determines the taxable value on which GST is levied. That means on which value we need to pay the GST, on which value we need to pay the GST. That one will be decided by this value of supply. What is the section that deals with value of supply? 15. And here, what are the key components? That means what are the important areas we should remember here? Transaction value, what are the inclusions and exclusions, and what you need to give special consideration for related parties and non-related parties cases. Now we will see these points one by one. So the first point is here, as per 15 subsection 1. These are the conditions that are required to be satisfied. As per 15 subsection 1, there are 2 conditions. So with respect to this transaction value, as per 16 subsection 1, there are 2 conditions that are required to be satisfied in order to apply this transaction value. First one, supplier and recipient should not be related persons. Second one, price is the sole consideration. If these 2 points are satisfied, then what is the position? Transaction value is equal to taxable value plus some adjustments. As per 15 subsection 1, there are 2 conditions that are required to be satisfied. First condition, supplier and recipient should not be related persons. Second one is price is the sole consideration. Sir, what is meant by price is the sole consideration? What is meant by the word price is the sole consideration? The total consideration that is received from the recipient, it must be 100% in terms of money only. Any non-monetary consideration is received, then 15.1 will not be applicable. So what is meant by price is the sole consideration? 100% of that consideration must be received in money. That is the point. Okay, then only 15.1 is applicable. Some part of the consideration is received in terms of non-monetary consideration, then 15.1 cannot be applied. As per 15 subsection 4, valuation rules will come into scene. Okay, right. Sir, if 15.1, 2 conditions are satisfied, then what is the position? Taxable value is equal to transaction value plus 15.2 inclusions minus 15.3 exclusions. If these 2 conditions are satisfied, what are those 2 conditions, Supplier and recipient should not be related and price is the sole consideration. What is the taxable value? Transaction value plus 15(2) inclusions minus 15(3) exclusions. Okay. Then, with respect to this, sir, what is meant by the word transaction value then? Sale price paid or payable? Simply sale price plus 15(2) adjustments minus 15(3) adjustments. What is the amount we will get? It is known as taxable value. On the taxable value, we will pay the GST. But limitations of transaction value. That means when transaction value is not acceptable or when the transaction value is not applicable. What are the cases where the transaction value is not applicable? In case of related party transactions and where the price is not the sole consideration. In those cases, alternative valuation methods will be used when the conditions are not met. That means 15 subsection 4 valuation rules will come into C. As per 15 subsection 4 valuation rules will come into C. Now, so that is a different story. What is the thing we are seeing now? What is the formula for a taxable value? Transaction value plus 15(2) minus 15(3). Now, transaction value means sale price. For that, now, what is the thing we need to see? What are the items as per 15(2) we need to add and what are the items we need to deduct as per 15(3). Now, we are seeing these areas. Inclusions in the value of supply. This is 15 subsection 2. Okay. As per 15 subsection 2, how many inclusions are there? Don't see in the book. As per 15.2, how many inclusions are there? 5. How many inclusions are there, ma? 5 inclusions are there. What are they? We will see one by one. First one. Taxes and duties. It includes all the taxes, duties, cess, fee other than GST. Other than GST. Whatever the other taxes you will pay, it is includable. I just wrote the examples also. Municipal taxes, excise duty. Take the example of tobacco. On tobacco, there is excise duty as well as GST. Na? Let's take the value 100, excise duty 18 rupees. In that case, GST is applied on 100 or 118. Value 100, excise duty 18. In that case, GST rate is needed to be applied now. On which value it will be applied? Is it on 100 or is it on 118? 118. 100 is the transaction value plus 15 to inclusion. Any taxes other than GST is includable. Based on that, GST is any other tax. Now that's why I wrote the example, excise duty. Okay. Then that now on which value GST will be levied? 100 rupees transaction value plus 18 rupees excise duty, that is 15 to inclusion. Next one. TCS is not includable because it is interim levy. It is only a collection mechanism. TCS is not a tax. Therefore, TCS is given in the problem not included in the taxable value. TDS is includable. TDS is a tax. Income tax we're talking about, not about GST here. TDS under income tax, TCS under income tax. TCS under income tax is not added because it is only a collection mechanism. But TDS is a form of a tax, it will be added. As per 15 subsection 2. Therefore, any taxes other than GST that is paid by the recipient and charged separately, all those taxes are includable in the taxable value. Any taxes other than GST paid by the recipient, collected separately from the recipient, it is includable. Second point. What is the second point, ma? Third party payments. Payment made by the recipient to third parties on supplier's behalf. So here included, that means simply supplier obligation was met by the recipient. In fact, it was a supplier obligation, but it was met by the recipient. Those amounts are also includable when included if the supplier is contractually liable for the service. Let's take X is the seller, Y is the buyer. Okay, contract price is 100 rupees. X asked Y to pay to Z 20 rupees and pay him the balance 80 rupees because X is liable to pay to Z. In this case, what is the taxable value now? What is the taxable value now? Is it 100 or 80, ma'am? Definitely it will be 100. Why, ma? 80 rupees was paid to the seller directly. 20 rupees was paid to the third party on behalf of the supplier, Mr. X. X is the supplier, Y is the recipient, Z is the third party. Who is having the contractual liability to pay? X is having the contractual liability to pay to Z. But who is paying that? Y is paying that. How much amount? 20. This 20 was the supplier obligation that was met by the recipient. In that case, is it includable or excludable? Includable. That is the second one. Applicable even if not added to the bill or paid directly by the recipient. Simply, even though they are not recorded on the invoice, even though they are shown separately, still they are includable. Two ways. Let's say in the invoice value was raised only for 80, then also this 20 is includable. Invoice raised for 100, but they showed 80 rupees to the seller, 20 rupees to third party, then also it is includable. It does not matter in which way you show it in the invoice, whether you paid the amount or not. If you paid the amount, then it is includable. That is the point. Third one. What is the third one, ma? Incidental expenses up to the stage of delivery. This is the third point. Incidental expenses up to the stage of delivery. See, if the seller charges for activities done by the supplier before delivery up to the stage of delivery, whatever the expenditure seller incurs, all those amounts are needed to be added to the taxable value, like commission, packing, loading. Customization means designing charges, testing charges, certification charges, transportation, insurance, whatever the expenditure the seller incurs up to the stage of delivery, all those amounts are needed to be added to the taxable value. Okay, ma'am. Next point. Treatment differs based on who bears the cost, supplier or buyer. Yes, no? If supplier, say for example, transportation cost was paid by the seller, includable in the transaction value. Transportation cost was paid by the buyer, then it is not includable, na? Because seller did not bear the liability. If seller incurs, then only it is added to the transaction value. If the buyer incurs those expenditures, we should not add that. That is the third one. Incidental expenses up to the stage of delivery. Okay, next, fourth one. Okay, ma. So next point is, ma, what is the fourth point we need to see? Interest and penalties. With respect to interest and penalties, what we call them as contractual penalty. Penalty can be divided into two types, ma. One is, what is the first one, ma, here? One is contractual penalty and second one is statutory penalty. Statutory penalty is paid for breach of law. Contractual penalty is paid for breach of contract. Breach of law, statutory penalty is not a consideration. There is no GST. Contractual penalty is for breaking the contract. Definitely it is a consideration. Those are includable. That's why late fee, penalties for delayed payment charges are included. When they are included, I just wrote a line there. Only if actually recovered, waiver amounts are not included. In the problem, they will use these words. If you observe, if you have done valuation, value of supply chapter problems, you may come across these things. What they will say, interest of 1,000 was levied, but waiver was given by the seller. In that case, is it includable or excludable? Excludable. When it is actually recovered, then only it is includable. If at all any waiver was given on a notional basis, we will not add that. Okay, ma. On the real basis solely, we will add that. Notional values will not be added. Any waiver was given, it will not be added. Next one. It will be considered as a composite supply with same tax rate as the main supply. That means interest technically comes under supply of service. But supply of the goods related interest, now this one. Therefore, it comes under composite supply. Goods plus service. And what is the principal supply here? Supply of the goods. For example, you sell him one laptop was sold to you. And for that, the delayed payment charge, let's say laptop value is 50,000. Interest is 5,000. Interest comes under supply of service. Different rate will be there. And sale of laptop will have a different tax rate. Let's say, for example, 18%. Laptop 50,000. Rate of tax 18%. Interest 5,000. Rate of tax 12%. In this way, in the exam, they will give. Now, what is the rate of tax we need to apply? On the total 55,000, 18% will be applied. What is the principal supply here? Laptop. What is the rate that is applicable to laptop? 18%. Therefore, interest 5,000 also taxable at the rate of 18%. That is the point. And last but not the least, I just forgot to tell you, this contractual penalty is always inclusive of GST. I just forgot to wrote there. What is that, ma? This contract, only this point is applicable to contractual penalty. Contractual penalty will be always inclusive of GST. In that case, what is the thing you need to do, ma? You need to do the backward computation. How to do that? Into amount into 100 by 118, you will get the value. Into 100, say for example, 18 by 118, you will get the tax rate. 18 by 118 tax rate. 100 by 118 value. Okay. Last but not the least, subsidy. Subsidy from government, excludable. See, included only if provided by the entities other than central or state government. That means subsidy by any person other than government, includable. Next one. It must be directly linked to the price of the supply. It must be directly linked to the price of the supply. Then only it is includable. And last but not the least, in the exam, without subsidy, the value of supply problem will not be there. If two subsidies are given and the line was given that two subsidies are already considered, then what you will do? Let's say government subsidy 10,000, others 5,000. Like that, subsidies were given. In the matter, it was given that these two, the sale price was considered after adjusting these two subsidies. Now, what is the adjustment you will do now? What about the 10,000? The question is government subsidy 10,000, other subsidy 5,000. The sale price arrived after considering these two subsidies. Now, what is the tax treatment? What is the thing? What is the thing we need to do? Minus 10 plus 5, according to you. According to you. 5 add, what about the 10? Okay, that is right answer, ma. Because government subsidy excludable, we already deducted that. Therefore, no adjustment is needed. We need to ignore that. But whereas others, 5,000 should not be deducted, but it was deducted. Therefore, we need to add it back. Therefore, 5,000 will be added, 10,000 will be ignored. This is the adjustment. Students will be confused more number of times. Next one is ma 15.3 exclusions. After exclusions, we'll take a break, ma. After that valuation rules, na. After the break, we will see them. Almost continuation 2 hours, na. So what is this exclusions, ma? 15.3. The one and only exclusion as per 15.3 will be discount. Discount here can be divided into two types. One is pre-supply and on-supply discounts. Maximum cases only these type of discounts will be there. That means discounts given before or at the time of supply, like quantity discount, quality discount, 1+1 offers, all these things comes here. So in order to allow this pre-supply discounts, what is the condition we need to satisfy? There is one and only condition. Only one condition is there. Very good. If that condition is satisfied, it is excluded from the taxable value. What is that? Must be shown on the invoice. Then that pre-supply discount will be excluded. Next one is post-supply discount. What is meant by this post-supply discount? Discount given after supply. In order to allow this post-supply discount, three conditions are required to be satisfied. What are those three conditions? First one, prior agreement must be there. Second one, it must be linked to the invoice. Third one, proportionate IDC is reversed. If all these three conditions are satisfied, in those cases that post-supply discount is excluded. Sir, you said that with respect to post-supply discount, three conditions are required to be satisfied. First one is agreement. Second one is linked to the invoice. Third one is proportionate IDC must be reversed. Sir, agreement okay. Linking with invoice is also okay. What is meant by this proportionate IDC must be reversed? What is the best example for post-supply discount? What is the best example for post-supply discount? Cash discount is the best example for post-supply discount. Let's take 1 lakh is the plant and machinery value. Rate of GST is 18%. If you pay within 15 days, 5% cash discount is allowed. This is the agreement. It is a post-supply discount. Na? Plant and machinery value 1 lakh, rate of GST 18%. If you pay within 15 days, 5% cash discount is allowed. Now, the point is here. How much IDC we need to reverse it now? On day 1, when invoice is generated, for how much value invoice will be generated? 1 lakh only, because we don't know whether it will pay or not. Therefore, 1 lakh on that 18, now it will be 1 lakh 18,000. So on day 1, if the buyer claims the IDC, how much amount he will claim? 18,000. Let us assume that he pays the amount within 15 days. Now what is the plant and machinery value now? 95,000. On that 18% means 17,100. I think it will come. By adding these things, it will be 1,12,100, I think. 17,100 or 17,300, ma? 95,000 into 18%. 17,100 is the amount. In this case, how much IDC you need to climb? 17,100. How much IDC you already climbed? 18,000. How much excess you climbed? 900. This 900 IDC is needed to be reversed in order to get 5,000 cash discount. This 900 IDC is needed to be reversed in order to get that 5,000 cash discount. Next one is no claim bonus in insurance, health insurance, etc. like that. In that case, definitely what is meant by no claim bonus? With respect to health insurance policy, in the previous year, you did not claim anything. In that case, as a appreciation or a gratitude, what he will do in the current year premium, let's say some 30,000 is there, they will offer you some 10% discount on that as a no claim bonus. Now you will pay 27,000 only. Now the question is here, this 3,000 is allowed as a discount or not? Answer is yes. It is a permissible deduction from value of supply. But in order to allow that, it must be disclosed in the policy document that 3,000 is given as a no claim bonus and GST is payable on the actual premium after deducting no claim bonus. In our example on 27,000, we are liable to pay the GST. That is the point. Next one. Staggered discount. What is meant by the staggered discounts, ma'am? What is meant by the staggered discounts? I told you that with volume, buy more, save more offers. Like Reliance Trends offers. 10% if you purchase 5,000, 10%, 10,000 purchases, 20%, 20,000 purchases, 30% discount. These comes under buy more, save more offers. They are technically known as staggered discounts. They are allowed or not allowed? Allowed. But what is the condition? It is a pre-supply discount. It is a pre-supply discount. Therefore, it must be indicated on the invoice. And what about year-end discounts? They are pre-supply discount or post-supply discounts? Post-supply discounts. That's why 3 conditions are needed to be satisfied. Then they are allowed. And what about the secondary discount, ma'am? What about secondary discounts? That is post-supply, but these discounts are not known at the time of contract. After initial contract, it will be given to you, and these discounts are not known at the time of supply. They are given due to the price revaluation or the expiry date was very near. In those cases, these secondary discounts will be given. These discounts are not known at the time of supply, therefore they are not allowed. Secondary discounts are not allowed. This is 15.3 topic. After the break, we will see the valuation rules. Okay, ma'am. So after completion of this 15.3, the next topic we need to see is 15.4. So when this 15.4 is applicable, ma'am? If one of those conditions that are prescribed in 15.1 are not satisfied, in those cases 15.4 will come into scene. So what does 15.4 deals with? Rules for determining the value of supply. So when one of the conditions that are prescribed in 15.1 are not satisfied, in those cases 15.4 will come into scene. So as per 15.4, what is the first rule number we need to see here? Rule number 27. When this rule number 27 is applicable? When this rule number 27 is applicable, when first condition fails, second condition fails. What is the second condition? Price is the sole consideration. What is meant by the word price is the sole consideration? 100% value must be in terms of money. If any non-monetary consideration was received, in those cases, rule number 27 will come into scene. Value of supply, where the consideration not wholly in terms of money. So it applies to barter system, where 100% non-monetary consideration, exchange, that means some part of the consideration involved therein is money. In those cases, rule number 27 will come into scene. How to determine the value as per rule number 27? Options for determining. What is the first thing we need to see? Open market value. What is meant by this open market value? For example, Dhoni has went to a saloon to have a haircut. He just went to Javed Habib. In that case, instead of giving the money, Dhoni gifted him a Rolex watch. In that case, it comes under barter system. In those cases, what is the taxable value? Open market value. What is meant by this open market value, ma'am? What is meant by this open market value? If the same service is provided by Javed Habib to somebody else, how much amount he receives 100% in money, that is known as open market value. Javed Habib provided the same service to Virat Kohli. For that, Virat paid him 10 lakhs. Then what is the open market value now? 10 lakhs is the open market value. On that value, you are liable to pay the GST. Sir, if open market value is not available, Javed Habib is exclusively doing that service to MS Dhoni. He is not providing to Virat also. In that case, what is the position, ma'am? In that case, what is the position? Option 1 fails. What is the second option there? Money value plus fair market value of non-monetary consideration. In our example, no money was given. In that case, What is the Rolex watch market value? That one will be the taxable value. Sir, if Rolex watch was signed by MS Dhoni, sir, then its market value cannot be determined. If the market value cannot be determined, then value of like, kind and quality. Just like Javed Habib, some other famous hairstylist will be there. Na? What they will charge, that amount will be considered. If there is one and only Javed Habib, there is no other famous hairstylist in India. In that case, identical or similar ones are also not available. Then rule number 30 or 31 will come into scene. First, open market value. If open market value fails, money value plus market value of in kind, that one also fails, like kind and quality, that one also fails, rule number 30 or 31. Next, what does rule number 28 deals with? What does 28 deals with, ma? Related party transactions other than agent. Related party transactions other than agent, rule number 28 will come into scene. What is the taxable value for this? Open market value. If open market value is not available, identical or similar ones. If identical or similar ones are not available, rule number 30 or 31. Here, related party transactions means holding company sold some goods to subsidiary company. In that case, they are related parties now. Straight away, we will jump to rule number 28. At what price holding company is selling the same goods to somebody else in the terms of 100% in money, that is open market value. If holding company is not selling to anybody else, in that case, just like this company, other similar or identical goods will be there. Na? Their market value will be considered. There is no identical or similar goods. Rule number 30 or 31. Next one. And there is two special points here with respect to rule number 28. You are having two options. One is follow this one. Second one is 90% of the price charged for like, kind and quality by the recipient to the unrelated customer. What is this? X sold the goods to Y. X and Y are related parties. Now Y is selling these goods to Z, who is the unrelated customer, for 100 rupees. Now in that 100, 90% will be the taxable value for the transaction between X and Y. That means in our example, it will be 90 rupees is a taxable value. This is option 1. Second option, if the recipient is eligible for full ITC, declared invoice value will be considered as open market value. That means here, Fine. So X limited was there and Y limited is also there. X limited and Y limited are holding and subsidiaries. Okay. X limited is a registered person as well as Y limited is also a registered person. They sold the goods for 1 lakh rupees and invoice value is 1 lakh, but open market value is 1,20,000. Now what is the taxable value now? You're having two options. You can consider normal 1,20,000 or recipient is eligible for full ITC being a registered person. What is the value that is shown in the invoice, ma'am? 1 lakh. 1 lakh will be the taxable value. Sir, in this case, department will get a loss now. No, because ITC also will be reduced now. Recipient will get lower ITC also now. So that's why it does not have any impact on government. Ma. Later on, when this fellow is selling the goods, Y limited, he will pay GST. Na. That's why if at all they are related persons and if the recipient is registered, that means B2B. If at all it is a B2B supply, then what is the value that is shown in the invoice will be the open market value. In our example, it is 1 lakh. On the 1 lakh, we will pay the GST. Next, rule number 29. What does rule number 29 deals with, ma'am? Principal and agent transactions. What does rule number 29 comes with? A principal and agent, ma'am. With respect to principal and agent transactions, what is the taxable value? Open market value. If open market value is not available, I told you, na, the principal is sending the goods to the agent. Agent is selling the goods to the unrelated customer. In that price, that means agent to unrelated customer price, 90% will be the taxable value. If at all it fails, rule number 30 or 31. Sir, what is this rule number 30? If rule number 27, 28, 29 fails, as per rule number 30, what is the position mark? 110% of cost of production will be the taxable value. If at all you produced it, if at all you acquired from the outside, then the acquisition price, what is the acquisition price? In that, 110% will be the taxable value. Sir, if rule number 30 also fails, then what is the position? If rule number 30 also fails, then its value shall be determined as per any reasonable means. If at all you are a service provider, directly instead of rule number 30, you can go for 31 because service provider cost is different. Let's say if we go to the saloon, what is the cost that will be there? Cost of the chair, cost of the AC, cost of the comb. Except that, and scissors. What is their cost will be? Proportionately you need to take it now. But hardly it will come some 50 to 60 rupees per customer. But somebody, if a famous hairstylist like Javed Habib, they will charge for, let's say, Allu Arjun. I think whenever I listen to that particular hairstyle, I can't remember the movie, they will charge him some 70,000 or 90,000 for that, per cut, per each cut. So what is the cost is incurring? 50 rupees on that 110%. Now it will be some 60 to 70 rupees. But what is the amount he charged there? 70. So with respect to service providers, cost will not be that much. It's purely personal skill that drives the price there. Services personal skill is the driving factor now. So that's why cost of production logic, cost of the provision logic will not be applied. In those cases, instead of 30, we will jump to 31. These are the valuation rules, ma. And next one is section 15.5. There ends 15.4. What is the next one, ma? 15.5. What does 15.5 deals with? 15.5 deals with notified services here, ma. With respect to these notified services, then it will have the overriding effect on 15.1. That means 15.5 will have a overriding effect on 15.1. In those cases, what is the valuation methodology that is prescribed in 15.5 will be applicable to the cases which are prescribed under 15.5. The procedure that is prescribed under 51 need not be followed. It is option to the registered person. What is the first thing that is covered there, ma? Lotteries. With respect to lotteries, what is the taxable value? How to compute the taxable value, ma? With respect to lotteries, how to compute their value? Lottery, whether it is organized by the state or authorized by the state, what is the taxable value here? See, face value of the ticket or price notified in the official gazette, whichever is higher on that 100 by 128. First one, what is the face value of the ticket? On the ticket, there will be some price now, 1 lakh, 2 lakhs, they will print. That one is face value. And what is the price that is notified in the official gazette? It means government will notify the lottery price in official gazette. Yes, if lottery is organized by the state. Best example for that is Kerala. In Kerala, the state government itself will run the lottery now. Therefore, what is the price that is notified in the official gazette? Or what is the face value of the ticket? Whichever is higher into 100 by 128, what is the thing we will get, ma? Taxable value. On that value, you are liable to pay the GST. Whereas, apart from that, so here again, by mistake, lottery just came. Apart from this, betting, gambling, horse races, like that, what is the taxable value, ma? What is the face value of the bet or amount paid into totalizator? What is meant by totalizator? With respect to horse races, one electronic device will be given to the bookmaker, ma. Based on that, you will know if you win, how much amount you will get, if you lose, how much amount you pay. All these will be displayed just like a pager-like instrument, this one. Okay, those things comes under totalizator. That means it is electronic device. You will make the payment into that particular device. Then that particular number hearts, if you win, you will get the money. That electronic device is known as totalizator. It will be there with the bookmaker. How much amount? Simply, ma, face value of the bet means if you wins 1:2 ratio. For 100, 200 you will get 1:2 means that is the thing now. In that case, what is the face value of the bet? 200. How much you win? That is the face value. 200. What is the amount paid? 100. Whichever is higher, then that one will be the taxable value. Next one. What is the second one, ma? Rule number 32. In that, what is the first case? Foreign currency exchange. I think you know these well better now already. Okay, ma. So with respect to foreign currency exchange, that means authorized money exchange, two options are there for you. Option 1, based on RBI reference rate. Option 2, percentage of gross amount charged. Are you remember these two, ma? Based on RBI reference rate, how to compute that? If RBI rate is available, then what is the taxable value? RBI rate minus banker rate into number of foreign currency units that were exchanged. That is the formula. RBI reference rate is available, the difference between RBI rate and banker's rate into number of units exchanged. In that case, what is the position, ma? Let's say RBI rate is RR. $1 is equal to 80 rupees. Banker's rate is $1 is equal to 79. Total $1,000 are exchanged. In that case, what is the taxable value now? So 80 minus 79 into 1000 ma, it will be 1000. Okay. Okay. Now what is the second one? Sir, if RBI reference rate is not available, then what is the position? If RBI reference rate is not available, then banker's rate into number of units. What is the banker's rate in our example? 79 into 1000, 79,000 into 1% of that amount will be the taxable value. It will be 790. Okay, ma? 790? 790, yes. So what is that, ma? Banker's rate into number of units that were converted. In our example, 79 into 1000, 79,000 on that 1%, that is 790 will be the taxable value. Sir, if at all it is a cross-currency transaction, sir. What is meant by cross-currency transaction? Dollar to pound or pound to dollar, like that. Neither of the currencies are Indian currencies. Let's say for $1,000, we just got some 750 pounds. $1 is equal to 80 rupees and 1 pound is equal to 100 rupees. These are the amounts that are given in the problem. In that case, what is the taxable value now? We need to convert these two into Indian rupees first. That is 80 into 1000. 80,000, 750 into 100, 75, whichever is lower, 75 into 1%, that is the taxable value. 750 it will be, I think. 750 will be the taxable value then. Neither of the currencies are Indian currencies. We need to convert both these currencies into Indian rupees. We need both these currencies into Indian rupees. In that case, whichever is lower into 1% will be the taxable value. This is option 1. What is option 2, ma? Percentage of gross amount. I think you know this. Up to 1 lakh. What is the amount? 1% subject to 250 minimum. And if at all the amount is more than 1 lakh, more than 1 lakh, less than or equal to 10 lakhs, then what is the taxable value? 1000 plus in excess of 1 lakh. How much amount is there? On that 0.5%. What is the next option? More than 10 lakhs, sorry. More than 10 lakhs. Then 5,500 into, sorry, plus 0.1% in excess of that 10 lakhs, subject to a maximum of 60,000. Those are the points that will be there, ma. On that, based on that, two options are there. Which one is beneficial for that person? Based on that, he will choose it. This is authorized foreign exchange transactions. Next one, with respect to flight. With respect to air travel ticket, what is the position, ma? If it all it is a domestic travel, 5% of the basic fare. If at all it is an international journey, 10% of the basic fare will be the taxable value. What is meant by the word basic fare? Flight charges minus charges and taxes. That means except transport charges, so many other taxes will be there under flight charges, ma. Like airport authorities or launch related, like that so many services will be there, ma. all those amenities related amounts must be excluded. What is the original transport cost? On the transport cost only commission will be paid. That's why basic fare is equal to total flight charges minus charges for other facilities and taxes. That is called basic fare. If it already is a domestic one, 5% of the basic fare. If it already is an international one, 10% of the basic fare will be taxable. Next one, with respect to insurance. What about the insurance, ma'am? Here, different valuation methods based on policy type. First policy type is saving policy. That means risk plus investment, both will be there. In that case, what is meant by savings policy? In our Telugu, nu poina, poka poina, you will get the money. That means even the policy holder does not die, still he will get the money. Lucky boy. He will get the money at the end of the policy period. Those policies are known as savings policy. In that, risk plus investment, both will be there. If breakup is available, breakup means how much amount that is there with respect to the investment, how much amount that is there to the risk. Separate breakup is there. In that case, on the risk portion, 100%, investment exempted. Let's say the premium value is 100. Breakup is available that 30% is for risk. In that case, what is the taxable value? 30 rupees. 70 rupees is exempted. Sir, breakup is not available, sir. Then what is the position? With respect to first year premium, how much amount, ma? 25% of the premium is taxable value. From second year onwards, 12.5% of the premium is the taxable value. Breakup is available, risk 100% taxable, investment is exempted. Whereas breakup is not available, first year premium 25% of the premium amount is taxable. For subsequent years, 12.5% of the premium amount is taxable. What about single premium annuity policy? What is meant by that? You will pay initially lump sum at first. Later on, when you get the age of 58, just like pension, you will receive on a monthly basis. And you will pay in advance lump sum, some 10 lakhs, 15 lakhs, 20 lakhs, how much amount you want to get. Based on that, this single premium annuity policy will be there. In that case, 10% of premium amount will be the taxable value. With respect to single premium annuity policies, 10% of value will be the taxable value. If it already is a 100% risk policy, sir, 100% of the premium is taxable. If it already is a risk policy, 100% of the premium will be taxable. That is with respect to insurance. Next one is second-hand goods. When the second-hand goods are there, margin scheme will be there. You are having two options. Option 1 and this is option 2. Option 1, margin scheme. What it will say? When you buy a car, let's say I purchased a car for 3 lakhs. I sold it for 3,50,000. GST rate is, let us assume that 10% for the sake of easy calculations. I'm having two options. When I purchase the car, if I did not claim the ITC, then what is the position? Even ITC is not availed, taxable value is equal to selling price minus purchase price. What is the selling price? 3,50,000 minus 3 lakhs. Now what is the taxable value? It is 50,000. You are liable to pay the GST, okay, at the rate of 10%. But second option, if you want to claim the ITC, the value will be as per 15.1. On the inputs, when you purchase, you will claim the ITC. When you are selling, output tax is payable. Output tax payable minus ITC. Net amount to be paid in cash. The same procedure we will follow. Two options. And there is a special provision for repossessed goods from the defaulting borrower. What is this? Let's say a car was sold to a person on 2024. The car was value is 10 lakhs. After paying some 5 installments, the amount is not paid by the concerned owner. Then the car was repossessed on 1/4/2024 and sold to somebody on 31st October 2024. Rate of GST is 18%. Now, what is the purchase price of the car? Anybody remembers the theory concept? What is the purchase price of the car now for the repossessing? That means for which period to which period we shall consider that 5%? 1/1/2024 to when it was repossessed 1st April 2024. When it was sold 31st October 2024. Which date will be considered now? Up to which date we shall consider now? Date of sale. Up to this date we shall consider how many months it will come. I think 10 months. 10 months means how many quarters, ma? 2.2. 2.5. 3.3 kada? 3.3 means 4 quarters it will be. Or part thereof also we shall round it off. Therefore, per quarter 5% we need to reduce. 4 into 5, 20%. 10 lakhs minus 20%. 8 lakhs will be the repossessed price. And I sold it for 9 lakhs now. What is the taxable value now? If ITC was not claimed, in that case 1 lakh will be the taxable value. And if it all ITC was claimed, normal procedure will be followed. That is the story. Next one. These are naam ke vaste redeemable vouchers. With respect to vouchers, what is the taxable value? Money value for which it is redeemed. Let's say face value of the voucher is 1000 rupees. They said that in Cucumber, which is besides Vajram Hotel, Cucumber is there, saloon. It was said that in Cucumber, definitely you will get the 2 spa services free for that coupon. Each coupon, generally the spa service in Cucumber is, for example, 600. I avail those 2 spa services. Now, what is the taxable value? What is the face value of the coupon? That means 1000 rupees worth purchases were there, 1000 rupees worth voucher was given for these 2 services. In that case, what is the taxable value? Okay, same day. And what is the taxable value? 2000. Only once we will pay. Double taxation will not be there. Na? Either face value or redeemable value. Only one thing shall be considered. That's why the department come up with a solution here. For redeeming that particular voucher, how much worth services, how much worth goods you are receiving, those market values shall be treated as redeemable value, even though face value is 1000 rupees only. But how many worth services actually you got? 1200. Therefore, what is the taxable value now? 2 into 600. 1200 will be the taxable value. That is what point. What redeemable vouchers are coupons. Taxable value is equal to money value for which it is redeemable. For which value we redeemed it. What is its market value? That value will be considered. In our example, its market value is 600 per each service generally. 2 services means 2 into 600. 1200 will be the taxable value. Next one is pure agent. When a person is acting as a pure agent, in those cases, those amounts will be excluded. For example, let's say Mukesh Ambani is having a small house, which is known as Antilla. Its construction cost is approximately 800 crores. Its market value is 15,000 crores now. Anil Ambani also wants to do the same thing. Anil Ambani is also want to do the same thing. That's why I approached the same construction contractor. I am ready to pay you 15,000 crores. Along with that, whatever the interior design that was there in my brother's house, same thing must be there here also. Then the builder replied, sir, I am not the one who just made that interior decorating, sir. Some other party done it. Then this fellow said, okay, approach him and ask him to do the work. On behalf of me, you go to him and meet him and pay him also. Later on, I will reimburse the entire amount to you. And as per the promise, 2,000 is for that interior decoration. Total 70,000 crores was paid by Anil Ambani to that builder. In that case, in the builder hands, how much amount is taxable? Is it 17,000 or 15,000? If at all the builder acted as a pure agent, then the 2000 will be excluded from the taxable value. Only 15,000 will be taxable. But further few conditions are required to be satisfied. When a person will be called as pure agent? I think 4 conditions now. Anybody remembers? What are the conditions for pure agent? First one, there must be a agreement to act as a pure agent. Okay. Second one, not only at the time of entering into the agreement, at the time of receiving the goods also, he should act as an agent. Third one, he should not use it for personal use. Fourth one, he should receive what he pays. He pays 2000, he must receive 2000 only. No profit margin should be added to that 2000. If all these 4 conditions are satisfied, this fellow will be called as pure agent. First one, there must be agreement to act as agent. Second one, not only at the time of entering into the agreement, at the time of receiving the goods also, what is the position? I should act as agent. Third one, he shall not use it for their personal use. Fourth one, he should receive what he pays. If all these points are satisfied, then what is the position, ma? He is a pure agent. The amount is not excluded. Once he is a pure agent, another 3 conditions are required to be satisfied, then only the amount is excluded. What are those 3 conditions that are required to be satisfied? First one, recipient must authorize the supplier to make the payment to the third party. Recipient means Anil Ambani must authorize the builder to make the payment to the interior designer. Second one, he should separately intimate them in his invoice, 15,000, 2,000 like that. Third one, it should not be a regular activity of that supplier. Supplier regular activity is here construction, but not the interior designing. If all these conditions are satisfied, then the 2000 value will be excluded. That is the point. Next one, ma'am. 34. Rate of exchange, it is not required for you. You can study on your own. For the goods, exchange rate will be notified by the CBIC. Services, GAAP, generally accepted accounting principles. As per rule number 35, value will be always inclusive of GST. For that formula already we know, that is the story, ma. There ends this value of supply. So ITC is allowed to the registered recipient. ITC allowed to the registered recipient. Sir, why unregistered persons cannot claim the ITC? Because there is no need to pay any output tax there. That's why only registered persons can claim the ITC. The next question is here. Sir, what are the conditions that are required to be satisfied in order to get the ITC? What are the conditions that are required to be satisfied, ma'am? 16.2. Those conditions are prescribed in 16.2. So, as per 16.2, what is the first condition that is there, ma'am? What is the first condition that is there? Possession of valid documents. This is the first condition. That means in order to claim the ITC, documentary evidence must be available. So, what are the documentary evidences that must be there? Tax invoice, and debit notes, tax invoice, debit note. Okay. So, I think tax invoice, you know that. What is meant by the word debit note? When actual supplied value is more than invoice value. Actual supplied value 120, invoice value 100. In that case, what is the difference? 20. For the 20, a debit note will be issued. Actual supplied value is more than invoice value, then a debit note will be issued. Or other prescribed documents. What are the other prescribed documents based on which we can claim the ITC apart from tax invoice and debit note? Bill of supply, no tax will be there now. Composition scheme, no ITC. Bill of entry it is. Bill of entry, imports as evidence. Apart from that, very good. RCM invoice, recipient will himself issue set. Based on that also ITC can be claimed. And ISD invoice. Any of these documents are submitted as evidence, then definitely we can claim the ITC. Next one. What is the second condition here? Supplier's GSTR1 should reflect in recipient GSTR2B. That means what is the data the supplier uploads in GSTR1? It will be reflected in GSTR2A of the recipient as purchases. Based on that, GSTR2B will be generated. So how much amount that is reflected in GSTR2B, up to that extent only you can claim the ITC. And this one is there, but practically and theory also, it is not implemented. No? In now GSTR2B is now divided into two parts. One is restricted ITC, second one is unrestricted ITC. What is there in unrestricted ITC? Up to that extent only you can claim the ITC, but those prescribed points are not notified till now, you can ignore it. Next one. In order to claim the ITC, what is the second condition? Ma? The goods or services must be received. Actual receipt of goods or services is required. That means in books of accounts, we have entered that on October 31st. We made the payment. We are having the documentary evidence also. But what is the position? Ma? We are unable to claim the, but we received the goods on November 1st. Every accounting process was completed on October 31st, except the goods are received on November 1st, next day. 1 day gap is there. In October 1st to November 1st. So in that case, what is the position? Ma? In which month we can claim the ITC? October or November? Actual receipt of the goods is required. Even though every accounting process is completed in the month of October, when you received the goods in the month of November, therefore in the month of November only we can claim the ITC. Even though remaining procedures are completed in the month of October, we can claim the ITC only in the month of November when the goods are received. The one and only exception to that is bill to ship to model. What is meant by bill to ship to model? Order will be given by one person, but goods are going to be delivered to some other person. Goods are going to be delivered to some other person. Best example, Mastermind's Guntur ordered some goods that are going to be delivered to Hyderabad branch. Order will be given by Guntur, bill to Guntur, ship to Hyderabad. That is called bill to ship to model. In this case, who will get the ITC, Guntur or Hyderabad? In the case of bill to ship to model, who can claim the ITC? Guntur or Hyderabad? Guntur only. Exception means even though the goods are received by Hyderabad, invoice will be in the name of the Guntur. Guntur can claim the ITC. Sir, if the goods are going to be received in installments, then what is the position? When we receive the last installment, then only we can claim the ITC. Next one is payment of tax by the supplier. That means recipient paid the tax to the supplier, but supplier failed to make the payment to the government. Is it possible for the recipient to claim the ITC? No, but sometimes it may happen like this. Supplier filed GSTR1, reflected in 2B of the recipient. Based on 2B, recipient filed the 3B, but supplier did not file GSTR3B. Here, there is a possibility that time was given up to next financial year, September, to rectify the mistake by the supplier. In the next financial year, September also, the supplier did not rectify the mistake. Then within 2 months, October and November, recipient need to reverse the ITC. No interest is needed to be paid. Then on or before those 2 months also, he did not make the payment. Then the entire ITC is needed to be reversed from day one when you claimed the ITC at the rate of 18% per annum. This is the story you need to remember. Supplier must make the tax to the government to claim the ITC. As you see, provisional ITC can be taken initially before matching on common portal. If did not match, supplier need to rectify the mistake. Otherwise, recipient is needed to reverse the ITC. So whatever the things I told you, even though you did not remember, please remember this sentence. Those are practical ones I told you. If you have done the articles, you will come across these things. Otherwise, remember the provisional ITC sentence. Okay. Next one. Filing of return by the recipient. What is the return recipient need to file in order to confirm the ITC? GSTR 3B. And now we come to this 180 days rule. That means it is a credit sale. In that case, we are having the documentary evidence. We received the goods, but We did not make payment to the seller. Is it possible to claim the ITC? Yes, but from the date of invoice, within 180 days, we must make the payment. Otherwise, whatever the ITC we claimed previously, it must be reversed along with interest at the rate of 18% per annum. For that, there are few exceptions. That means in these cases, that 180 days rule will not be applicable. What are they? RCM purchases, deemed supplies, supplier obligation was met by the recipient. In these three cases, the concept of 180 days rule is not applicable. There is no need to reverse the ITC. RCM purchases, deemed supplies, supplier obligation was met by the recipient. In these three cases, the concept of 180 days rule will not be applicable. Why, ma? Very good. With respect to RCM, 100% payment will be made by the recipient. And deemed supplies, no consideration. And supplier obligation was met by the recipient means recipient already paid to third party. Na? Then again, there is no need to pay to the supplier. Remember, 20 rupees, 80 rupees. 20 rupees already paid on behalf of the supplier there. That is the point. Next one is, what is the time limit for claiming the ITC, ma? What is the time limit? This will be there in 16.4. What is the time limit to claim the ITC? What is the general time limit? Next financial year, November 30th, or date of annual return, whichever is earlier, with respect to 24-25. Whatever the purchases you will made, 1/4/2024 to 31/3/2025, whatever the purchases you will make, the cutoff date to claim the ITC will be November 30th, 2025, or date of annual return, whichever is earlier. That is the cutoff date to claim the ITC. But this rule is applicable for first time availing the ITC. For the re-availing the reversed ITC, the 16.4 time limit will not be applicable. 16.4 time limit is for first time claiming the ITC. First ITC was claimed, subsequently it was reversed. Now you want to re-violate, then this 16.4 time limit will not be applicable. No time limit for re-availing the ITC reversed due to non-payment within 180 days. Can be re-availed upon subsequent payment to the supplier anytime. He pays, you can, after 5 years, yes, you can claim it. After 10 years, you can claim that. Okay, ma. There is no time limit for re-availing the ITC. That 16.4 time limit is only for claiming the ITC. Okay, ma. First time availment only 16.4 is applicable. Once ITC was claimed, it was reversed. Subsequently, you want to re-violate, 16.4 time limit will not be applicable. And this is 16.3. What does 16.3 deals with, ma'am? Capitalization of tax component, restriction on ITC for capitalized tax. ITC cannot be claimed if tax component is capitalized. That means it applies when the depreciation is claimed on the tax component under income tax. That means 100 rupees is the value, tax is 110. You are claiming depreciation on total 110, then this 10 is not allowed as ITC. If at all you are claiming depreciation only on 100, the 10 rupees is allowed as ITC. That means no double benefit is allowed. Either you can claim the depreciation or the ITC. So that is the point you need to remember, ma. Okay, ma. Tomorrow we'll say. Today we'll close the session, ma. I need to go. So up to 16 it was completed, ma'am. From 17 onwards, we'll start, I think, 9 to 1:15. Okay, ma'am. So I think in the previous session, we started the topic of ITC. In that 16.1, ITC is allowed only to a registered person. And second one, 16.2, the conditions for claiming the ITC. So what are the conditions for claiming the ITC, ma'am? 5 conditions I think we discussed. First one, documentary evidence. And what is the second one, ma'am? Goods must be received. Third one, Recipient must file GSTR 3B. Supplier must pay the tax to the government. How many number of invoices supplier uploads in GSTR 1 and reflected in GSTR 2B of the recipient? Up to that extent only ITC is allowed. After that 16.3. If you claimed the depreciation, no ITC. Claimed the ITC, no depreciation. So next 16.4. What is the maximum time limit to claim the ITC? Next financial year, November 30th or date of annual return, whichever is earlier. Up to that point, we just completed. That means there in section 16. Now we need to see the 17 related task. So what is the next topic we need to discuss here? Apportionment of ITC for mixed supplies. That means we are talking about section 17 now. So apportionment of ITC for mixed supplies, here you can observe for which purposes we can use this particular what we can say ITC. If at all it was, that means the product is exclusively used for non-business purpose. That means 100% it was used for non-business purpose. ITC allowed or not allowed? Not allowed. Exclusively for taxable supplies. See, this is exclusively for non-business and this is exclusively for taxable supplies. If at all it was used exclusively for taxable supplies, 100% ITC is allowed. Sir, if at all it is exclusively used for exempted supplies, sir, then also ITC is not allowed. Exclusive exempted supplies, ITC allowed or not allowed, ma'am? Not allowed. Sir, if at all it was used for both taxable and exempted supplies, then it is called as mixed supply. Then if at all it is input, rule number 42, and with respect to capital goods, rule number 43 will be applicable to divide those amounts. This is section 17.1 and 17.2 story. This was a mixture of 17.1 and 17.2. This is 17.1 plus 17.2. That means exclusively for business purpose, ITC is allowed. Non-business purpose, ITC not allowed. In the business purpose, exclusively used for taxable supplies, ITC allowed. Exempted supplies, ITC is not allowed. Next one, an important one, that is 17 subsection 5. What does 17 subsection 5 deals with? What does 17.5 deals with? Blocked credits or ineligible ITC. That means even though it is used for business purpose, even though it is used for taxable supplies, but still we cannot get the ITC. Those are the cases that are covered under 17 subsection 5. So what are those cases? We will see one by one. First one is motor vehicles and conveyance. In 17.5, what is the first point? Motor vehicles and conveyance. Here, what is the point? ITC is restricted on the vehicles for transportation of persons with less than or equal to 13 seats. Exceptions for specific business uses like further supply or passenger transportation. Now come to this point here. So with respect to motor vehicle, we need to divide the motor vehicle into 2 points, which is used for person transportation, goods transportation. If at all it is goods transportation, 100% ITC is allowed. If at all it is persons, then we need to check what is the capacity, seating capacity more than 13. What is the position? 100% ITC allowed. If the seating capacity is less than or equal to 13, general ITC not allowed. But for that, 3 exceptions are there. What are those 3 exceptions? Anybody remembers? First one, inward supply, outward supply is the same. Second one, you are using it for the business of transportation of passengers. And third one, driving school. In these 3 exceptional cases, ITC is allowed, even though the seating capacity is less than or equal to 13. If the seating capacity is more than 13, 100% ITC is allowed. Same point is applicable to vessel and aircraft also. Generally, with respect to vessel and aircraft, ITC is not allowed. For that now, 4 exceptions will be there. Inward supply, outward supply is the same. Transportation of passengers, transportation of goods, and with respect to flying school, with respect to vessel, navigation school. So these are the exceptions. In these exceptional 4 circumstances, with respect to vessel and aircraft, ITC is allowed. In the rest of the cases, ITC is not allowed. This is the first point, motor vehicles. Okay, ma? The next point is here. Sir, what about the services relating to vehicles? Services, repairs and maintenance, insurance, general services. Regarding them, ITC is allowed or not allowed? Very good. If on the motor vehicle ITC is allowed, on the services also ITC allowed. If on that motor vehicle ITC is not allowed, on the services also ITC not allowed. Take example, Masterminds previously used nano car to transport the parents from main campus to Palakalur Santriketan. Okay, in this case, on the nano car, repairs was incurred by the Mastermind's management. On that repair, ITC is allowed or not allowed? Not allowed. Allowed or not allowed? Not allowed. Why? If on the motor vehicle ITC is allowed, on these repairs also ITC allowed. Nano car seating capacity less than or equal to 13. In that case, ITC allowed or not allowed? Because it does not fall under any of those exceptions. Therefore, on the motor vehicle, ITC is not allowed. Therefore, on the repairs also ITC not allowed. What about the repairs incurred on Mastermind's bus? Why it is allowed now? Seating capacity is more than 13 with respect to bus. Therefore, on the bus ITC is allowed. Therefore, on the services also ITC allowed. Okay. Next point is food and beverages and personal services like health services, cosmetic and plastic surgery, beauty services, health insurance, like that. Those activities, ITC is allowed or not allowed? Generally, ITC is not allowed, but for that, 3 exceptions are there. First one, inward supply, outward supply is the same. What is the second one? As a part of composite supply or a mixed supply, it was provided. And third one is statutory obligation. In these 3 exceptional cases, with respect to food and beverages and whatever the personal services I told you, on them ITC is allowed. So what is this inward supply and outward supply is the same? Let's say Masterminds are actually provided you, as I just want to take you to a picnic. You just went to a picnic and catering services was given to Hotel Sindhuri. In this case, MM is able to claim the ITC on catering services to Sindhuri there. Why? The inward supply, outward supply must be the same. That means, what is the inward supply of MM? Catering. What is the outward supply? Coaching. In that case, ITC is not allowed. Say, for example, Hotel Sindhuri is conducting a food festival. It gathered food from so many places, from Matharipuram paper sweet, Bandar laddus, Godavari non-veg pickles, and Nellore malai kaja, Tapeshwaram Martha kaja, Kakinada kaja, like that, whatever the other items are there. From what is the famous item? Rayalaseema Uggani Bajji, Rajahmundry rose milk, like that. Some famous items which are there, every food item was actually purchased by this Hotel Sindhuri in order to conduct the food festival. On these items, Hotel Sindhuri is able to claim the ITC. Yes. Why ma? Inward supply, outward supply is the same. What is inward supply? Food. What is outward supply? Food. ITC is allowed. And next one is as a part of composite or mixed supply. Take example with respect to airlines. Food provided by airlines. It is a composite supply. Even though inward supply, outward supply is not the same, because you can't stop the flight in the middle of the journey for the sake of having a lunch, then it will be a permanent and last lunch for you. So in that case, definitely it is not possible. So therefore, that food items that are supplied as a part of composite or mixed supply, ITC is allowed. Next one, statutory obligation. If the government says that you must provide some health services to that person like that, in those cases, ITC allowed. What is the next one? Works contract. What is meant by works contract? Labor. Works contract means construction of a immovable property. ITC is not allowed for the construction of immovable property. Exception for that is planted machinery or for further supply of works contract. That means if the end result is immovable property, then definitely ITC is not allowed. Exceptions, planted machinery. That means even though planted machinery is an immovable property, but still we can claim the ITC. Take the example of blow-room machinery, which is blow-room machinery is used in spinning mills, which are there in here to convert this cotton into yarn. Each machine will be for this room at least 4 to 5 times it will be. Once it was installed, is it movable or immovable? Immovable, but still we can claim ITC on planted machinery whether it is movable or immovable. But whereas with respect to buildings, etc., buildings, cell phone towers, pipelines outside the factory, all these items ITC is not allowed because they are not planted machinery. So other than planted machinery, on any immovable property, ITC is not allowed. And another word is also used, or further supply of works contract. What is meant by this further supply of works contract? Your main business is construction itself. You are making the construction for the sake of your clients. In that case, what is the position? ITC allowed or not allowed? Allowed. Further supply means your main business is construction itself. In those cases, ITC is allowed or not allowed? Allowed. Next one, self-construction. ITC is not allowed on the goods or services used for own construction. Best example for that is Masterminds. Masterminds, Pawnputra campus, Balaji campus, all these are own campuses, means self-constructed campuses. But MM is using it for business purpose. Is it used for taxable supplies? Yes, coaching service is taxable, na? So definitely it is used for taxable supplies. Then for the construction of this building, MM has purchased sand, iron, cement, wood, so many items, na? Is it possible for the MM to claim ITC on them? Answer is no. That is the point. What is exception? But sometimes the revenue repairs are there. Capital repairs are capitalized and ITC is not allowed. Any repairs that are incurred to the building, if at all it is debited to the P&L account, ITC is allowed. In the problem, they will use the word like this: repair to the building, debited to the P&L account, some 10,000. In that case, where it was debited, P&L account. In that case, ITC is allowed or not allowed, Definitely ITC is allowed. Next one. Other ineligible items like goods or services under composition scheme. With respect to goods or services composition scheme, why ITC is not allowed, Why ITC is not allowed for the goods purchased under composition scheme? Why? Why ITC is not allowed on the goods which are purchased under composition scheme? The reason is you are not paying any tax. Supplier is paying out of his own pocket. That 1%, 5%, 6% was paid by the supplier himself. You means the recipient is not paying anything. If you pay something, then you will get the ITC, na? You are not paying anything. Supplier needs to pay that composition tax out of his own pocket. Recipient will not pay anything. In that case, is it possible for the recipient to get the ITC? No. That is the point. Next one, personal consumption. ITC not allowed. Goods lost, stolen, given as free samples. Already claimed, you need to reverse it. Generally, in these cases, ITC must be reversed. Because goods lost before reaching the factory, that is okay. Stolen before reaching the factory, that is okay. Once reached the factory, we claimed the ITC. Subsequently, they are lost, stolen, destroyed, written off in the books of accounts, or given as free samples. In all these cases, whatever the ITC we previously claimed, it must be reversed. That is the point. Next one. Tax paid under fraud, 74, 129, 130. These are the cases. Tax paid under these sections are not eligible for ITC. Why? Why tax paid under 74, 129, 130 is not allowed as ITC? What does 74 deals with? Fraudulent cases, show cause notice. What does 129 deals with? Seizure of the goods. What does 130 deals with? Confiscation. What is the difference between seizure and confiscation? Seizure? Mm. Mhm. Again, you are saying that seizure and confiscation are same. Seal that one. What is your answer? Seizure and confiscation. First one is correct, you said, but second one, okay. That means with respect to goods are seized, possession will be with the department, but ownership still lies with registered person. Next stage is confiscation. In that confiscation, possession as well as ownership, both will be shifted to the government. That is the difference. These are severe crimes. In these severe crimes, whatever the tax you will pay, if at all it is allowed as ITC, it is not a punishment, it will become entertainment for the registered person. Because first he will do the fraud. If at all he was caught, he will pay the tax and will claim the ITC. Then what is the punishment there to him? Everybody first what they will do then? First they will try to escape from the liability. If at all they were not caught, then no issue. They were caught, they will pay and they will claim it as ITC. So there is no punishment. Then it is a punishment for the department to find out all these people. That's why in order to overcome these negative consequences, whatever the tax you pay under 74, 129, 130, these are severe crimes. That's why ITC is not allowed. Okay. Next point is ITC in special circumstances. That is, there ends the 17.5 important, except I just forgot to mention NRTP. That is the only point I just missed. With respect to NRTP, and what is the full form of NRTP? Non-resident taxable person. When ITC is allowed, when ITC is not allowed. When simply imported goods, ITC is allowed. Local purchases, ITC not allowed. With respect to NRTP, imported goods, ITC allowed. Local purchases, ITC not allowed. So these are the important points. Not important, almost 90% of the points I just covered in 17.5 blocked credits. Next section is section 18. In section 18, the important points are 18.1, 18.4 and 18.6 majorly. They are asking in the exam. What does 18.1 deals with? This is 18.1 majorly. New registrations, whether it may be voluntary registration or normal registration. This is 18.1. And composition scheme to regular scheme. This is also 18.1. And exempted supply to taxable supply. This is also 18.1. We'll discuss what are these points. With respect to 18.1, it deals with special cases. One is normal registration. Second one is voluntary registration. What is the difference between normal registration and voluntary registration? In normal registration, you are required to take the registration either as per 22 or as per 24. Then it is normal registration. What is meant by voluntary registration? Even though you are not liable either as per 22 or as per 24, but still you are claiming, you are going for RC. then those type of registrations are known as voluntary registrations. From the date when you got the RC, you are required to pay the output tax now. That's why whatever the closing stock that was there on the preceding day of that particular date of RC, whatever the closing stock that of raw materials, semi-finished goods, finished goods, definitely we can claim the ITC. With respect to normal registration and voluntary registration, the closing stock which was there on the preceding day of date of RC, you can claim the ITC. Which closing stock, ma? Raw materials, semi-finished goods, finished goods, we can claim the ITC. And what about this one here? Second case is composition scheme to normal scheme and exempted supply to taxable supply. Previously, it is a composition supply. ITC allowed or not allowed? ITC not allowed. Now we shifted to normal scheme. ITC allowed or not allowed? Allowed. In the same way, previously it is exempted supply. ITC allowed or not allowed? Not allowed at that time. Now we shifted to taxable supply. Allowed or not allowed? Yes. Then in this case, whatever the closing stock that was there on the preceding day of the date of conversion, you are eligible to claim the ITC. But the point is here, you are able to claim on the raw materials, semi-finished goods, finished goods, along with that on the capital goods also, definitely you can claim the ITC. In the previous case, only you are able to claim on raw materials, semi-finished goods and finished goods, ma. Whereas with respect to this composition scheme to normal scheme or exempted supply to taxable supply, definitely we are able to claim the ITC. Along with inputs, even on capital goods also. Sir, how much ITC is that is allowed on this capital goods, sir? How much tax you paid from that? 5% per quarter or part thereof will be reduced and remaining amount is allowed as ITC. Let's take that plant and machinery value is 1 lakh, rate of GST 18%. After using it for 1 year, 6 months, now we shifted to normal scheme. How much ITC that is allowed now? How much tax you paid previously? 18,000. 1 year, 6 months means how many quarters, ma'am? 6 quarters, 16 to 5, 30%. 18,000 into 30%, 5,400. Therefore, 12,600 is allowed as ITC. 12,600 is allowed as ITC. This is with respect to 18.1. And 18.2, one single line will be there. If at all you are able to recollect. What is that 18.2? You are able to claim the ITC on closing stock, that is okay. But from the, say for example, RC was granted on 9/11/2024. The date of invoice should fall within 1 year from the date of RC in the preceding. Say in our example, 10/11/2023 to 9/11/2024. If the date of invoice falls in between of those closing stock items, then only ITC is allowed. Any earlier date, that means after 1 year, definitely ITC is not allowed. Definitely ITC is not allowed. That is 18.2. And next one is 18.4. What does 18.4 deals with? So what does 18.4 here deals with, ma? Last two in 18.1, we need to reverse it. What are the last two? Composition scheme to normal scheme, exempted supply to taxable supply. Reverse them. Taxable supply to exempted supply, normal scheme to composition scheme. Now it is 18.4 then. 18.1 last 2 point, if you reverse them, 18.4 will come into scene. Then previously ITC is allowed. Now what is the thing you need to do? You need to reverse the ITC along with raw materials, semi-finished goods, finished goods, along with them, even on capital goods also, we need to reverse the ITC. Sir, how much ITC we need to reverse? Anybody remembers with respect to 18.4, capital goods IDC reversal, what is the procedure? There is a special procedure. As per GST law, estimated lifetime is 5 years. In terms of months, it will be 60 months. For how much period it will remain unutilized? In that particular proportion, IDC is needed to be reversed. Same point, that is 1 lakh, rate of GST 18%, 1 year 7 months, we used it for it, 6 months change it to 7 months. Now how much IDC we need to reverse now? That is 18,000 into how many months we utilized? 1 year 7 months means I think 19 months now. How much period unutilized? 60 minus 19, that is 41. Into 41 by 60, how much amount we will get, ma'am? 12,000? 800? 300. This is IDC you need to reverse. This is a special procedure that is there in 18.4. This is a special procedure as per GST law. Estimated life of the capital asset is 5 years. In terms of months, it will be 60 months. So how much period it remains unutilized? In that particular proportion, we need to reverse the ITC. That is the point. Next one is 18.6. What is this 18.6? If the plant and goods or plant and machinery is sold as second-hand plant and machinery, in those cases, how much IDC we need to reverse? That is 18.6. If the plant and machinery is sold as second-hand plant and machinery, then how much IDC we need to reverse? So here, let us assume that plant and machinery value 10 lakhs, rate of GST 18%. After using it for 1 year 9 months, we sold it to 6 lakhs. How much IDC we need to reverse now? First point, how much IDC you claimed previously? 1,80,000 minus per quarter or part thereof is needed to be reduced. 1 year 9 months means I think 7 quarters now it will be 7 into 5%. 35% in 1,80,000. 1,80,000 into 35%. 63,000. After reducing that, 1,17,000 I think it will come. This 1,17,000 will be compared with GST to be paid on sale value. What is the sale value? 6 lakhs into 18%. I think how much amount? 1,08,000? 1,08,000. Whichever is higher? 1,17,000 is the amount we need to reverse. This is 18.6 month. So if the capital goods are sold as second-hand plant and machinery, then how much ITC we need to reverse? Previously claimed ITC minus per quarter or part thereof 5% is needed to be reduced. This amount will be compared with GST to be paid on sale value. Whichever is higher, that is the amount we need to reverse. That is the theory part. I think we just written there. See, these are the special cases what we have discussed. 18.1, new registration, whether it may be mandatory registration, that is normal registration, or a voluntary registration. On which items ITC is available? In case of registrations, stocks held on the day before liability to pay the tax arises simply before date of RC. Only on the stock ITC is allowed. And see, this is also transition from composition scheme to regular scheme, means composition scheme to normal scheme. See, ITC is available on inputs, semi-finished goods and finished goods. Along with them, even on capital goods also ITC is allowed. So here, the point is with respect to 18.1. Reduced ITC. Reduced ITC on capital goods means here 5% per quarter or part thereof. Even this point and 5 years meaning is the same. Per quarter 5%. Per annum? When it will become 100%? That's why estimated life of the capital asset is 5 years. But the wordings used is different, but the concept remains the same. Okay. Next one. Exempted supply to taxable supply. Previously it is exempted supply. Now it was converted to taxable supply. Similar provision to composition scheme to normal scheme. Next, reversal of ITC. Required when transiting to composition scheme. This is 18.4. Or cancellation of registration or taxable supply becoming exempted supply. In these cases, along with the inputs on the capital goods also we need to reverse the ITC. Okay, ma'am, that is the point. So, but here what is the procedure? Estimated lifetime is 5 years, that is 60 months. In proportionate to unutilized months, ITC will be reversed. That is a point you need to remember. And rule number 42, you need to study on your own. Time constraint is there. Generally, they are not asking any problems in CMA final. In fact, actually, in the starting, I just had a thought that I will teach you, but in marathon. But time constraint is there. Therefore, rule number 42 and 43, nothing will be there. Only the procedure. Simply, I will tell you the overview in 1 minute. Let us assume that. Let us assume that 100 rupees is total tax that is you paid input tax. And in that, let us assume that 10 rupees is for exclusively used for non-taxable supplies. And 10 rupees is used for exclusively exempted supplies. And 10 rupees is a blocked credit. And 40 rupees is actually used for exclusively taxable supplies. Okay. Now, how much ITC that is going to be created to electronic credit ledger now? In the total 100 rupees you paid, how much amount that will be created to electronic credit ledger now? 70. Very good. Because on these three, it will not be created to the electronic credit ledger. Now, electronic credit ledger 100 minus 30, 70 will be created. In the 70, if you observe, exclusive taxable supplies, how much amount? 40. So in that case, mixed purpose, how much is amount? 30. That is common credit, which is used for both taxable as well as exempted supplies. Now in this 30, we need to segregate which one is for taxable supply and which one is for exempted supply. How to do that? Let us say that 100 crores is the exempted supplies turnover in the problem. Total turnover is 1000 crores. 1000, I mean, total turnover is 1000. In that exempted supplies turnover is 100. Now we are having the common credit of 30 rupees. How to divide it? Very good. So 30 into 100 exempted supply by total turnover. How much amount we will get? I think 3. 3 na? 3 or 0.3? 3 na? 3. So 3. 3 is amount that is used for exempted supplies. But law says that sometimes there is a possibility that in this common credit, some portion can be used for personal use also. Na? But we cannot segregate that. So therefore, law says that 5% of common credit is for personal use, a notional value. 5% of the common credit will be treated as it is used for personal use. But this clause will be used only if the problem is having the words like in the common credit it was used for personal use, like that. If the problem does not use the word personal use, then this 5% concept need not be applied. This is the story. Now 5% means how much is the amount? 30 into 5%, 1.5 I think. 1.5. So in the total 30, now what is taxable supplies relevant? What is exempted supply and non-taxable supply relevant? Exempted supply 3 plus 1.5. 4.5 is for this ineligible credit and this one for 25.5. 3 plus 1.5. 4.5 is for exempted or non-taxable. 30 minus 4.5. How much amount you will get? 25.5. And how much is the eligible ITC now? 40 plus 25.5. This is rule number 42. So we'll see. This is rule number 42, ma'am. See, with respect to total input tax on the inputs and input services is divided into categories. Like categories includes input tax used exclusively for non-business purpose, exempted supplies, unblocked credits, and remaining IDCs credited to electronic credit ledger. So that is the point I told you now. What the law says now as per your law, T is equal to total input tax credit, and T1 is equal to non-taxable supplies or personal use. T2 is equal to exempted supplies. T3 is equal to 17.5 blocked credits. T4 is equal to exclusive taxable supplies, they will say in rule number 42. Now, how much amount that is going to be credited to this electronic credit ledger, ma'am? How to calculate that? That is C1. C1 is equal to T minus T1 plus T2 plus T3. We will get the C1. Next, based on this C1, what is the next thing we need to calculate, ma? C2. With respect to these things, I just wrote that. Yes. Next one is C2. How to calculate the C2? T1 minus T4. What is T4? Taxable supplies exclusively. Next, we need to find out exempted supplies proportionate amount and this personal use amount. They are known as D1 and D2. D1 means disallowed. Okay, D1. What is D1, ma? Exempted. What is the formula I told you? C1 is equal to C1 into E by F. C1 means common credit into E means exempted turnover. F means total turnover. D2 is equal to 5% of C1. Now what is the next thing we need to do? So C1 computed, C2, D1, D2 was calculated. Now what is the thing we need to do? How much is the eligible IDC in the common credit? That is what it will be denoted as. That means 30 minus 4.5, 25.5 is there now. What is the formula for that? That means I think what it will be called as C3. C3. Or in this case, what is the amount? That is C2 minus D1 plus D2. What is C2, ma? In our example, 30. Sorry. Yes. So C2 minus D1 plus D2. What is D1, ma? In our example, I think it is 3 plus D2 1.5. And what is the eligible IDC? T4 plus C3. This is the formula, ma. I think you can do on your own, but I told you the overview because of time constraints. You please go through them. Is job work in your syllabus? Section 18 is over. Job work is there in your syllabus, ma? Section 19. It was there in CA final, but I can't remember with respect to CMA final. It was there? Okay. Some important points with respect to job work here. Okay. What is meant by job work, ma? Treatment or process applied on another person's goods. That means if the goods belonging to somebody else, but we are carrying the process. I told you the example of mobile repair. On our mobile, the mobile technician will perform the service of mobile repair, ma. Then definitely it will come under job work. Job work is the supply of the good or a supply of service. Supply of service. Job work is the supply of service. And principal. Who is principal? The person who sends inputs or capital goods to the job worker is known as principal. And principal is the person who is responsible for maintaining the records and issuing DC. What is meant by the word DC? Delivery challan. When it is needed to be issued? Whenever there is a physical movement of the goods for the reasons other than supply, in those cases it will be what is the document we need to issue? Ma? DCA, delivery challan is needed to be issued. Okay. Next one is job work. The person who works on the goods sent by the principal is known as job worker, and this fellow is the supplier. Job worker is the supplier, principal is the recipient. So these are the basic terminology in job work. Next one is with respect to ITC on the goods sent for job work. So first point, sir, we can get the goods in two ways. One, the principal initially will purchase the goods. Those goods will reach the factory of the principal. Later on, they will be sent to the job worker. Later on, they will be sent to the job worker. The goods are received by the principal, then they are sent to the job worker. This is one way. Second one, the goods are built to ship to model. Goods are purchased by the principal, but they are delivered to the job worker place. In both cases, who will get the ITC? Principal only. That is the first point. ITC can be availed on the goods directly sent to the job worker. See, applicable for the goods sent directly or through supplier. That means whether it is a built to ship to model or a normal one. In both cases, who will get the ITC? Principal will get the ITC. But the point is, once goods reached the factory of the principal, principal will get the ITC. Now the goods are moving for job work. That means the goods are moving outside the factory. Generally in that case, what is the thing you need to do? You need to reverse the ITC. Because the goods are leaving the factory. But with respect to job work, it is not required. Supply the goods by these skill the factory needs reverse ITC. It must be reversed. Not only for the reason of supply. For any reason, that means with respect to goods lost, stolen, destroyed, free samples, why you are reversing the ITC? It is not a supply, For this case also, the removing means a removal always, it should not be meant that it should be for supply. Some other cases can also be there. So that's why whenever there is a physical movement to the outside factory, then ITC must be reversed, what you have taken previously. Or any output tax is payable, it will be reduced from that amount. Okay. But with respect to job work, when the goods are sent by the principal to the job worker, there is no need for reverse of ITC. But there is a time limit to get back the items. Then there is no need to reverse the ITC. What are the time limits? With respect to inputs, must be received within a period of 1 year. Sir, is it possible to extend that? Yes, definitely it is possible to extend that. It can be extended by another 1 year. That means maximum within a span of 2 years, these inputs are received, then well and good. With respect to capital goods, what is the time limit? Capital goods must be received back within a period of 3 years. Is it possible to extend that? Yes, for another 2 years. But whereas with respect to molds, dies, jigs, fixtures, tools, this rule will not be applicable. This rule will not be applicable. That means generally they will have very short span of life, hardly less than 1 year. So practically it is not possible to bring them back because they will be sold as a scrap or they will be their estimated lifetime will become 0. With respect to molds, dies, jigs, fixtures, tools, definitely short shelf life will be there. Therefore, there is no need for returning of those items to the principal. That's why even though they are not returned, there is no need to reverse the ITC. Okay. The next question. Sir, what are the consequences? What are the consequences of not receiving back the goods? That means if the above the time limits, the goods are not received, then what is the position? If not received within the prescribed time, deemed as a supply by the principal to the job worker, and principal must pay the tax along with the interest from the day when they are sent to the job worker. Let's say with respect to capital goods sent, extension was given for a period of 2 years also. After 5 years also, the goods are not received back. Then from which date you need to pay the interest? 5 years back. The date when they are sent to the job worker, it is deemed to be a supply. Then in that case, from that particular date, you are required to pay the interest. Sir, later on, if they are after 5 years, after 3 years, or with respect to inputs after 2 years, they are received back. After 2 years, they are received back. In that case, what is the position? If received later, they are considered as a supply by job worker to the principal. After the expiry of the time period, if the goods are removed, after the expiry of the time period, the goods are again received from job worker by this principal. In that case, it will be treated as a supply by job worker to the principal. Again, you are liable to pay the tax. That is the point. Okay. And DC and e-way bill, I told you, whenever there is a physical movement of the goods, the reason is other than supply. What is the document that must be issued? DC. And if the consignment value is more than 50,000, e-way bill is also required. E-way bill is required for interstate physical movement even value is less than 50,000. With respect to this case, even though the value is less than 50,000, e-way bill is mandatory. And who is required to generate the e-way bill? It's whose responsibility? E-way bill generation responsibility. Then it can be either by the principal or by the job worker. If at all the job worker is registered. If the job worker is unregistered, it is the responsibility of the principal to generate the e-way bill. And after that, IDC 04. This is uploaded by the principal in this IDC 04. What is the details that will be there? That means how many goods are that are sent to the job work in this period? Any goods that are received back? All these details will be there in this IDC 04. It will be submitted by the principal to the department. Sir, what is the filing frequency of this IDC 04 based on the aggregate turnover? If the turnover is more than 5 crores monthly, next month, the 25th, you need to file this IDC 04. If the aggregate turnover is less than or equal to 5 crores, then yearly once for the financial year, you need to file this IDC 04. Okay. And the next point is processing and dispatch of the goods by the job worker. That means, sir, once the goods reach the job worker, the processing is completed. Now, with respect to the finished goods, which are available with the job worker, what is the thing we need to do? Dispatch the goods to the principal. Once the job work is over, the goods will be dispatched to the principal. For that, no tax is needed to be paid. Because once goods reach the principal will pay the GST. Next one. And another point, okay, some part of the work is done by the job worker 1. Second part of the work is needed to be done by the job worker 2. Now, the goods can be sent to another job worker for further processing. This is another option. That means how many options are there after processing? See, what is the point? Options after processing. The job worker can send back the goods to the principal, or for further processing, they can be sent to another job worker. And third option, it can be supplied to the final customer with tax payment. That means directly the goods can be sold from job workers' premises. These are the 3 options after job work is completed. Okay, ma. Now, sir, if you want to directly supply the goods from the job worker's place, then principal can supply the goods directly from the job worker place in India or for export. But for that, what is the thing they need to do, ma? In order to do the direct supply, these are the conditions that are required to be satisfied. First one, principal must disclose the job worker place as additional place of business in his RC. Or if the job worker is registered, or if the goods are notified by the commissioner that they can be removed from the job worker place. In any of these three conditions are attracted, or any of these three conditions are satisfied, then the goods can be directly sold from job worker's place. One is the principal has declared it as additional place of business, or job worker is a registered person, or the goods are notified by the commissioner. In these three circumstances, the goods can be directly sold from job worker's place. Okay. Next one. Special considerations for direct supply. Time, value, and place of supply is determined by the principal's place, but not by the job worker place. Even though the goods are sold from job worker place, the place of supply will be the principal supply place. For example, job worker is there in Tenali, whereas the principal is there in Guntur. Then what is the place of supply? That means from where the place of supply, all these things will be determined. From Guntur, not from Tenali. Okay, ma. Next one. Who will issue the invoice? Principal. And who is turnover it is considered? Principal turnover. That is the point. And registration requirements, is the job worker is required to take the registration? Yes, when the turnover crossed 20 or 10. Being a supplier of service. Is it possible for the principal to claim the ITC? Principal to claim the ITC on the goods sent directly to the job worker? Yes. If job worker is using any his own inputs, is it possible for the job worker also to claim the ITC? Yes, if at all job worker is a registered person. And what about the waste and scrap that was generated during the job work? Tax on the supply of the scrap to be paid by the job worker if job worker is a registered person. If job worker is a registered person, whatever the scrap that is going to be removed from job worker place, who is required to pay the GST on that? Job worker. If the job worker is unregistered, who will pay the GST on the scrap? Principal will pay the GST. Okay, ma. And next one is some additional points I just wrote here. Who is responsible for maintaining the records? Principal. And delivery challan, who need to issue this DC? Principal. When the job worker is sending, then the job worker can issue the further DC. One job worker to another job worker. First, principal given DC is there now. It can be endorsed, or a fresh DC can also be issued. And already I told you, determined by the principal, I just repeated. Not regardless of job worker location, it will be depends upon the principal one. That's it. These are the points with respect to job work. ISD, only small point, ma. Job work is a little bit lengthier one. This is section 20. ISD, we need to see. So the next one is section 20, distribution of ITC. So with distribution of credit by the ISD. What is meant by the word ISD, ma? Who is ISD? Input Service Distributor. ISD is an office that receives the tax invoices for the input services and distributes ITC to the other branches. That means the first point, when this ISD concept is applicable, ISD concept is applicable when there is a centralized billing system or a centralized accounting system where the total invoices are received at inputs related invoices are received at one place. Second one, ISD concept is applicable only for the input services. Only for the input services. That is the point. Second one, what rules for distributing the of ITC by the ISD? Separate registration required for ISD. I think you know this point, section 24. Compulsory registration. These people, even though you are a normal registered person, but still you are required to take a separate registration as a ISD. Even though you are having the registration as per 22, but still you are required to take the registration as a ISD. Next one. Distribution based on turnover of the recipient units. That means in which ratio the amount is needed to be distributed, ma? In the ratio of turnover of the branches. Next one. Specific rules for distribution of IGST, CGST and SGST credit. That means with respect to, let's say, if it all both branches, that means ISD and the unit is there in the same state, then IGST as IGST, CGST as CGST, SGST as SGST will be distributed. If branch is there in other state, then IGST will be IGST. What about CGST and SGST? They are also going to be distributed as IGST. Because this state SGST cannot be distributed as another state SGST. Na? That's why what is the position, ma? In that case, it will be distributed as IGST. In-depth story will be there in the material. You can check it out. Next one. Credit distributed in the same month as received. That means with respect to this line, what is the point here, ma? Let's say with respect to October month. October month IDC must be distributed in the October month. It cannot be carried forwarded to next month. If it was not distributed, it will be 0. Next one. Debit notes and credit notes. What is the document generally ISD issue, ma? ISD invoice. When ISD receives any debit note or credit note, same thing will be, he will issue to the branches also in the name of ISD debit note and ISD credit notes. And what is the return is required to file, ma? GSTR 6. And what is the due date of filing that? Next month, 13th. And if at all any excess credit was distributed, it will be recovered from the branch first. If we are unable to recover from the branch, we will come to the ISD. This is the concept now with respect to section 20. ISD relevant story. There ends ITC topic, ma. After IDC, I think I will proceed to TDS or TCS. Okay, ma. So the next topic will be TDS and TCS, ma. Whereas with respect to TDS, the first point is here. Who are the persons that are required to deduct the TDS? Who are the persons that are required to deduct the TDS, ma? Simply 6 category of persons are required to deduct the TDS. Who are those persons? Central government, state governments, local authorities like panchayat, municipalities, etc., government agencies, and apart from that, where the authorities who are established, that means simply established by the state or central government, or where more than or equal to 51% of the share capital was held by the government. Societies which are established by the government, PSUs. So simple story is government and government related establishments and PSUs. Everything can be summarized into like this. So who are those people? Central government, state government, local authorities, government agencies, authority established by the government. More than or equal to 51% of the capital was held by the government. Societies established by the government, PSUs. What can be the simple story here? Government, government related persons and PSUs. All these things, government, government related persons and PSUs. All these persons are required to deduct the TDS. This is the first question answer. Who is required to deduct the TDS, ma? Government, government related agencies and PSUs, public sector undertakings, is required to deduct the TDS. That is the first point. Second one, when this TDS is applicable, which type of supplies? So applicability of TDS. First point, sir, TDS is applicable to goods or service. That means TDS is applicable to supply of the goods or supply of service, ma? Both. TDS is applicable to both goods and services. Second one, sir, is there any threshold limit for this TDS? Yes. What is the threshold limit? 2.5 lakhs. when the total value of the supplies under the contract must exceed 2.5 lakhs threshold. That means when the contract value is more than 2.5 lakhs, then definitely TDS provisions will be applicable. Okay. Sir, if the supplier is registered, then only TDS is applicable, or the supplier is unregistered, then also TDS provisions are applicable. If the supplier is registered, then only TDS provisions are applicable, or supplier is unregistered, then also TDS provisions are applicable. Both cases applies regardless of the supplier type, except unregistered suppliers. That means regardless of supplier means he can be a normal supplier or a composition supplier. I mean to say, just forgot to that, except unregistered supplier. Why with respect to unregistered supplier TDS provisions are not applicable? Because the unregistered person is not required to pay any GST, therefore TDS is not applicable. Regardless of supplier type means he can be a normal supplier or a composition supplier. In both cases TDS provisions will be applicable. C. Exception to TDS means in these cases TDS provisions will not be applicable. First one, supply between PSUs. That means one PSU to another PSU. In those cases, TDS provisions will not be applicable. Transactions between two tax deductors means one government agency to another government agency, one government department to another government department. In those cases also, TDS provisions will not be applicable. Supplies by unregistered supplier, just now I told you no GST is applicable, therefore no TDS is also applicable. Next one, supplies under reverse charge mechanism. Why with respect to RCM these TDS provisions are not applicable? Because under RCM 100% of the liability will be paid by the recipient himself. In those cases there is no logic in applying the TDS provision. Who will deduct the TDS? Recipient or supplier? Recipient will deduct the TDS while making payment to the supplier. TDS is deducted by the recipient while making payment to the supplier. In case of RCM, 100% of the tax is paid by the recipient himself. There is no logic in applying the TDS provision there. That's why with respect to RCM mechanism, what is not applicable, ma? TDS provisions are not applicable. Next one. Sir, what are the TDS rates? What are the TDS rates, ma? If at all it is a intrastate supply, then 1% CGST and 1% SGST, in total 2% on the invoice value. That means if at all it is a interstate supply, 2%. Sir, this TDS 1% or 2% is applied on taxable value or invoice price. This 2% is applicable on the taxable value or on the invoice price? On the taxable value. See, calculated on the invoice value excluding GST and cess. That means let's say 12,000 is the invoice value. In that 1,000 is the GST. Now on 11,000 is 2% is applied. From the invoice value we need to deduct the tax portion, GST portion. What is the remaining amount there? On that, TDS at the rate of 2% will be applicable. That is the point. Next one. Threshold limit, some special cases here. Let's say, for example, the total contract value is 3 lakhs. Each invoice value is 1 lakh. Like that, 3 invoices are issued. In this case, TDS is applicable or TDS is not applicable? Total, actually the value is 3 lakhs. For each 1 lakh, a separate invoice is issued. In this case, TDS provisions are applicable or TDS provisions are not applicable? What is the threshold limit? 2.5 lakhs. Now, what is your answer? TDS applicable or not applicable? definitely TDS is applicable. Here, see, minimum contract value shall be 2.5 lakhs. TDS is applicable when the total supply value exceeds 2.5 lakhs. That means if the contract price or contract value is more than 2.5 lakhs, TDS provisions will be applicable. Okay, ma. And calculated exclusive of tax and cess as per the invoice. That means in that invoice value, tax amount will be separated. But keep it in mind, even though individual invoice value is less than 2.5, but what is the total contract price? It is more than 2.5 lakhs, then TDS provisions are applicable. Then TDS provisions are applicable. That is the point. Okay, ma'am. Next, see, I just wrote there. Individual supplies may be less than 2,50,000, but cumulative value matters. That is the line I wrote for that. Individual supplies may be less than 2,50,000, but the cumulative value matters. Based on cumulative, contract price is more than 2.5 lakhs, TDS provisions are applicable. That is the point. Next one. Composition scheme suppliers are also subject to TDS. I just told you previously, whether it's a normal supplier or a composition supplier, in both cases TDS provisions will be applicable. Next one. Sir, TDS is required to be deducted even on exempted supplies also. TDS is required to be deducted even on exempted supplies also. Yes or no? Answer is no. Contract price, we should consider only taxable supplies. See, this is the word I just wrote. Exempted supplies not considered for TDS threshold. That means, let's say the total contract value is 3 lakhs. In that exempted supply value is 1 lakh. Now what is the taxable value now? 2 lakhs, which is less than 2.5. In those cases, TDS will not be applicable. That means taxable supplies contract value is more than 2.5. In those cases only, this TDS provisions will be applicable. Okay, ma'am. Next one. TDS deduction and process, payment process. That means when this TDS is required to be deducted. So when this TDS is required to be deducted, what is the time of deduction? When it is required to be deducted, TDS, when the date of payment or the amount is credited to the bank account, whichever is earlier. Deducted when the payment is made or credited to the supplier, whichever is earlier. That is the time where TDS is required to be deducted. Sir, TDS is applicable even on advance also? Yes, TDS provisions are applicable even on advance payments also. Okay. Once TDS was deducted, what is the time when this TDS is required to be deposited with the government? When this TDS is required to be deposited with the government? Next month 10th. TDS is required to be deposited with the government on or before next month 10th. And see, next month, late deposit attracts 18% interest. That means if the TDS is not deposited with the department on or before next month 10th, you are required to pay the interest at the rate of 18% per annum. Next point, payment method. That means which way we can pay that, through ITC or through cash only or cash plus ITC? Only cash only. So TDS liability discharged through e-cash ledger only. TDS liability must be discharged through e-cash ledger only. That means TDS liability must be discharged by cash only. And the amount will be credited to the supplier's cash ledger. Therefore, we can utilize it for any payment. If you have done your articles, you may file at least one return in your life. Fine. So, but we want to go for appeals. Fine. So, here the point, in which way the TDS is required to be deducted, That means we need to make the payment through cash ledger only, and the amount will be deposited in the supplier's electronic cash ledger. And what is the return you are required to file? GSTR 7. And what is the due date? Next month 10th. So for the depositing the tax as well as filing of GSTR 1, both are having the return of what we call it as GSTR 7. Any late fee is required to be paid? Yes, I think 100 rupees per day na, for this one. Subject to a maximum 5,000, I think. Okay, next one. TDS certificate. Once TDS is deducted with respect to salaried person, Form 16 will be given in your income tax. Just like that here, when TDS was deducted, a TDS certificate is required to be given. That form number is GSTR 7A. It is required to be issued within 5 days. And generally to have the details of who is the tax deductor, who is the deductee, how much amount that is deducted. And registration requirements for TDS deductors. Already we know that all these TDS deductors are required to take compulsory registration as per section 24. And what is the form number to apply for registration? REC 07. Normal people REC 01. For registration they will apply in. But whereas this TDS deductor is required to apply in form number REC 07, PAN is also not mandatory for TDS deductors registration. Based on TAN also they will go for registration. Next one. Reflection in deductee's account. That means deductee. Who is the deductor? Recipient. Who is the deductee? Supplier. Where the TDS is going to be reflected in deductee's account? E-cash ledger. TDS amount will be credited to the deductee's e-cash ledger after validation. And so last points in this TDS will be interstate transactions. With respect to interstate transactions, no TDS. When the supplier location, that is LOS and POS, is different from a recipient registration state. What does this mean? Again, I just gave a simple meaning here. No TDS when the supplier and place of supply in the same state, but the recipient is in different state. For example, LOS and POS are there in AP, but location of recipient is there in Telangana. Location of recipient is there in Telangana. In that case, is it intrastate supply or interstate supply? Is it a intrastate supply or interstate supply? It is a intrastate supply because it will be decided in based on LOS and POS, but not by the location of recipient. LOS, POS are there in the same state. Therefore, what is the position, ma? It is intrastate supply. If at all it is intrastate supply, what is required to be paid, ma? CGST plus SGST. Which SGST? AP SGST. Now who is required to deduct that? Telangana recipient. Is it possible to deduct that? AP SGST can be deducted by Telangana recipient? No. That's why TDS provisions are not applicable. If LOS, POS is there in one state, but whereas this location of recipient is there in other state, then it is not possible to deduct the TDS. Therefore, TDS provisions are not applicable. Rest of the cases, if the same state, intrastate supply, different state, interstate, IGST TDS will be applicable. These are the important points from the TDS with respect to exams. The next point is TCS. Definition and scope of TCS. Now we are seeing that with respect to this TCS, when this TCS concept is applicable, ma? TCS is applicable to the taxable supplies of the goods or services supplied through ECO. That means TCS is applicable only when the supplies are made through ECO. That too, when the ECO collects the payment for the supply. That means two conditions. First condition, the supply must be made through ECO. Second one, the payment must be collected by the ECO. That means the payment is processed through ECO. Take the example of Amazon. Or any supplier who's selling the goods to Amazon, then we will make the payment to the Amazon, and in return Amazon will pay to the seller. That means here the payment is processed through Amazon. So that's why this is the first condition. The supply must be done through ECO. Second one is the payment must be processed through ECO. That means ECO collects the payment for the supply. Then the concept of TCS will be applicable. Now, if these two conditions are satisfied, ECO must collect the TCS on the net value of taxable supplies. What is meant by the word net value, ma'am? I just wrote there. Supplies minus returns. That means sales minus sales returns. What is the amount we will get? It is known as net value of taxable supplies. On the net value of taxable supplies, ECO must collect the TCS. Sir, it applies to goods or services. This TCS concept is applicable for goods or services. Both goods and services, except those are taxed under Section 9. Why with respect to 9.5 cases this TCS concept is not applicable? Under 9.5, 100% of the GST is to be paid by the ECO himself. Are you able to recollect 9.5, ma'am? Ola, Uber, Make My Trip, Trivago, and these like things, and Urban Company, like this one. So those points covered under 9.5. So with respect to 9.5 cases, what is the position? Definitely 100% GST is to be paid by the ECO. Therefore, the concept of TCS will not be applicable. Next one. Who are the parties, responsible parties for TCS collection? Every ECO who is not acting as an agent. That means TCS, Amazon is the independent person, seller is the independent person. Here Amazon is not a selling agent. Na? Amazon is the independent person. If Amazon is the agent, then it is different story. For example, Amazon basic products are there. Na? In Amazon Basics, brand name. With respect to Amazon Basics, Amazon ECO is the agent then. In those cases, the TCS concept may not be applied. But where the ECO or Amazon, in our example, is not acting as agent, in real life, Amazon is not an agent of the seller, then only the concept of TCS will be applicable. See, exception includes the services taxed under 9.5 and ECO acting as a agent. That means 9.5 I just told you right now, and ECO acting as agent means Amazon basic products. In those cases, the concept of TCS will not be applicable. Next one is calculation of TCS. On which value? I just told you this TCS is needed to be calculated, ma? Net value. How to compute the net value? How to compute the net value, ma? Sales minus sales returns. While computing the GST is includable or excludable? Excludable. And we need to calculate this one as a GST level for each supplier monthly. That means if the supplier is there in more than one state, is there in 10 states, then how many number of RCs is having there? 10 RCs. How many GST numbers will be there? 10. For that 10, separate list must be prepared every month. That means GST wise supplier data must be calculated. Based on the TCS provisions will be applicable. Negative net value is ignored because sales 10,000. Sales returns 20,000. Previous month also returned in this month only. In this case, the value is negative. In that case, TCS applicable or not applicable? Not applicable. And what is the rate of TCS? If it is 1%, 0.5 CGST and 0.5 SGST. If it is the interstate supply, 1%. This is the point, ma'am. Next point is So in which cases this TCS concept is not applicable? What are the cases where TCS concept is not applicable, ma? First one, unregistered person. No TCS is applicable as no GST is payable. Because if at all you are unregistered person, then you are not liable to pay any GST. If you are not liable to pay any GST, TCS provisions will not be applicable. And relaxation from registration requirement for certain suppliers. That means if at all you are unregistered, there is no need to pay any GST. Na? You are not required to take any registration. So what about the composition scheme suppliers? For them also TCS is applicable? Yes. TCS is applicable at the rate of 1% on the supplies made through ECO, where the amount is going to be created. E-cash ledger of the supplier. With respect to RCM supplies, TCS applicable or not applicable? No TCS is applicable because recipient is liable for GST payment there. Is there any threshold limit for TCS? No, there is no threshold limit for TCS, just like TDS. In TDS, we are having the 2.5 threshold, 2.5 lakhs, but those thresholds will not be there under TCS. It applies regardless of supply value made through ECO. How much is the value? That is immaterial. Next question. Sir, when this TCS is collected, the liability arises in the month when the tax invoice is issued by the supplier. When invoice is issued by the supplier, you are required to deduct the TCS collected when the supply is made through ECO, regardless of payment time. Whenever the amount is collected, then definitely TCS will be deducted. And when this TCS is required to be paid to the government, next month 10th, any late deposit will attract 18% interest. What is the form the TCS collector is required to file? GSTR 8. What is the due date for that? Next month 10th. Is there any requirement to file the annual statement by this ECO? Yes. Annual return is required to be filed. Form number is GSTR 9B. ECO is required to file that. And what is the due date for that? Next financial year, December 31st. What is the registration requirement for these ECOs, ma? Compulsory registration as per section 24. Separate GST number is required for TCS collection, even though they are having the regular GST number as per 22. And what is the form number? REZ 07. Next one. TCS processing and supplier interaction. How this will be done, we will see now. Reflection of TDS in suppliers e-cash ledger. Auto-populated on supplier's dashboard after GSTR 8 filed by ECO. When ECO files this GSTR 8, that data will be auto-populated in the dashboard of the supplier in the name TDS and TCS receivable. Once the supplier will accept the details, validate the details, the amount will be credited to his electronic cash ledger. See, supplier must validate or confirm the details on the common portal. The TCS then credited to the supplier's e-cash ledger. Next, if at all there is any doubt regarding the truth and accuracy of the details, the Deputy Commissioner can request the supply details from the ECO. Then ECO must respond within a period of 15 working days. Failure to furnish the information may result in penalty up to 25,000. There ends TDS and TCS topic. Okay, ma'am. The next chapter we need to see is, ma'am, returns. Whereas with respect to returns, ma'am, what is the first one? GSTR 1. In fact, GSTR 1 is not a return. It is a statement. What is this GSTR 1, ma'am? It is a statement of outward supplies. What is the return? GSTR 3B is called as return. GSTR 1 is in fact a statement of outward supplies. We'll see what are those details one by one. So what is the first point here, ma? Must be filed by every registered person, including the CTP. Who is required to file this GSTR1, ma? Every registered person, including the CTP, is required to file this GSTR1. What are the details that will be there in GSTR1? What are, that means simply the sales data that happened in this month. It is going to be reported on or before next month, 11th. Okay. Sir, that means every person is required to file GSTR1, or are there any exceptions to that? Okay, then who are the exceptions for this GSTR1? The exceptions will be ISD, ISD, NRDP, TDS or TCS, TDS deductors or TCS collectors, composition scheme persons, OAD or suppliers. These people, what is the position, ma? They are not required to file GSTR1. Why these people are not required to file GSTR1? Because they are having the special returns. ISD, GSTR6, NRDP, GSTR5, composition taxpayer, GSTR4, TDS deductor, GSTR7, TCS collector, GSTR8, OADR service provider, GSTR5A. Like that, they are having the special returns, ma. That's why they are not required to file any GSTR1. And what is the due date of filing this GSTR1, ma? Next month, 11th. If at all you are following QRMP scheme, 13th. What is meant by QRMP? Quarterly return, monthly payment scheme. Even though tax is paid on a monthly basis, the return is going to be filed on a quarterly basis, then it is called as QRMP scheme. What is the due date of QRMP scheme? Quarter ending next month, 13th. With respect to first quarter, what is the due date of QRMP for filing GSTR1? First quarter, July 13th. Second quarter, October. Second quarter, October 13th. Third quarter, January 13th. Last quarter, April 13th. Those are the due dates if at all you are following QRMP scheme. Next one. What are the contents that are needed to be uploaded in this particular GSTR1? Outward supplies. I mean, sales data simply must be furnished. What is the restriction? Cannot be filed if the GSTR3B for the preceding month or tax period is not filed. Say, for example, in order to file the November month GSTR1, October month GSTR1 as well as GSTR3B must be filed. Then only current month GSTR1 can be filed. Next one. Can be filed after the end of the current tax period with the exception for business closure or GST cancellation. That means with respect to November month, this GSTR1 can be filed. When this GSTR1 can be filed? From December 1st to December 11th. December 1st to December 11th. Okay. You cannot file it on or before November 30th. November return cannot be filed in the November month itself. It can be filed from December 1st to December 11th. But in two exceptional cases, when your RC is cancelled, that is business is closed, or you are a CTP, casual taxable person, in those cases, this month return can be filed in the same month itself, except CTP and RC cancel cases. In rest of the cases, this month GSTR1 can be filed in the next month only. In the same month, you cannot file the GSTR1. Next one, error rectification. That means, sir, there are any mistakes in the GSTR1. What is the maximum time period to rectify those mistakes? 16.4 time limit. Errors can be rectified in the subsequent returns up to. What is the maximum time period, ma? 16.4 time limit for ITC. What is the time limit? Next financial year, November 30th, or date of annual return, whichever is earlier. Sir, is there any late fee for GSTR1? Yes, what is the late fee? If at all it is a nil return, then what is the late fee? If at all it is a nil return, nil GSTR1, what is the late fee per day? Per day 10 rupees under CGST. Okay, 10 plus 10 it can be 20. But we're talking about CGST generally, then 10 rupees per day, subject to a maximum of 250. In total 20 rupees per day, subject to a maximum of 500 in case of nil GSTR1. If at all it is a normal GSTR1, then it depends upon your turnover. Same concept is applicable to GSTR3B late fee also. GSTR1, GSTR3B, the late fee is the same. If at all it is a normal return, then what is the late fee you need to pay? It depends upon your previous financial year turnover. If in the previous financial year the turnover is less than or equal to 1.5 crores, then per day 25. That means 25 plus 20, 50 in your language. Per day 50, subject to a maximum of 1000 plus 1000, 2000. Subject to a maximum of 2000. If your aggregate turnover in the previous financial year is more than 1.5 crore but less than or equal to 5 crores, then per day 25, that is 50, or 2500, that is 5000. 2500 CGST, 2500 SGST, in total it will be 5000. If your aggregate turnover is more than 5 crores, then per day remains the same, 50, subject to a maximum of 5 plus 5, 10,000. These are the late fees. Okay. And these late fees must be paid based on your aggregate turnover in the preceding financial year. What is the next point now, GSTR 2A. What is this GSTR 2A? It reflects the details furnished by the supplier in GSTR 1 and IFF facility. What is meant by IFF? Invoice Furnishing Facility. So generally, GSTR 2A will have the purchases data. Based on GSTR 2A purchases data, GSTR 2B will be generated by the system. Serves as a basis for ITC claims. Based on GSTR 2A data, system will prepare the GSTR 2B ITC statement. On GSTR 2B, static monthly ITC statement. It is an auto-generated and read-only statement available once in a month. It contains the details of ITC available to the recipient when it is generated 14th of every month. Next one means 14th of every month. Includes only the details furnished by the supplier up to the due date of filing. GSTR 2A is a dynamic document, whereas GSTR 2B is a static document. What is the difference between them? Whenever supplier uploads the data, in GSTR1, whenever the supplier modifies the data in GSTR1, on a real-time basis, GSTR2A will change. But whereas with respect to GSTR2B, what is the position? It will be changed only once in a month, that is on the 14th. And that too, GSTR 14, the ITC statement will be prepared. For this, what is the base? How many supplies the supplier uploads in GSTR 1 up to 11th? Because what is the due date of GSTR 1? Next month 11th. How many number of supplies the supplier uploads in GSTR 1 up to that extent only? Up to that extent only. What is the position, ma'am? Up to that extent only. What is the thing we need to do? We will consider, that means the department or system will consider while creating the IDC statement on 14th. Sir, we entered some sales by the supplier in GSTR 1, 12 and 13. These things will be applicable, come under next month. But this month, that means ITC will be generated on 14th. For example, this 14th will be based on the data that is filed up to due date of GSTR 11 only. After the due date of GSTR 11, supplier uploads a few sales on 12 and 13. GSTR 2A will be modified because 2A is a dynamic document, but 2B will be modified only in the next month. That is the point. Okay, ma? Next one. So specifies the condition in which ITC may not be available. This point was, section was there, but effective date till to be notified, section 38. You can ignore it for the time being. So what is the next one now? GSTR 3B. So with respect to GSTR 3B, monthly filers, what is the due date of GSTR 3B, ma? Next month, 20th. If at all you are following QRMP scheme, then the due date of this GSTR 3B will depends upon 22nd or 24th. Okay. Of the next month based on the states. And the next one is, we need to see his here with respect to QRMP scheme. Sir, what is meant by this QRMP scheme first of all? Who are the persons that are eligible for this QRMP? Every registered person with the aggregate turnover up to 5 crores in the preceding financial year is eligible for this QRMP scheme. In the current year, up to which extent he can follow the QRMP scheme? Up to 5 crores. In the current year, when the 5 crores exceeds, automatically need to shift from QRMP to normal scheme. And what is the benefit this QRMP persons will get, ma? Allows quarterly filing of GSTR 1 and GSTR 3B with monthly tax payments. Sir, in this case, there is a problem, na? If the supplier uploads the GSTR 1 on a quarterly basis, for example, I made few purchases from this QRMP scheme person in the month of April. Now, when this GSTR 1 is going to be filed? July 13th. That means when I purchased the goods in the month of April, I am able to get the ITC in the month of July. 4 months I need to wait to get the ITC. So I will not be interested in purchasing the goods from QRMP scheme. In that case, the scheme is useless. Na? That's why the government come up with a solution that is named as IFF, Invoice Furnishing Facility. By using this invoice furnishing facility, the supplier can upload the invoices on the invoice furnishing websites with respect to B2B supplies. Value cap of 50 lakhs will be there. Every month, he can upload the invoices up to 50 lakhs in relation to B2B. Sir, why with respect to B2C it is not allowed, sir? B2C is not required any ITC there. Therefore, with respect to B2B supplies, definitely what is the thing you need to do, ma? He can upload those invoices in invoice furnishing facility. Then without any delay, just like GSTR 1, the data that is entered in invoice furnishing facility will be auto-populated in recipient account in GSTR 2A and 2B immediately. So you are not required to wait until GSTR 1 is filed. That is the point. Next one. Sir, how to pay the GST in this monthly? What is the due date for that? What is the due date? Anybody remembers, even though I did not write it? First 2 months, next month the 25th, last month on or before this 20th, or a return filed. That's sorry, on or before the return filed under QRMP scheme, 22nd or 24th. That is the point. For that, 2 methods are there. One is fixed sum method. Second one is self-assessment method. With respect to self-assessment method, taxpayer himself determines the amount based on actual liability. Taxpayer determines the amount based on actual liability. That is the point. With respect to fixed sum method, based on the previous tax payments, auto-populated challans. That means anybody remembers what is this fixed sum notional values? If at all you pay tax, let's say with respect to July to September quarter, we just want to go for QRMP scheme. With respect to July, what is the previous month? April to June is there, na? In June month, you just paid on a quarterly basis. That is April to June. How much amount you paid in cash? For example, in our example, 100 rupees. In that, 35% is needed to be paid. In that, 35% is needed to be paid every month. Say with respect to July month, what is the due date, ma? August 25th, you need to pay 35 rupees. And with respect to what is the second month, August month is needed to be paid on September 25th, 35. When with respect to September month, October 22nd or 24th, when the return is paid, balance amount is needed to be paid. Previously, you paid on a quarterly basis. How much amount you pays in cash? That means through cash ledger. How much amount you paid in the previous quarter? In the 35% is needed to be paid every month for the first 2 months. If at all, sir, we are paying on a monthly basis, sir, previously, not quarterly basis. In that case, how much amount you paid in the month of June through cash ledger? 100% of that amount is needed to be paid in cash every month. For example, in the month of June, we paid through cash ledger 45 rupees. In that case, with respect to July month, how much amount we need to pay? 45. Because monthly, 100%. In quarterly, 35%. That is the logic. So in the last month, the balance amount will be paid while filing this GSTR 3B on 22nd or 24th. Next one. These are the important points in QRMP that is going to be asked in the exam. So the next point will be composition schema. With respect to composition dealers, he is required to file its CMP 08 on a quarterly basis. What is the due date for that? Quarter ending next month, 18th. With respect to first quarter, July 18th, second quarter, October 18th, third quarter, Jan 18th, last quarter, April 18th. And along with this quarterly statement, one annual return is required to be filed by this composition scheme person. What is that? GSTR 4. And what is the due date? 30th April of next financial year. Okay. Next one, GSTR 5 for NRDP. When this GSTR 5 is required to be filed? What is the due date of GSTR 5 for NRTP? Anybody remembers? Next month, 13th, or from the date of RC expires within 15 days. Whichever is, 7 days. I just forgot. 7 days. Whichever is earlier. For example, on April 1st, with 15 days validity, RC was granted to you. Now, what is the due date of filing this GSTR 5? Next month, 13th. That is May 13th. Or when RC will expire? April 15th. From that particular date, 7 days means April 22nd. Whichever is earlier. April 22nd. That is the due date of filing this GSTR 5. So, next month, 13th. Or the date when the RC expires. From that particular date, 7 days. Whichever is earlier, that is the due date of filing this GSTR 5. Next one, GSTR 5A, when you are required to file, ma? Next month 20th, na? Next one, GSTR 6, 13th, I think, ISD. Next month 13th, GSTR 7. Next month 10th, GSTR 8. Next month 10th, GSTR 9 or 9B. December 31st, 9 and 9B comes under annual returns. Next financial year, December 31st. These are the returns we need to remember. And with respect to annual return, few points are there, ma, but it is not required till now. What is the due date for this annual return? I told you December 31st of next financial year. Late fee will be there. What is the annual return late fee? It depends upon previous financial year turnover. Tell me that. Up to 5 crores, what is the late fee? Up to 5 crores, what is the late fee for the annual return? Per day, how much amount? Per day, 100 rupees, na? Or 25? What is the amount? No, it is not there. What is the late fee with respect to this annual return? It will be, I think, 100 rupees. Sorry, 100. and based on the turnover. What is the turnover there, ma? 0.02% of turnover, whichever is lower. Okay, ma. And if at all your aggregate turnover is more than, that means 5 to 20 crores, I think. In that case, what is the late fee they need to pay, ma? What is the late fee they need to pay? I think it will be now 200, I think, or 0.02% of, sorry, sir, I think it is 25 rupees now. First one, just wait. So with respect to this dates, ma, what it will be? Up to 5 crores, then what is the position, ma? 0.04, or simply what we can say 50 rupees per day. First one is 50 rupees per day, or 0.02% of turnover, whichever is lower. If your preceding financial year turnover is 5 to 20 crores, then per day 100 rupees or 0.02% of turnover, whichever is lower. Okay, ma'am. So with respect to annual return late fee, what is the late fee with respect to annual return, ma'am? That is, if the turnover is up to 5 crores, the late fee per day will be 50 rupees or 0.04% of turnover. If at all the turnover in the preceding financial year is 5 to 20 crores, then per day 100 rupees subject or 0.04% of the turnover, whichever is lower. If your aggregate turnover in the preceding financial year is more than 20 crores, then 200 per day or 0.50% of the turnover, whichever is what we can say, ma, lower. This is the point you need to remember with respect to this late fee, ma. Next one is 88C was actually created recently. Reconciliation of GSTR1 and GSTR3B. Intimation to the taxpayer if the tax liability in GSTR1 exceeds GSTR3B by specified extent. Option to pay the differential tax within 7 days. Definitely this 88C and 88D are also there in the material, ma. But what is by that specified extent was not notified. Therefore, it is not applicable. 88C as well as 88D. What are those specified amounts? What is that specified mistake? Those things were not notified till now. Until those things are not notified, 88C and 88D is only a paper provisions. They will not be asked generally in the exam. This is with respect to returns, ma'am. So with respect to e-way bill. So when this e-way bill is required, ma'am? Whenever there is a physical movement of the goods, e-way bill is required. Whenever there is a physical movement of the goods, in all those cases, e-way bill is required. So, sir, e-way bill is required before commencement of physical movement or after commencement of physical movement. When e-way bill is required to be generated, before commencement of physical movement or after commencement of physical movement. Before, prior to the goods movement, e-way bill is required to be generated. If at all it was done by road, by train, by vessel or any other means, it can be generated before or after the physical movement commences. That is the point. What is the form number that is there in order to generate the e-way bill? EWB01 is used for generation of this e-way bill. Next one. When e-way bill is required to be generated mandatorily. First point, required for the registered, applicable when the consignment value exceeds 50,000. That means whenever there is a physical movement of the goods and that physical movement reason is, that means the consignment value is more than 50. In those cases, e-way bill is required. First condition, there must be a physical movement of the goods. Second one, consignment value should exceed more than 50,000. If these two conditions are satisfied, e-way bill is required. Next question. Who is required to generate the e-way bill? Who is required to generate the e-way bill? Registered persons who are causing the movement of the goods. What is meant by causing the movement of the goods, ma'am? Who is arranging the transport? The person who is causing the physical movement means the person who is arranging the transport, that person is required to generate the e-way bill. If the transportation was arranged by the supplier, supplier will generate the e-way bill. If recipient is arranging the transport, recipient is required to generate the e-way bill. Next one. Sir, if the consignment value is less than 50, then also e-way bill can be generated? Yes, it is optional then. Can be generated for the consignments valued 50,000 or less. But in two cases, even though the consignment value is less than 50, it is mandatory to generate the e-way bill. What are those two cases? One is job work, second one is handicraft items. Whenever there is a interstate physical movement, e-way bill is required even though the consignment value is less than 50,000. In case of job work and handicraft items, whenever there is a interstate physical movement was there. Whenever there is a interstate physical movement was there. What is the position in those cases? Even though the consignment value is less than 50, but still e-way bill is required to be generated. Just I asked you, who can generate this? Every registered person who is causing the movement of the goods is required to generate the e-way bill. And who is causing the movement means the person who is arranging the transport. Sir, with respect to e-way bill, two parts will be there, ma'am. What are the two parts, ma'am? Part A and Part B. Generally, what are the details that are there in Part A? Invoice details. What are the details that will be there in Part B? Vehicle details. Generally, invoice details will be filled by consignor or consignee. And in this Part A was filled, it generates a slip and a temporary number. Now Part B, in reality, once fills the Part A, consignor or consignee endorse it to the transporter. Now transporter will fill this Part B generally. It contains the transport related details. Okay. But if authorized by the supplier, even ECO, courier agency, transporter also can fill Part A. Generally, Part A will be filled by consignor or consignee, but Part B will be filled by the transporter. If the consignor or consignee has given the authorization, then ECO, courier agency or transporter, ECO, courier agency or the transporter, those people also can fill Part A. Next one. So just now you said that based on consignment value, e-way bill is required to be generated. What is meant by the word consignment value? Section 15, transaction value. GST is includable or excludable? While computing this 50,000, includable. Transaction value plus GST minus exempted supplies value. While computing the 50,000 limit, inclusive of GST, we will consider. That means, see, transaction value is 48,000, GST at the rate of 18%, that is 8,640. Now, what is the total consignment value? 56,640 ma. It is more than 50 or less than 50? More than 50 inclusive of GST. Therefore, e-way bill is required to be generated. Next point. Special scenarios in case of e-way bill generation ma. With respect to rail transportation, air transportation or vessel, I told you na, by road, e-way bill must be generated before commencement of physical movement. With respect to rail, air or vessel, when this e-way bill is required to be generated ma? Before or after. But that's why goods are not to be delivered without e-way bill production. That means in order to get the delivery of the goods, e-way bill must be produced by you to the railway authorities, etc. in order to get the goods. Okay. Sir, if at all it is a own or hired conveyance, in that case, part A, part B, both will be filled by consignor or consignee. Because there is no transporter. Na? One vehicle means there is no transporter. Hired means self-driven. We have taken on a rental of a motor vehicle and we just came to the seller place. In those cases, part A, part B, both must be filed by this consignor or consignee. Sir, if the consignment value is more than 50,000, neither the consignor nor the consignee has generated the e-way bill, then who is required to generate the e-way bill? Transport. It is the transporter responsibility to generate the e-way bill. If the value exceeds 50,000 and not generated either by the consignor or by the consignee. Next point. Sir, what is the validity period of e-way bill? So what is the validity period of e-way bill, ma? What is the validity period of e-way bill? It depends. If at all it is a regular cargo, for every 200 kilometers or part thereof, 1 day validity period will be given. If at all it is a over-dimensional cargo, for every 20 kilometers or part thereof, 1 day validity period will be given. If at all it is a regular cargo, up to 200 kilometers or part thereof, 1 day validity period will be given. If at all it is a over-dimensional cargo, for every 20 kilometers or part thereof, what is the position, ma? Every 20 kilometers or part thereof. Over-dimensional cargo e-way bill will be generated. Now what is the position, ma? Say Guntur to Vijayawada 30 kilometers distance was there. Guntur to Vijayawada 30 kilometers distance. It is a regular cargo. What is the validity period of e-way bill? Guntur to Vijayawada 30 kilometers distance. If at all it is a normal cargo, then what is the validity period of e-way bill? 30 kilometers, right? Sorry. I thought it is a over-dimensional cargo. Yes. In that case, sorry, fine. In that case, what is the position? For every 200 kilometers or part thereof 1 day, therefore 1 day. If at all it is a over-dimensional cargo, fine. If at all it is a over-dimensional cargo, the validity period of e-way bill will be 2 days. For every 20 kilometers or part thereof, 1 day. First 20 kilometers, 1 day. For the balance 10 kilometers, 1 day. 1 plus 1, 2 days is the validity period of e-way bill. Okay. If at all it is a normal cargo, for every 200 kilometers or part thereof, 1 day validity. If at all it is a over-dimensional cargo, every 20 kilometers or part thereof, 1 day validity period will be there. Sir, is it possible to extend that? Yes, it can be extended within 8 hours from the expiry time. Sir, is it possible to cancel the e-way bill? Yes, within 24 hours of its generation, but not possible if verified in transit. Next point is here, complaints and enforcement. While the goods are in transit, what are the documents that are required during transportation? If at all it is a supply, invoice, composite supply, bill of supply, other than supply, DC, import, bill of entry, along with that e-way bill in physical form or electronic form, it must be maintained with the transporter. In order to verify that, who is having the authority to inspect and verify it? Commissioner is authorized to intercept the conveyance and verify the e-way bills, or is authorized persons. Okay. Once the verification is completed, summary report must be recorded within 24 hours and final report will be within 3 days. Summary report is to be recorded within 24 hours and final report must be uploaded on the website within 3 days. If at all above documents are not maintained, what is the penalty that can be levied for non-compliance? Higher of 10,000 or the tax amount involved, whichever is higher. If at all there is a severe crime, goods and conveyance can also be seized. That is the point. Next one. What are the cases where e-way bill is not required? I just simplified it here based on the exams. Transportation of specified goods like LPG, kerosene for public distribution, postal bags, packers and movers, jewelry, ATM cash, all these things, e-way bill is not required. In the same way, if the goods are not taxable, or they are exempted, or they are covered under 7 subsection 2 negative list, GST is not payable, therefore e-way bill is also not required. And goods are transported by non-motorized vehicle like bullock cart, donkeys, elephants. On them, if at all we are transporting the goods, then also e-way bill is not required. Okay, ma. That's it. There ends this e-way bill concept, ma. Next one is demands and these are the important points with respect to e-way bill. Okay, in 2 minutes I will start. Only 15 minutes is there now. I will see what is the next topic here. Okay, ma. So the next topic we need to see is here demands and recovery. Actually, these are the topics which are important in CA final level, but these things are not asking in the CMA final level. But we can't say they will not ask for unlimited period of time because for practical point of view, these are the most important ones. So in future, that means it can be start from your attempt also. They can ask, that's why, what is the points that are important from the examination point of view in demands and recovery. Here the word demands and recovery will not be there in your CMA study material. Ma. It will be given as dispute redressal mechanism. And in that these chapters will be there. Your CMA final board material, it will be given as dispute redressal mechanism. DRC. DRM, sir, dispute redressal mechanism, DRM. So in that it will be there, demands and recovery. So we'll start with this demands and recovery. Ma. With respect to this demands and recovery, so with respect to demands and recovery, ma, when first it starts with show cause notices generally. Generally, when a show cause notice will be issued, what are the circumstances where the show cause notice can be issued? Ma? Under 4 or 5 technically circumstances, a show cause notice will be issued. Non-payment, short payment, erroneous refund, wrong availment of ITC and wrong utilization of ITC. These are the cases where the show cause notice will be issued to you. Non-payment, short payment, erroneous refund, wrong availment of ITC and wrong utilization of ITC. These are the cases where the show cause notice will be issued. So here show cause notice will be issued under 2 ways. One is as per section 73, second one is as per section 74. When this 73 will come into scene, ma? Cases of bona fide mistakes, genuine mistakes, innocent people like me. In those cases, 73 will come into scene. When this 74 will come into scene, ma? When this 74 will come into scene, fraudulent cases. 74. Cases of fraud, willful misstatement or suppression of fact. In those cases, what is the section that will be applicable, ma? 74. Sir, what is the time limits to issue the show cause notices? Show cause notice is to be issued 3 months before the last date of DO means demand order. That means with respect to 73, what is the time limit for the issue of demand order, ma? demand order is to be issued within 3 years from the due date of annual return. For example, we are in 24-25. What is the annual return for 24-25 now? Due date 31/12/2025. From this period, within 3 years, demand order must be issued. In that case, with respect to 24-25 financial year, what is the last date to issue the show cause notice then? Show cause notice is to be issued 3 months before the last date of demand order. That is 2 years and 9 months from the due date of annual return. Now, what is the last date to issue the show cause notice in our example? September 30th, 2025. What is the demand order date, last date? December 31st, 28, it will be. So then from that particular date, 3 years means it will become 31/12/2028. Demand order must be issued before the 3 months. That means I think September 30th. On or before September 30th, 2028, show cause notice must be issued to treat that particular show cause notice as a valid one. Sir, if at all it is a fraudulent case, then what is the time limit to issue the show cause notice? What is the time limit to issue the show cause notice, ma? Show cause notice is issued 6 months before the last date of demand order. What is the demand order date as per section 74? Demand order is issued within 5 years from the due date of annual return. Same example continued. Then what is the last date for the demand order? 31/12/2000. 5 years means 24, na? 25, huh? Yeah. It will be 2030. Then before, for that 6 months before, that means it will be on or before 30th June 2030, I think. So this is the last date for the issue of show cause notice if they are going to issue as per section 74. So 73 is the genuine cases, 74 is with respect to fraudulent cases. So what is the time limit to issue the show cause notice under 73? 2 years, 9 months from the due date of annual return. And what is the demand order due date? 3 years. As per 74, what is the time period to issue the show cause notice? 4 years, 6 months from the due date of annual return, and the demand order must be filed within 5 years. Next point. So what is the penalty structure with respect to this 73 and 74? Before issue of show cause notice, nowadays department is making a oral communication to you. When the oral communication is given to you, then you paid the amount without arguing with the department. That means before issuing show cause notice, we just paid the amount. Tax plus interest was paid. In that case, no penalty in case of section 73. 15% of the tax amount must be paid as penalty for 74. After issue of show cause notice, we paid the amount within 30 days. Then as per 73, no penalty will be there, but 74, 25% of the tax amount must be paid as a penalty. Next one. From the date of demand order, within 30 days you paid that. That 30 days above is from the date of show cause notice. Third point is demand order is issued. From that particular date, within 30 days you paid. Then with respect to 73, 10% of the tax amount or 10,000, whichever is higher. That is with respect to 73 and 74, 50% of the tax will be the penalty. And you paid the amount after 30 days from the demand order. It will not change for 73, but whereas with respect to 74, it will become 100%. We are talking about penalties. In addition to penalty, you need to pay interest at the rate of 18% per annum, along with tax amount. This is a penalty structure. See, these are the cases where the show cause notice will be shared. I told you, non-payment, short payment, erroneous refund, or ITC issues means wrong availment of ITC or wrong utilization of ITC. So the next point is, what are the general provisions for the determination of tax? That means, while deciding the cases, the department must follow some guidelines or principles which are prescribed under section 75. Based on those guidelines only, what is the thing we need to do, ma? Department need to issue the demand orders. In that, first one, while computing the 2 years 9 months or 4 years 6 months, that means 2 years 9 months in the case of 73 and 4 years 6 months in case of 74, the court stay order time period will be excluded. Court stay order time period will be excluded. Second one, in order to pass any order, principles of natural justice must be followed. That is, opportunity of being heard must be given. Next one. Interestingly, even when I was studying, I thought that demand order means it is a written order. But it is a speaking order. Notice is written, but demand order is not a written one. While I am studying in my student days, then I thought that demand order is also there in written format. But demand order will not be in written format, it is a speaking order. So he will say these are the facts and the basis of decision, everything will be communicated to the registered person. Sir, if the show cause notice does not specify the interest amount, then also interest is needed to be paid. Show cause notice does not specify the interest amount, but still we are required to pay the interest. Yes, interest is not mandatory even if not specified in show cause notice. Sir, you said that with respect to 73, demand order must be passed within 3 years, whereas 74, demand order must be passed within 5 years. If at all these things does not happen, then what is the position? If order is not passed within the time limit, proceedings are deemed to be concluded, no further action can be taken. These are the points from the examination. 75 is a little bit lengthy, but these are the points that are important for your exams. Next one, tax collected but not deposited. That means whatever you collect in the name of the tax, that person that must pay the amount to the government, even it is exempted supply. If it already is exempted supply, you should not collect the tax. If you collect it, you must pay the amount to the government. That is the logic. If at all you did not make the payment, instead of 73, 74, 76 will come into scene. That means it should not be collected, but it was collected by you. Then it must be paid to the government. Otherwise, as per section 76, show cause notice will be issued. Interestingly, no time limit is there for this show cause notice. Whereas 73, 74 time limit is there, unlimited period of time. When the department knows that particular thing, it can issue the show cause notice. But from the date of issue of show cause notice, within 1 year, demand order must be issued. From the date of show cause notice, within 1 year, this demand order must be issued. And the people will say, sir, it is exempted supply. How do you keep the money? They will ask the government. That's why government said that we will credit this amount to the consumer welfare fund, or will refund to the person who bear that particular tax liability. That is the point. The government said. Okay, next point. 79. Modes of recovery. That means after demand order, also you are not paying the money. Demand orders, actually they asked it to pay. You said, very fine, please keep it with you. No, I don't require that. Demand order actually. I said, actually, please listen to. No, sir, you want to issue the demand order? Issue that. You are not paying anything. In this case, section 79 will come into scene, recovery proceedings. First, they will adjust the money. Deduction from the money owed to the defaulter. That means any GST refunds, income tax refunds are there, those amounts will be adjusted first. It is not sufficient. Recovery from the third person, garnishee proceedings, bank accounts, debtors, from them the amount will be recovered. Still not sufficient. Sale of the goods under the control of department. Still not sufficient. Any sureties are given to that particular person. Somebody may have given surety, those amounts will be recovered. It is also not sufficient. It will be recovered as a fine from the magistrate. Then Once it was converted as a fine by the magistrate, his movable and immovable properties can be sold. Those amounts will be recovered as arrears of land revenue. And what about the recovery from company liquidation? From whom we will recover that money? From the official liquidator or liquidator. So, sir, is it possible to pay the tax in installments? Yes, as per section 80, EMI facility is also there with respect to taxes. Commissioner may allow the payment in installments, maximum 24. That means 24 equal installments, you may pay the tax amount in the form of EMI. But any one installment is defaulted, automatically total amount will become payable. This facility is not available to certain cases like self-assessed liability. That means you indicated the tax in GSTR 3B. That amount is not paid. For GSTR 3B means self-assessment. Those self-assessed taxes, EMI facility will not be there for you. Department decided demand order amounts will be there. For them only EMI facility will be there, and it is the discretionary power of the commissioner to give or not. The maximum installments will be 24. There ends this topic of this demands and recovery, and we will see the remaining ones in the next session. So, okay, the next topic will be appeals and revisions. We are going to discuss with respect to appeals and revisions. First, we need to start with the hierarchy of the proceedings and authorities. The first point is here, when a person will go for appeal. When a person will go for appeal. What is generally, authorities can be divided into two types. One is appellate authority, second one is adjudicating authority. So what is meant by this appellate authority and what is meant by this adjudicating authority, ma'am? Yes, ma'am. So what is meant by this appellate authority and what is meant by this adjudicating authority, ma'am? So adjudicating authority means the person who will pass the adjudication orders. Who will pass those adjudication orders generally, ma'am? The hierarchy, let's say, see, this is a hierarchy of GST officers, ma'am. Like administrative officer or proper officer, assistant commissioner, deputy commissioner, joint commissioner, additional commissioner, commissioner or principal commissioner. Generally, these people will be called as adjudicating authority because generally these people will pass the adjudication orders like confirming any tax that is needed to be paid, or in the same way, that means what is the refund, how much refund, to what extent refund can be granted. All these points will be there in this, what we can say, adjudication orders will be there. So if any adjudication order passed by the department is not acceptable to the SSC or the registered person, in those cases, he will go for appeal. In those cases, he will go for appeal. So to whom they will appeal? What is the time limit to make the appeal? All these points will be there under this appeals and revisions chapter, ma'am. So the basic adjudication process begins with the order by the adjudicating authority. So if the order passed by the adjudicating authority is not acceptable, you are having two options. That means the SSC will have only appellate authority or the revisional authority you can go to. Appellate authority will be outside the scope of the department. It is independent body. But whereas revisional authority is the integral part of the taxation department. Let's say the order passed by the assistant commissioner or commissioner like subordinates, it will be reviewed by the commissioner level persons. Whether this fellow has taken any bribes or this fellow has passed the judgment correctly or not, randomly they will verify. Randomly they will verify. Okay. So now you are having two options. You can appeal to the appellate authority or you can go to the revisional authority. Okay, sir, appellate authority is external division, or simply it is an independent body where you can go to the appeal. Revisional authority is the integral part of the department to supervise orders that are passed by the subordinates, whether they are proper or not. So next point. Sir, if at all these orders are actually passed by the appellant authorities are also not acceptable, or revisional authorities may also be not acceptable, in those cases, to whom we will go with? To whom we need to appeal? Appellant tribunal, High Court or Supreme Court? Okay, ma, if the order that is passed by the appellant authority or revisional authority is not acceptable, in those cases we can go to the further appeal, ma. Okay, further appeals is possible to the appellant tribunal, High Court and Supreme Court. This is appellant authority hierarchy, ma. First you will go to appellant authority. If the case is not still resolved or not acceptable, then you will go to the appellant tribunal, after that High Court, after that Supreme Court. So the next point is here. What are the time limits generally with respect to appeals? With respect to SSC, the time limit will be 3 months to make the application, and further extension of another 1 month will be given if sufficient cause is shown. From which date these 3 months will be counted? From the date of communication of adjudication order. Department also can go for appeal, sir. Yes. What is the time limit to make the application? 6 months, and further extension of 1 month will be given. Why generally department will go for appeal? Because with respect to this first point, the appeal goes to appellant authority. The order that is passed by the appellant authority is not acceptable to the department. Department can also go for further appeal. And what about the revisional authority? If the order, say for example, revisional authority like some commissioner, chief commissioner like that, those people has a reason to believe that whatever the judgment that is passed by the subordinate is 100% prejudicial to the interest of the revenue, then he may order that subordinate to go for appeal. Once because with respect to revisional authority, time period will be there within which time you can revise the order. If the time period expires or you are unable to revise those orders, in those cases, what is the thing they will do, ma? They will ask the subordinates to go for further appeal. So that's why this point will come into scene. So now we are starting with the story here, appeals to appellant authority, the first stage. So with respect to appeals to appellant authority, so who is the appellant authority, ma'am? Anybody remembers who is the appellant authority? Who is the appellant authority? Appellant authority will depends upon who is passing the adjudication order. Appellant authority will be decided based on who is passing the adjudication order. If the adjudication order is passed by the superintendent or range persons or AC or ADC, something like that, then joint commissioner appeals is the appellant authority. If the adjudication order is passed by the additional commissioner or joint commissioner, then the appellant authority will be commissioner appeals. If the adjudication order is passed by assistant commissioner, deputy commissioner or superintendent range persons, then who can be the adjudicating authority? Sorry, who can be the appellant authority, ma? Joint commissioner appeals. Joint commissioner appeals is independent person. Just now I told you he is not a part of department. Okay. If the adjudication order is passed by additional commissioner or joint commissioner, then who can be the appellant authority, ma'am? Commissioner appeals will be the appellant authority. The point is, what is the process of this appeal? Sir, is there any time limit to make? Yes, definitely there is a time limit to make that. So regarding this, first you need to file the appeal, ma. What is the time limit to make the appeal to the appellant authority, ma? 3 months. To whom this time limit is? Taxpayer means SSC. SSC can go for appeal to the appellant authority. Either it can be Joint Commissioner Appeals or it can be Commissioner Appeals, depending upon the adjudication order who passed it. Okay, in those cases, what is the position, ma? File appeal within 3 months. What is the time limit to make the application, ma? 3 months. Sir, is it possible to get the further extension? Yes, for another 1 month. Another 1 month. So from which date this particular 3 months or 1 month shall be counted from? From the date of order or from the date of order of communication? Date of order is different from date of communication of order. Let's say date of order can be November 11th or it may be communicated on November 13th. In that case, from November 11th or November 13th, which date we shall consider this 3 months or 1 month, ma? November 13th, that is the date when the order is communicated. From that particular date, this 3 months or 1 month shall be counted from. Next one. Sir, what is the form number to make the application, sir? APL 01. What is the form number to make the appeal to the appellant authority, ma? APL 01. Sir, once this form is properly submitted, they will issue you a provisional acknowledgement. That means it is not the final. It is a provisional acknowledgement, means still something is needed to be completed by the SSC. What is the part he need to complete now? Along with this APL 01 application, he shall provide the copy of the order against which he is appealing. Let's say order is passed by Assistant Commissioner. You are going for appeal. Then based on which order you are going for further appeal, that order copy must be submitted to the appellate authority. Sir, what is the time limit to make the application, sir? Sir, what is the time limit to submit the copy of the order? Within 7 days. Once it was filed, final acknowledgement will be issued. Okay, ma? First, when you go for this appeal, appellant authority, who is the appellant authority? Who is the appellant authority? If the order is passed by superintendent range persons, Joint Commissioner will be the appellant authority. If the order is passed by Additional Commissioner or Joint Commissioner, in those cases, Commissioner Appeal will be the appellant authority. What is the time limit to make the application? 3 months. Is it possible to further extend that? Yes, another 1 month. From which date this 3 months or 1 month, that additional 1 month shall be counted? From the date of order or date of communication of order? Date of communication of order. What is the form number to go for appeal? APL 01. Once application was filed, what will be issued? Provisional acknowledgement. When final acknowledgement will be issued? When you submit the copy of adjudication order within 7 days. Since, sir, my question is here, I just forgot to ask you, if copy of the order is submitted within 7 days, then the date of provisional acknowledgement is deemed to be the date of application. What are the word I said? If copy of the order is issued within is submitted, I just used the wrong word, is submitted within 7 days, then date of application is equal to date of provisional acknowledgement. Sir, if we did not submit it within 7 days, sir, within 7 days, sir, that means not submitted within 7 days, then the date of final acknowledgement is the date of application. Based on that, your date of application can be within 3 months or after 3 months also. Na? If the application is within 3 months, then it is accepted. If the application is after 3 months, unless further extension is granted, application is time barred. That means it is invalid. So in order to see those points, date of application is relevant. So what is the date of application? If based upon which order you are going for appeal, that adjudication order copy is submitted within 7 days, then what is the date of application? Date of provisional acknowledgement. the date when this APL01 was filed, that is the relevant date for application. If the copy was not submitted within 7 days, then the date when this copy was submitted and final acknowledgement is issued, that particular date is the date of application. Simply, if the copy is submitted within 7 days, date of application is equal to date of provisional acknowledgement. If not within 7 days, then date of final acknowledgement is equal to date of application. Got the point, ma? Based on this, application can be a valid or invalid application within the time limits based on. Okay, next. Make mandatory pre-deposit of disputed amount. Sir, how much amount we need to pre-deposit? Pre-deposit requirements will be 100% of the accepted tax, interest and penalty, 10% of the disputed tax amount, or that with respect to CGST maximum 25 and with respect to IGST 50. And if at all the appeal is against detention or seizure, this 10% will be replaced by 25%. So what does this mean? The point is here. Let's say the total amount is 10 lakhs, ma'am. The amount that is specified in the notice is adjudication order is 10 lakhs. The amount that is specified in the adjudication order is 10 lakhs. SSC is saying that I am ready to pay 6 lakhs, but 4 lakhs is not acceptable to me. If you want to go for further appeal, then how much pre-deposit you need to make now? You want to go to appellant authority for appeal, you need to make the pre-deposit now. So how to compute this pre-deposit? What is the acceptable amount and what is the disputed amount here in this example? How much is acceptable amount? 6 lakhs is a accepted amount and 4 lakhs is a disputed amount. This is undisputed amount and this is disputed amount. Okay. With respect to undisputed amount, how much amount you need to pay? 100%. With respect to disputed amount, how much amount you need to pay? 10%. So here 6 lakhs plus in the 4 lakhs 10% means 40,000. It will be 6.4 lakhs now. 6.4 lakhs is a pre-deposit you need to make with the appellant authority in order to go for appeal. That means if at all it is a undisputable amount, then what is the position, ma? 100% of the tax, interest. I just specified you tax only. But tax, interest, penalty, everything must be paid. Along with that, in the disputed amount, 10% must be pre-deposited with the appellant authority. Then only appellant authority will take up the case. See, pre-deposit requirements, 100% of the accepted tax, interest and penalty. 100% of the accepted tax, interest and penalty. So 100% of the accepted tax, interest and penalty must be deposited. Along with that, in the disputed amount, how much amount you need to deposit, ma? 10%, subject to a maximum of 25 crores with respect to CGST, 50 crores, double amount na, with respect to IGST. If at all the order you are going against is a seizure order or a detention order, then this 10% pre-deposit will be replaced by 25%. Okay, man? Okay. Next. See, this is a point I already told you. So, appeal filing date determination. That means how to decide on which date the appeal was filed. See, if the order copy is submitted within 7 days, the date of appeal filing, that means the date when provisional acknowledgement is given, that is the relevant date for appeal. Otherwise, if adjudication order copy was not submitted within 7 days, then the date of submission of this order copy, that means that simply at that time final acknowledgement will be given. That is the relevant date. That is the relevant date for date of appeal. Second one. This is with respect to appellant authority. And another word is also, I just told you that with respect to this one, department also can go for appeal. Just like SSC, in which way he can go for appeal, in the same way department also will go for appeal. So this is called the review application. Generally, commissioner can examine the order of legality or propriety of that particular case. That means whether the what we can say subordinates passed orders are correct or incorrect, any bribes was taken or not, or he has considered all the material facts while passing that particular order. Everything will be actually reviewed by the commissioner. If commissioner finds that something is actually prejudicial to the interest of the revenue, then he may direct the subordinate to go for appeal. What is the time limit to make the appeal for the department, ma? 6 months. Is it possible to extend that? Yes, for a further period of 1 month. Sir, any pre-deposit is needed to be paid by the department? No. No pre-deposit is required for the departmental appeals. But whereas with respect to the SSC, he need to make the pre-deposit, ma. But with respect to department, no pre-deposit requirements will be there. Okay. Next point. Appellant authority process. Now, in which way the appellant authority will deal this with particular matter? It will follow the principle of natural justice. Means appellant authority will follow the principles of natural justice, means opportunity of being heard. Before passing any order by the appellant authority, principles of natural justice must be followed. Principles of natural justice must be followed. That means opportunity of being heard must be provided. Okay. Next one. What are the powers that are there to the appellant authority? It may confirm the adjudication order, it may modify the adjudicating order, or it may annul the original order. That means confirm, saying okay, modifying, partly okay and partly not okay, annulling, saying not okay, dismissing the order. But it cannot refer the case back to the original authority. That means this appellant authority cannot say that the person who has passed this adjudication order is not conducted the inquiry properly. Please do the inquiry from the stage 1 and please once again pass the adjudication order. This order is known as refer the case back. But this authority will not be there with appellant authority. Appellant authority will have only 3 rights. It can say confirm, that is saying okay, modifying, saying not okay, and annulling, saying, modifying means partly okay and partly not okay, annul means not okay. Only these 3 types of authorities will be there with the appellant authority. Refer the case back will not be there with this appellant authority. Sir, what is the time limit to make the order? What is the time limit to make the judgment here? Must issue a speaking order. See, it is not a written order. It will be a speaking order. And what is the time period to issue that order? 1 year. While computing this 1 year, what will be excluded? Court stay order. Generally, if at all any court has given the stay, that stay order time period will be excluded while computing this 1 year. Okay, ma? This is the stage. Next one. What is the next one? Revisional authority. Sir, what is meant by this revisional authority? What is meant? Just now we saw what is meant by appellant authority. When we will go to the appellant authority, what is the pre-deposit we need to make? What is the time limit within which the judgment will be given? We saw these things. Now the next point is, what is meant by this revisional authority? What is meant by revisional authority, ma? Anybody remembers or knows what is meant by this revisional authority? Generally, the order that is passed by the subordinate can be reviewed by the higher level authority, and any mistakes are which are apparent on the record, those mistakes can be rectified by the higher level authority on its own motion, or applied when actually the SSC brings those things within the bring the matter to the notice of this particular revisional authority. Generally, with respect to the orders that is passed by below the rank of joint commissioner like that, principal commissioner or will be the what we can say the appellant, revisional authority. If the order is passed by these commissioners, then the chief commissioner's wing will be there. Those people will be the higher authority. Na? Those people will have the authority to revise those things. Ma. So revisional authority means the authority which can revise the order that is passed by his subordinate. Revisional authority means the authority, the higher authority who is having the authority to revise the order that is passed by the subordinate. Okay. With respect to this point here, initiation of revision. So initiation of revision will be revisional authority can act on his motion. That means voluntarily himself he can do that upon the information. That means upon the information means SSC asked that, sir, this fellow, your subordinate, did not consider these material factors. If we consider these material factors, the judgment would have been somewhat at a different level. Upon like that, that information was submitted by the SSC or on the commissioner's request. That means SGST commissioner may request the CGST commissioner to look into these matters, or CGST commissioner may request the SGST commissioner to look into these matters. On all these cases, that order will be revised. So when the revision will be initiated on his own, that means voluntarily. Second one, upon the information, any tips, information, any news, any secret information is having based on that, or on the commissioner's request. Or on the commissioner's request means CGST commissioner may request the SGST commissioner, or SGST commissioner may request the CGST commissioner. Okay. Once revision was initiated, he can examine any proceeding records. He can examine any proceedings records. What are they, ma'am? It can examine any proceedings records. That means whatever the records that are there, all those records can be examined by these revisional authorities. And once they actually saw that, based on which grounds these revisional authorities will revise that. If the order is erroneous, mistakes are there in that order, or prejudicial to the revenue's interest, department interest, illegal, improper, material facts was not considered, and sometimes COG will be there now. Who is COG? Comptroller and Audit General of India. He will audit the our government related books of accounts and all these things now. So based on the observations of this COG also, a revisional order can be passed. So these are the cases where the grounds for revision, it can be asked for 3 marks generally. What are the grounds for revision by the revisional authority? Pure theory chapters now these are. There is a possibility that a theory question can be asked, like what are the grounds for revision by the revisional authority? So when the order that is passed by the subordinate is erroneous or prejudicial to the interest of the revenue, illegal, improper, material facts not considered, or based on the observations of the COG, these are the cases where a revisional order can be passed. So how to do the revisional work then? How to pass the revised order then? Revisional authority may stay the operation of the order, conduct further inquiry after giving opportunity of being heard, pass the order to enhance, modify, annul the original order. That means he is also not having the authority to refer the case back. So that means whatever the adjudication order that was passed, it should not be proceeded with. Revisional authority may stay the operation of the order means what is the position, ma? May stay the operation of order means what is the original adjudication order he is reviewing, temporarily he will stop the effectiveness of this particular order until further instructions were given. That adjudication order will be on withstand. That means that adjudication order will not be what we can say will not be undertaken or enforced until further instruction that is given by the department, that is the revisional authority. Next one, he may conduct further inquiry after giving opportunity of being heard. Why opportunity of being heard must be given in further inquiry? In the further inquiry, what will happen, ma? If the revision authority has done further inquiry, it may increase the liability of the assessee. Na? In that case, before passing that revisional order, opportunity of being heard must be given. Like, sir, this is the case. In this case, that means, say for example, previously the amount is 10,000. Revisionary authority now want to increase it to 15,000. That means now your liability is going to be increased by 5,000. In those cases, opportunity of being heard must be given because this affect the interest of the assessee there. Next one. What are the orders that can be passed by this revisional authority, ma? It can pass the order to enhance it. That means liability can be increased or modified, or order can be cancelled. Sir, what are the limitations of revisional power? That means what are the things the revisional authority cannot do? What are things he cannot do, ma, here? Cannot revise if the appeal is already filed or 6 months have not been passed. Why these orders cannot be revised? First point, the order was already pending in an appeal. If the order is already pending in an appeal, those orders cannot be revised. If you revise those orders, it is actually an insult to the appellant authority there. Because matter is pending before the appellant authority, now you are passing the revisional order. It is not justified, na? That's why the matter already in appeal cannot be revised. Second one, 6 months have not been passed. That means why within 6 months there is option to go for appeal, na? 6 months plus further extension of 1 month. Department also can go for appeal. Already there is a possibility to go to the appeal. Then what is the need of revision there? So that's why in those cases, order cannot be revised. Next one, revision is not allowed after 3 years from the original order. So what is the maximum time period where you can pass the revision order, ma? 3 years. From which date these 3 years shall be counted from? From the date of original adjudication order. And cannot revise the order that already been revised. That means a revisional order again cannot be revised. That means a revisional order can be passed only once. A revisional order can be passed only once. If the order is already revised, a second time revision is not possible. So this is with respect to revisional authority context, ma. Sir, if the order that is passed by appellant authority or the order that is passed by revisional authority is not acceptable, then what is the next stage where we can go to the appeal? What is the next stage, ma, where we can go to the appeal? Tribunal. Appellant tribunal is the next stage. If the order that is passed by the appellant authority or the order that is passed by the revisional authority is not acceptable, then we can go to the appellant tribunal. So with respect to appellant tribunal, what is the position, ma, here? When we will go to the appellant tribunal? When we go to the appellant tribunal, if the order that is passed by the appellant authority or order that is passed by the revisional authority is not acceptable, then we will go to the appellant tribunal. Okay. Filing process for the SSC. That means what is the time limit to make the application, ma? Okay, what is the time limit to make the application, ma? 3 months. Sir, is it possible to extend the time period? Yes, for a further period of another 3 months. Whom we are appealing here? Appellant tribunal. When we will go to the appellant tribunal? When the order is passed by the appellant authority or revisional authority is not acceptable, then we will go to the tribunal. What is the time limit to make the application? 3 months. Is it possible to further extend that? Yes, for another 3 months. What is the form number? In MCQs it can be asked. APL 05. Any fee is required to be paid? Yes, based on the disputed amount, but maximum fee can be 25,000. Sir, is it any requirement to make any pre-deposit? Yes. What is the pre-deposit you are required to make, ma? 20% of the disputed tax, maximum 50 for CGST, 100 for IGST. That means what is the pre-deposit you need to make in case of this, what is it, appellant authority, ma? 10%, 100% of the undisputed amount. With respect to disputed amount, 10%. Sir, my question is here, in addition to the 10%, 20% is needed to be deposited or 10 plus 10 here? Already you had made 10% pre-deposit, na? 20 means another 10 is sufficient, or that 10 plus this time 20 is needed to be deposited. What is your answer? If at all you listen to the classes at that time. That means in total it will be 30 or in total it will be 20. Initially you made a pre-deposit of 10% at the time of appellant authority. Now at the appellant tribunal, what is the pre-deposit you need to make, ma? 20%. Now what is meant by this 20? 10 plus 20 or 10 plus 10 is equal to 20? 10 plus 20. It is not 10 plus 10, ma. In addition to the 10%, extra 20% is needed to be deposited. That is in total 10 plus 20, 30% is the pre-deposit amount now. Okay, ma. 10% at the stage of appellant authority, 20% at the stage of appellant tribunal means 10 plus 20 total 30%. Sir, department also can go for appeal, sir? Yes, department also will go for appeal. What is the time limit to make the application, ma'am? Within 6 months from the date of order. Any pre-deposit is required to be made by the department? No. What is the form number? APL 07. Whereas SSC APL 05. Okay. So with respect to appellant tribunal, what is the structure and jurisdiction we need to see? Here, with respect to tribunal, they are divided into two parts. One is national or regional bench, and second one is state or area benches. They are divided into two types. One is national or regional bench. Second one is state or area bench. Generally, state-wise benches or area-wise benches will take up the cases other than place of supply. Why they can't take up the place of supply matters there? Because place of supply can be between two states. Therefore, a state bench cannot actually take up the cases where two states are involved. Those cases will be handled by national bench or regional bench. Okay, ma? Other than place of supply, whatever the orders that are passed by appellant authority or revisional authority, we can go to the appeal to the tribunal. If the matter involves place of supply matters, then the application directly go to national bench or regional bench. Sir, who can be the members of these benches, sir? Whether it may be a state bench or a national bench. The composition of the bench will be one judicial member, he will be the president, one technical member representing the center, one technical member representing the state. Total 3 members will be there. One will be the president, that is the judicial member, and the technical member will be a representative of center, and another state is one technical member. So this is the composition of the board. Okay. Next point is, what are the tribunal powers and procedures? It is not bound by the civil procedure code, but follows principles of natural justice. That means the court orders, court way cannot be followed. It will have its self-regulatory mechanism. Simply, appellant tribunal is a self-regulatory mechanism, but while that self-regulatory mechanism is followed, principles of natural justice must be followed. What is meant by principles of natural justice, ma? Opportunity of being heard. And what are the powers that are laid to the tribunal? It can confirm, it can modify, it can cancel the order, and this is the important one. It refer the back to the lower authority, which is not available with the previous appellant authorities. Now it is there with this appellant tribunal. Along with confirming, modifying, cancelling the decision, it can refer the case back to the original authority who has passed that particular order. And what is the time limit to make the order, ma? Within 1 year. And whatever the powers that are there to the civil court, all those powers will be there with the tribunal also. That means it can issue the inquiries, it can summon any person to attend before it. Court can summon to any person, hey man, you need to attend before me, then you need to attend. That powers are also there to the tribunal. The powers which are there to the court, same powers will be there with this tribunal also. Okay. This is the tribunal matter. Next one is if tribunal order is also not acceptable to us, then we will go to the High Court. So with respect to that High Court appeals here, so when you can go to the High Court, against the orders of state or area bench. That means national bench orders will directly go to Supreme Court. Why? Because national bench will handle the matters of place of supply. If the national bench handles the matters of place of supply, in those cases, High Court cannot take up these cases. Because High Court is the ultimate judicial authority for state only. But place of supply involves more than one state also. That's why if the matter involves the place of supply and it will be dealt by the national bench, the matter directly goes to, after national bench, Supreme Court it will go to. That is the point. That's why if the order is passed by state bench or area bench, then only the matter will go to High Court. But in order to take up the case by the High Court, the question of law must be involved. Question of fact, question of law. I think you know these words. Question of fact means whether how much GST is payable. 10%, 20%, 30%, 10 lakhs, 5 lakhs. These things comes under question of fact. Up to question of fact, the ultimate authority will be tribunal only. That's why appellate tribunal is the ultimate fact-finding authority. In MCQs it can be asked. Who is the authority for facts finding, or who is the ultimate authority for facts finding, or who is the authority for fact finding? Ultimate authority is there. Who is the person? Tribunal. Appellate tribunal is the ultimate authority of fact finding. So if the fact finding is the issue, then whatever the order that is passed by the tribunal is final. But whereas if at all it involves question of law means interpretation of law issues are there. You are saying that it is a supply. That fellow is saying that it is not a supply based on a particular clause. The clause is saying that it is not liable. Department saying no. The clause meaning is liable only, not liable. Like that they are having the argument on a particular clause. Here interpretation is the issue. It comes under question of law. If the question of law is involved, then only the matter will go to the High Court. And what is the time limit to make the appeal? Extension unlimited, because it is a court. And what is the form number? APL 08. Is pre-deposit is required? Yes, 100%. Disputed or undisputed, it does not matter. 100% of the amount must be pre-deposited. And see, next one is Supreme Court appeals. So with respect to Supreme Court appeals, what is the position here? When you can go to the Supreme Court? If it is a national or regional bench or High Court. If High Court order is not acceptable, or a regional court, regional bench order or national bench order is not acceptable, you can go to the Supreme Court. But the condition is High Court must certify that the case as fit for appeal in Supreme Court. Because Supreme Court will have so many other issues. It does not have the time to discuss about your penny issue. Because it deals with national interest, country's interest. So if at all that much intensity is there in the case, that means in our language, definitely our case ki High Supreme Court lo vadinchenta scene undali. That case will have the capability and caliber to be discussed in the Supreme Court. It should have that particular state or status to be argued in the Supreme Court. And that must be certified by High Court. Then only the case will be taken by the Supreme Court. And it will follow the time limits as per the CPC, Civil Procedure Code, and it also requires 100% pre-deposit. And the next point is here, some last points. This is also important for the theory point of view. Non-appealable decisions. That means with respect to few cases, appeal is not possible. With respect to few cases, appeal is not possible at all. What are those cases? Orders to transfer the proceeding between the officers. Sir, previously this fellow has taken case, sir. She's a lady officer. She's actually very nice to me. But this fellow is a gent officer. He's not dealing with me properly. So I just want her back. It is not possible. So because here, the transfer of the proceedings between one officer to another officer is a internal matter of the department. You cannot actually ask the department to send which officer to interrogate you or investigate you. Okay, that's why those orders are non-appealable. And order for payment of tax and installments, I think you are there in the yesterday's session, section 80. When with respect to with respect to tax payments, installments will be given. What are the maximum number of installments that can be given by the commissioner? Very good, 24. Is EMI facility, I told you, 24 EMI facilities will be given to you. One of those installments are not paid, then automatically entire amount will become payable. Those are the points that are there in section 80, demands and recovery. Previous day we discussed that point. Okay, if those orders, commissioner does not want to give you installment, then you cannot go to the appeal. Sir, the commissioner is not giving me installments or EMI facility. Please ask him or instruct him to give me EMI facility. You cannot ask the appellant authority there. Order sanctioning prosecution. Prosecution means criminal liability. Civil liability, criminal liabilities will be there, Nama. Whenever prosecution is there, it is a criminal liability. So orders with respect to criminal liabilities, you cannot go appeal as per this GST. You can go for IPC then. Orders for seizure, retention of documents. Sir, our books are seized, our goods are seized. Please ask him to release him. You cannot go order with respect to, you cannot go to the appeal with respect to seizure orders. These are the orders where appeal is not possible. Orders to transfer the proceedings between the officers, installments, prosecution, seizure orders or retention of documents. 5 points. These 5 points, if at all you are able to remember, that is okay. 3 to 5 marks. Even it is asked, you can write in a sentence form. Orders to transfer the proceedings between the officers, orders for the payment of tax and installments, orders sanctioning the prosecution, orders for seizure or retention of the documents. Okay. Next one is withdrawal of appeal. Sir, is it possible to withdraw the appeal? Yes. Appellant may withdraw the case before the notice or order is issued. That means definitely appeal can be withdrawn before issue of any notice by the appellant authority to the other party. But once notice is issued to the other party, the case can be taken back only with the approval of appellant authority. Why this clause is there? Because adjudicating authority like commissioner, those people may threaten these SSCs. You did not withdraw the case, then I will issue you another show cause notice. Okay, like that they can, there is a possibility to threaten the SSC. If you go for appeal, then appellant authority will ask, anybody who is actually threatening you to withdraw the appeal, or you are doing it voluntarily. If at all you are voluntarily withdrawing the appeal, then why you come to the appeal then? They will ask you these questions. If the proper answer was given, then okay, you can withdraw it. Otherwise, a fine or a penalty will be imposed on the SSC then, because you are wasting the valuable time of the appellant authority there. That's why these are the points. For appeals with final acknowledgement, withdrawal is subject to C, appellant authority approval. If it approves, then only you can do that. This is with respect to this appeals and revisions. Last point is, that means offences and penalties. Once offense and penalties is over, I will give you 5 minutes break. Later on, I will start place of supply then. Okay. So what is this offences and penalties? What is meant by offense and what is meant by penalty here? Offense means mistakes, whether they are bona fide or they may be fraudulent. With respect to those offences, what are the penalties that are prescribed under the Act? Those are the things we are seeing now. First section is we need to see section 122, penalty for certain offenses. We need to see what are those cases. Here, these are the cases. What are the cases here? Okay, just wait. Supplies the goods. What are the section we are dealing with? 122. We are discussing, because offenses and penalties starts with 122 here. So with respect to this 122, what is the first point we are discussing here? Supplies the goods or services without invoice means, supplying the goods without invoice means black money, nothing but. You are making the supply, but without invoice means without recording them. In those cases, 122 will come in the scene. With false invoice means data may be wrongly entered. You sold 100 units, instead you earned some 20, 30, 40. It is a false invoice then. In those cases also 122 will come into scene. Suppress the turnover, showing lesser sales number. Fails to deduct the TDS, section 51. Fail to deduct the TCS. Disposes of or tampers with detained, seized or attached goods. That means seized goods means a seal will be there. White color cloth will be there, a stamp, seal will be there. Once there was a seal, it can be opened only by the department. If you try to open it, if you tampers the seal, then also this 122 will come into scene. Next one, fails to obtain the registration, even though you are required to take the registration as per 22 or as per 24, but still you did not apply for the registration. Or submits false information regarding the registration. Somebody PAN number, somebody's Aadhaar, based on that you are taking the GST registration in those cases. And issues invoice using other registrations. That means instead of specifying your GST number, you are issuing the invoices on another party GST number. And fraudulently obtains any refund. And issues invoice without supply. These are called as dummy invoices or fake invoices in order to take the wrong ITC. In order to claim the ITC, goods or services must be received. Without receiving them, you are claiming the ITC. Then, transport the taxable goods without cover documents. Means, what is very good. In e-way bill, what are the documents we discussed? If at all it is a taxable supply, tax invoice. If at all it is a composition supply, bill of supply. If at all it is the import, bill of entry. If at all it is a sale or return basis or job work, DCA, delivery challan, along with the consignment value is more than 50, e-way bill is required. Those are the cover documents. Those documents are not there, but still you are transporting the goods. Then also section 122 will come into scene. Tampers or destroys the evidence. Whenever you are destroying any evidence, then also 122. Supplies the goods or transport the goods which are liable for confiscation. I think I told you the difference of seizure and confiscation in the previous session. What is meant by the word seizure? What is meant by seizing the good? Possession will be there with the department, but ownership is there with the SSC. Once the confiscation order is passed, along with possession, ownership is also shifted to this department. Those goods are liable for confiscation, but still you sold those goods. Collects the tax, but fails to make the payment to the government within 3 months. Distribution of ITC against to section 20, ISD. And falsifies the records. That means black money, white money transactions. In all these cases, what it will come into scene? Section 122 will come into scene. So if 122 was there, then what is the position? Okay. In those cases, we discussed about what are the cases that are covered under 122. Major focus will be 122. What is the major focus here? Simply making the supplies without invoice, TDS, TCS, tampers with important ones, tampers with seized goods, registration, failure to obtain registration, or issuing invoice without supply, ITC, and tampering the evidence. These are the cases where major focus you need to, from the examination point of view, you need to keep. Okay, sir. These offenses are committed. Then what are the penalties? What are the penalties for the above offenses? Penalty of 10,000 rupees, that is in CGST, or tax amount involved, whichever is higher. What is the penalty that will be levied as per 122 ma? 10,000 rupees or tax amount involved, whichever is higher under CGST. Similar penalty will be there under SGST also. For bogus transactions, penalty equal to the amount of tax involved. What is meant by bogus transactions? Dummy invoice, and invoice without supply, supply without invoice, without taking registration making the supply, falsifies the accounts, like that. In those cases, those things, bogus or dummy transactions, what is the penalty that will be levied? 100% of the tax. Equal to the amount of tax involved. Na? In that case, what is the penalty that will be levied? 100% of the tax. And for the offenses not involving fraud, willful misstatement, suppression, that means they are unintentional mistakes. If at all they are unintentional mistakes, what is the penalty ma? 10% of the tax or 10,000, whichever is higher. If at all the offense involves fraud, willful misstatement, etc., what is the penalty that will be levied? 100% of the tax or 10,000, whichever is higher. What is the difference ma here? 10% of the tax, this is 100% of the tax. If at all it is unintentional mistake, then 10% of the tax or 10,000, whichever is higher. If at all it is the intentional one, then what is the position ma? 100% of the tax or 10,000, whichever is higher. Penalty for other persons means who helped this fellow. The person who has committed the offense in 122, he must take help of some other persons. Na? The persons who supported that fellow in this crime, those people covered under the word other persons. For them, what is the penalty that will be there? Up to 25,000 for the persons not directly involved, but party to evasion or aiding the offense or failing to attend the summon or produce the documents. When the court issues the summon, you must attend before the court. You did not attend it. You did not cooperate for investigation. ఏది అడిగినా కానీ మర్చిపోయాను అంటున్నాం. గుర్తులేదు, తెలీదు, మర్చిపోయాను. You're saying only these three words. In this case, definitely you will be liable for a penalty of up to 25,000 because you are not cooperating with the department there. This is 122. Next one is this is 123, 124 and 125 in sequence. What does 123? Just only you need to remember the amounts. What is the data? You can ignore that because they are not asking you. This is more than sufficient for the exam. Failure to furnish information written. That is the return that is needed to be submitted by various government departments. This return, not by us, by the government departments. They need to file it with GST department, the data. Okay. What is the penalty? If at all information written is not furnished, per day 100 rupees, subject to a maximum of 5,000. If statistical information is not submitted, a penalty of 10,000. And if at all it is a continuous default, per day 100, subject to a maximum of 25,000. And these two are not that much important, but this one can be asked in the exam. Even in CA final also, this 125 was asked a few times. Whenever there is no possibility for levying any penalty, in those cases, by invoking section 125, a penalty up to 25,000 rupees can be levied. Where no specific penalty is provided elsewhere in the Act, then by using the power that is given by this 125, what is that? A general penalty of up to 25,000 can be levied. That is 125. Next one is 126. What is this 126 here? General disciplines or guidelines relating to penalty. While levying the penalty by the departmental officer, what is the thing you need to follow? What is the thing you need to follow? No penalty in certain cases. Minor breaches of less than 5,000. Okay, there was a mistake, but the amount is less than 5,000. Materiality level fixed is in the case of offenses is 5,000 here. Minor breaches of less than 5,000, generally no penalty will be levied. And there is a mistake in procedural requirement. GST return is required to be filed. It was filed belatedly. It is a procedural requirement where the default happened. In those cases also penalties cannot be levied under these sections. Document errors apparent on the face without fraudulent intent. That means apparent on the record. Two twos are, you just write there 22 instead of 4. By mistake it happened. Just by seeing that we can say that 2 into 2 is 4. By mistake it was written as 22. That is called as mistake apparent on the record. Just by seeing it we can identify the mistake, and it is unintentional one. In those cases also no penalty can be levied. And these are the penalty guidelines. Penalty depends upon the degree and severity of the breach. More severe crime, more penalty. Less severe crime, less penalty. That is the point. No penalty without show cause notice and opportunity of being heard. In order to levy the penalty, first you should issue the show cause notice. After issuing the show cause notice, you must listen to the other party's explanation. Opportunity of being heard must be provided. Principles of natural justice must be followed. Then only the penalty must be levied. Next one. Nature of breach and applicable provision must be specified. You must say, when you just call him and say that, "Arey please pay 1 lakh rupees as a penalty." It is not the right process. No? First you need to tell him that what is the breach he has done, what is the mistake he has done. And after that, if this mistake happened, because this section is applicable, based on this provision, you are required to pay that much of penalty. You need to explain everything to him. That means you can't say directly, "Please pay the penalty." You must specify him what are the grounds for that, what is the breach that happened. If the breach happens, what is the applicable provision for that? All must be specified there. And voluntary disclosure considered as mitigating factor. That means before investigation, he just converted himself into an approver. "Yes, sir, I made the mistake. I'm admitting that." So these are the amounts that are there. One bag is there in that particular cupboard. Second bag is there in the bathroom. In that actually some 20 lakhs amount is there. He disclosing everything by himself. Marin Manish. In those cases, definitely when he made the voluntary disclosure, penalty must be reduced. Because he disclosed himself, na? There must be some courtesy towards that. That is the point. These are the general guidelines. Sometimes the important area is only this one. MCQs it can be asked. Next one is, after that, the important area in offenses and penalties is section 129. Detention, seizure and release of the goods or conveyance in transit. What are the conditions for seizure? So what are the conditions for seizure, ma'am? Goods transported or stored in violation of the act. That means whenever the goods are transported or stored in a warehouse in violation of these conditions that are specified in the act, then the goods, documents, vehicle can be seized. Goods, documents, vehicle can also be seized. Sir, in that case, what is the position, sir? Once the goods are seized, what is the release procedure? Owner comes forward, then 200% of the tax or 2% of the value or 25,000 with respect to exempted goods, whichever is lower. For exempted goods, this point will come into scene. Generally, 200% of the tax you need to pay that. And if the owner does not come forward, in that case, 50% value of the goods or 200% of the tax payable, whichever is higher for the taxable goods, 5% of the value or 25,000, whichever is lower for the exempted goods. That means owner comes forward means, owner said that, "Sir, these are my goods." Somebody must come forward and claim the ownership of those goods. In those cases, what can be the penalty, ma? 200% of the tax with respect to taxable goods. With respect to exempted goods, 2% of the value or 25,000, ma. If the owner does not come forward, that means the transporter is saying that, "I don't know who is the owner. Somebody asked me to transport the goods, I am transporting that. but I don't know who is the owner there. In those cases, what can be the penalty, ma? 50% value of the goods or 200% of the tax, whichever is higher. If at all it is a taxable good, if at all it is exempted good, then 5% of the value or 25,000, whichever is lower. Some other points, ma. Notice to be issued within 7 days of seizure. Once the goods are seized, notice must be given to the transporter. Once notice is given within 7 days, order will be passed, seize order. Penalty imposed after giving opportunity of being heard. If the penalty is not paid, above the said penalty is not paid, then the goods will be sold within a period of 15 days. Above penalty is not paid, automatically the goods are sold within 15 days. What about the transporter, sir? His vehicle. His vehicle can be released upon the payment of penalty of 1 lakh or tax amount involved therein, whichever is lower. 1 lakh rupees or tax amount, whichever is lower. By paying that amount, the vehicle can be released. This is a point, ma. And the next one is here, 130, confiscation. What is this confiscation, ma'am? After seizure, what is the next order that will be passed, ma? Confiscation. What are the grounds for confiscation? Supplying the goods in violation of the act, supplying the goods without registration, not accounting for the goods, that means not recording them in the books of accounts, using the vehicle in violation of the act, and whatever the thing you will do, you have done it with the intent to avoid the payment of tax. These cases, a confiscation order can be passed. And what is the penalty or fine that can be levied under this section, ma? We're talking about 130 now. So goods or conveyance liable for confiscation and penalty under 122. How much penalty that will be levied under 122, that will be levied. And along with that, option to pay fine not exceeding the market value of the goods minus tax chargeable not less than 100% of the tax payable on goods. Simply, what is the position, ma, here? What is the penalty you need to pay for the releasing of those goods? Market value of the goods, not the tax amount they are asking. Market value of the goods minus GST. How much amount that will be there? That is the maximum penalty that can be levied. Minimum penalty is 100% of the tax. Maximum penalty is market value minus GST. Minimum penalty is 100% of the tax. Sir, if at all it is a hired conveyancer, then equal to the tax amount you need to pay in order to release that vehicle. So these are the important points in this offenses and penalties, ma. Okay, ma. So the next topic will be place of supply. Why one should know regarding the place of supply, ma? Why one should know regarding the place of supply? That means to know which type of supply. In order to pay the GST, you must know what is the tax you need to pay. You are required to pay CGST plus SGST, or you are required to pay IGST. That will be decided by place of supply. If LOS, POS are there in the same state or same UT, it is the intrastate supply. If LOS or POS are there in the what we say different states or different UTs, or one in state, another one is in UT, it comes under interstate supply. So with respect to this place of supply, ma, section 10 to 10, 11, 12, 13 deals with place of supply. In that, this is section 9, what you are seeing on the screen, that is territorial waters and continental shelf. What is meant by territorial waters, ma? Up to 12 nautical miles from the baseline. Up to 12 nautical miles, they are called as territorial waters of India. So if any service that is done in the territorial waters, what can be the place of supply? Generally, what can be the services that can be done in territorial waters? Example, best example for that is ONGC oil rigs. That oil rigs will be there in the sea waters, na? So they are not in the land area. They are there in the territorial waters or exclusive economic zone. In that case, they are not there in any particular state or UT, na? In that case, what is the place of supply? how to decide the place of supply of any supply that was done in the territorial waters. As per section 9, POS of those cases will be the coastal state or UT, which is the nearest place of appropriate baseline. That means the place where this ONGC is there. The place where this ONGC is there. So regarding that, what is the position, ma? Definitely the nearest state to that particular place where this particular ONGC rig is there, the place will be the place of supply. That is the point you need to remember. Sir, beyond 12 nautical miles up to 200 nautical miles, that sea waters is known as exclusive economic zone. The land below the sea waters is known as continental shelf. What is this? I think you remember, na, up to 12 nautical miles is the territorial waters. Up to 20 nautical miles is Indian customs waters. Up to 200 nautical miles is exclusive economic zone. So the land below the territorial waters is known as seabed and subsoil. Okay, ma, up to 12 nautical miles is territorial waters. From the baseline up to 20 nautical miles is Indian customs waters. From the baseline up to 200 nautical miles is exclusive economic zone. The land below the territorial waters is known as seabed and subsoil. The land below the exclusive economic zone is known as continental shelf. The land below the territorial waters is known as seabed and subsoil. The land below the exclusive economic zone is known as continental shelf. So the continental shelf is treated as a separate UT. See, as per the IGST Act section 9, continental shelf beyond 12 nautical miles up to 200 nautical miles, which is a continental shelf, carved out as separate UT named as other territory. Therefore, it is also part and parcel of India. Any economic activity that is carried in these areas, they will also attract GST. This is section 9. What we have discussed is territorial waters, section 9. Next one is POS for the domestic supply of the goods. That is, what is the section number, ma? Section 10. With respect to section 10 here, that is place of supply with respect to domestic supply of the goods. What is the first one? Whenever there is a physical movement of the goods, 10(1)(a). As per 10(1)(a), whenever there is a physical movement of the goods, what is the place of supply? Where the physical movement ends, where the transit ends, that place will be the POS. Where the movement terminates, or where the transit ends, where the goods are delivered, that place will be the POS. Take the example of Amazon, door delivery will be there. Na? When we will decide there is a movement or there is no movement, in which way we can decide when there is a physical movement of the good or there is no physical movement of the good. How can we decide that? How can we decide that? Physical movement means goods moves towards us. No physical movement means we will move towards the goods. Physical movement means goods comes towards us. Where no physical movement means we will move towards the goods. So when goods are moving towards us, towards our destination, towards our buyer's place, then it is called as physical movement. Whenever there is a physical movement of the goods, what is the place of supply? Where the physical movement terminates or where the transit ends. Next one. Installation or assembly. What is the section number? Anybody remembers? 10(1)(d). I just shuffled it. Because ABC will say everything, na? So that's why with respect, it's not B, it's D. So installation or assembly. That means where this particular, any good is required to be installed or assembled at site, then what is the place of supply? Where that particular good is installed or assembled, that place will be the POS. Take for example this AC. This AC invoice is in the name of Mastermind's main campus. But it was installed at Paunputra campus. In that case, what is the POS? Invoice is in the name of main campus, but installed at Pavanputra campus. Now installation is required for this AC or not required? Required. If installation is required, what is the POS? Where that particular AC is installed. Where this particular AC is installed, ma'am? Pavanputra campus. Even though invoice is in the name of main campus, but still the place of supply will be the place where it is installed, Pavanputra campus. Next one. This is 10.1e. Goods that are supplied on the board. What is the goods? POS is the place where the goods are taken on the board. That place will be the POS. What does this mean? Not only airport, flight journey, train journey. Okay, flight journey, many of the people may not, but train journey, generally if you go to the train, coffee vendor will be there, na, who is selling coffee. He will sell the coffee throughout the journey. So many customers will take the coffee at so many different places. In that case, what is the POS? Not when it is sold, when that coffee can was loaded onto the train. The station or the place where the coffee can was loaded onto the train, that place will be the POS. Let's say Guntur to Hyderabad journey. Coffee can was loaded at, let's say, Satyanapalli is one area. In that case, what is the place of supply? The coffee can was loaded at Satyanapalli, that place will be the POS. That is the point. Okay, next one. OTC. What is meant by this OTC sales, ma? Very good. Over the counter sales. What is the section number? 10.1 CA. What is the section number, ma? 10.1 CA. Over the counter sales, POS depends upon whether the address of unregistered person is recorded in the invoice or not. If recorded, POS is the location as per the address. If not recorded, POS is the location of the supplier. POS is the location of the supplier. Okay, ma. Now what is the position? Take the example of, let's say, in majority people nowadays also, near Guntur villages or something like that, if any marriage is there, they will go to Hyderabad for shopping. Still, Hyderabad shopping will be there, marriage shopping generally. Still the people will go for Hyderabad. Some people still. Some people using Amazon also, that is a different story. But some people will go for Hyderabad for shopping. Then they will purchase the goods at Hyderabad and let's say they will use it in Guntur. This is OTC. Over the counter sale happens in one state, but whereas goods are going to be used in some other state. In those cases, 10.1 CA will come into scene. In that case, what can be the place of supply? The persons who went for shopping told the shopkeeper and gave them the Aadhaar address also. Sir, we came from Guntur for marriage shopping. Okay, you are from Guntur. Okay, the address on record is there. Then what is the place of supply? As per the address, Guntur will be the place of supply. If those people asked, sir, where are you came from the shopkeeper? Then these people replied, is it, Nikendukin Telugu. So is there any requirement of that? Do you need my Aadhaar card, PAN card, phone number, bank account details, all these things required? No, sir, I don't require that. So I require only money for your purchase. Then please actually keep your mouth shut. In those cases, address will not be available with the seller. Then what is the place of supply? Location of the supplier. What is in our example? Hyderabad. Hyderabad will be the POS. Address is available. That address will be the POS. Address is not available. Location of the supplier will be the POS. Next one. No physical movement. Then location of the goods will be the POS. What is the section number? 10.1 C. No physical movement. Take example, I just gave this Pavanputra campus to Masterminds on a rental basis. When this building was given by me to Masterminds for rental, along with generator it will be given. There will not be separate rent for generator. When this building was given on rent, along with generator, rent will be there. But later on, MM purchased this particular building from me. In that case, what will happen? Automatically, generator ownership also transferred to MM. Na? Is there any physical movement of generator? No. Now what is the place of supply then? Location of generator, well, when this contract happens, that place will be the POS. Where is the location of generator? Pawanputra campus. Therefore, that place will be the POS. Whenever there is no physical movement of the goods, what is the place of supply, ma? Location of the goods will be the POS. Now, bill to ship to model. What is the section number for this? What is the last one? 10(1)(b). With respect to bill to ship to model, what is meant by bill to ship to model, ma? Order will be given by one person, but whereas goods are going to be delivered to some other person. In that case, what is the place of supply? In the case of bill to ship to model, three parties will be there. One party is supplier, second person is third party who is giving the instruction, and the third one is recipient. So supplier will send the goods to the recipient upon the direction of the third party. This model is known as bill to ship to model. In case of bill to ship to model, what is the place of supply? Third party who has given the directions, third party's place will be the POS. But if you observe in the exam, whenever bill to ship to model is there, two supplies will be there. Whenever you observe bill to ship to model, two supplies will be there. Let's say A, B, C. A is the third party, B is the supplier, C is the recipient. Here, A has ordered some goods on B. Let's say some 100 kgs. Now, same order was received by A from C. Now, A ordered B to deliver the goods directly to C. This is bill to ship to model. Now, the question is here, how many supplies involved therein? Two supplies. One is between B to A. B is the supplier, A is the third party. And what is the second supply? A to C. Yes or no? In this case, two supplies are there. One is between B to A and second one is between A to C. Okay. Here, B to A comes under 10(1)(b) bill to ship to model. Second one, A to C, comes under physical movement of the goods, that is 10(1)(a). That is the way how the place of supply will be decided. If problem generally, whenever bill to ship to model was given in the exam, always there will be two supplies. One supply is between supplier and the third party. Second supply is between third party and the recipient. So supplier to the third party, place of supply will be determined as per 10(1)(b) bill to ship to model. And whereas with respect to third party to the recipient, place of supply will be determined based on 10(1)(a) whenever physical movement of the goods was involved. Okay, ma? This is the point you need to remember regarding section 10. There ends section 10, ma. What is the next one and simple one? Section 11. What does section 11 deals with? Place of supply for the import and export of the goods. That means international transactions it deals with. So here the point will be with respect to import of the goods. What is the place of supply? Location of the importer will be the place of supply. With respect to export, what is the place of supply? Location must be outside India. Then only it is treated as a export. Take the example of import. The importer location is Vizag, but the goods must be through Chennai. First goods reached the Chennai and there the goods are unloaded and they just put it in a small vessel. From there it was sent to Vizag. Now what is the POS then? Chennai or Vizag? What is the place of supply? Is it Chennai or is it Vizag, ma? Definitely answer will be Vizag, because Chennai is the starting point. This concept is known as technically transshipment. On a small vessel, the goods will be changed. Later on, the goods will be sent to the destination. That concept is known as transshipment. So with respect to transshipment, what is the ultimate destination here? Vizag. Therefore, Vizag will be the place of supply, that is the location of the importer. This is simple story with respect to section 11. Now, what is the next point we need to see, ma'am? What is meant by intrastate supply and what is meant by interstate supply we need to see as per section 7, even though you know a little bit, but something 1 or 2 points, additional points are there in IGST Act. So what is interstate supply? Which section deals with that? Section 7. When it is treated as interstate supply, if LOS, POS, LOS and POS are there in two different states, it is interstate supply. If LOS or POS are there in two different UTs, then also it is interstate supply. If LOS in one state, POS in UT, then also it is a interstate supply. These points already you know. But these are the additional points, inclusions. First 3 points already you know them. Various points, various stages it will come. Now, what is this inclusion? Supply where the LOC is in India and POS is outside India. Then also it is a interstate supply. LOS in India, POS outside India. Technically it is export. LOS in India, POS outside India means export. That means export is also a interstate supply. That's why you are liable to pay the GST. Later on it will be refunded to you on exports. Exports is also a interstate supply. Therefore on the exports, what is the thing we need to do, ma? IGST we need to pay. Okay, next one. Supply of the goods or services to or from special economic zones. By special economic zone, deemed export to special economic, by special economic zone to DTA, deemed import. And it says to DTA, you need to consider. By says means says to DTA, deemed import. To says, that means DTA to says comes under deemed export. That means whatever why they are treated as deemed imports and exports, once an area has been notified as special economic zone, it will be treated as outside India for taxation purposes. That's why by says or to says both comes under interstate supply. By says or to says even within the state also. Even within the state also it is an interstate supply. Next one. This is a supply in a taxable territory not covered as intrastate supply. That means if at all it is not an intrastate supply, it is an interstate supply. If the point is not covered under intrastate supply, automatically it is a interstate supply. These are the 3 additional points you should remember at final level. And next one is intrastate supply, you know that. This is intrastate supply section 8. Occurs when LOS and POS are within same state. Then what will be levied, CGST plus SGST applicable to the all states and Jammu and Kashmir, Delhi and Puducherry also. And same UT, then CGST plus UTGST will be levied. I think you know what are the UTs, Chandigarh, Ladakh, Lakshadweep, Andaman Nicobar, Daman and Diu, Dadra Nagar Haveli, all these things comes under UTs, UTs without state legislature. Therefore, what will be levied, CGST plus UTGST will be levied. Okay, these are the points you need to remember. Now we are going to proceed to what is the side heading? Now after 10 and 11, we are moving to section 12. That is, what does it deals with, domestic supply of services, simply supply of services within India. So with respect to section 12, there are so many subsections are there, up to 12-14 I think. 12-1 naam ke vaste. Therefore we need to start with 12-2. With respect to 12-2, what does 12-2 deals with? It is a general provision for the services not covered elsewhere. It is a general provision for the services not covered elsewhere. Simply it is a residuary provision. Where 12.3 to 12.14 is not applicable. In those cases, 12.2 will come into C. It covers the services not specifically addressed in the sections 12.3 to 12.14. Simply when 12.3 to 12.14 is not applicable, in those cases solely 12.2 will come into C. Some examples includes professional services like CA, CS, lawyer, security services, cleaning services, job work services. Those are not covered under 12.3 to 12.14. In those cases, their their place of supply will be decided based on 12 subsection 2. Sir, what is the place of supply as per 12.2, sir? So the place of supply as per 12.2 will be, we need to check whether it is B2B or B2C. What is meant by B2B? Business to business. In those cases, what is the POS? Location of the recipient means registered place. Because recipient is also a registered person maximum cases. In those cases, what is the POS, ma? Location of recipient means registered place of recipient will be the place of supply. If at all it is a B2B transaction. If at all it is a B2C transaction, then what is the position, ma? If at all it is a B2C transaction, we need to check address on record is available or not. If address on record is available, then that address of the recipient will be the place of supply. If address of recipient is not available, then location of supplier will be the POS. B2B, registered place of the recipient. B2C, we need to check address on record is available or not. If address on record is available, that place will be the POS. If address on record is not available, the location of the supplier will be the POS. This is 12.2, miscellaneous one. When this 12.2 will come into C? When 12.3 to 12.14 are not applicable, in those cases 12.3 will come into, 12.2 residuary one will come into C. This is 12.2. Next one is 12.3. With respect to 12.3, what does 12.3 deals with, ma? Services relating to immovable property. What is the general rule of 12.3? POS is where the immovable property is situated. And what is the exception for that? If the property is outside India, then POS is the location of recipient. Take for example, Mukesh Ambani is having a small house that is named as Antilla, and its construction cost is just 7,500 to 8,000 crores. Its market value is just 15,000 crores. In the just 6 floors are for car parking, and actually just 500 workers will be there. Electricity will be just 33 lakhs. For this, definitely they may have used interior decorator services, all these things. Na? What are the services in relation to immovable property? Their construction, interior designing, architect work, valuation, whatever the things directly in relation to immovable property. What is the section that will be applicable? 12.3. Then what is the POS? Where the Sandil, I think Navi Mumbai? That house was there in Navi Mumbai, no? So Navi Mumbai is the place. So that place will be the POS. Recently I had a news that Mukesh Ambani ji actually is building another house because his house was too small for his children to play, because their family was expanding now. So many marriages are there, newborns are there. So that's why small house, it is very difficult for their grandchildren to play. That's why I had a recently somewhere, Mukesh Ambani ji purchased one old royal palace of UK, which was the Queen Elizabeth, which along with the golf court, there he is actually renovating that, because their grandchildren should be able to play. So much middle class people actually in the small house, they are unable to play. So that's why he actually purchased a royal, seriously, this was confirmed news. He purchased a royal palace in UK along with some golf court or something. There he is actually remodeling that particular palace. In this case, where is the location of immovable property? Outside India. Then what is the place of supply then? Location of recipient means location of Mukesh Ambani will be the place of supply. That is the point. Next one. 12.4. What is 12.4 deals with, ma'am? Restaurant, catering, beauty treatment, parlor services, like that. In those cases, what is the place of supply? Where the service is performed. Because all these requires actual performance. Take the example of restaurant and take the example of beauty treatment, food. By actually supplying the food on your Zoom call does not actually fulfills your hunger, na? Just like beauty treatment also. Just applying that, what is that, bleaching powder or something on the Zoom call screen actually does not make your face shine or glow. That means those must be performed at that place only. Yes or no? So that's why, what is the place of supply? Where that service is actually performed, that place will be the POS. Restaurant, catering, fitness centers, beauty treatment and parlor services. What is the place of supply, ma? POS is the place where the service is actually performed. Next one, 12.5. What does 12.5 deals with, ma? 12.5 deals with training and performance services. If it all it is a B2B, register place of the recipient, B2C, where the training is held. Take the example, Infosys wants to give training to its accounting employees on a Tally ERP, some package new, some GST package was released, for example. Infosys wants to give training to its accounting professionals on the new software Tally ERP. In that case, is it a B2B supply or a B2C supply? B2B, because supplier Tally Academy is a business, Infosys is also a business one. In that case, is it B2B or B2C? B2B. If at all it is B2B, what is the place of supply? Register place of Infosys will be the place of supply. Sir, if one of the accounting professional of Infosys in his personal capacity went to Tally Academy, Hyderabad for coaching, in this case, is it a B2B or a B2C? Because in personal capacity, Infosys employee went for training. If at all it is a B2C, what is the place of supply? Where the training was given, where the coaching was given, where the coaching was given in our example, Hyderabad. Therefore, what is the place of supply? Hyderabad will be the place of supply. Okay. This is 12.5. Next one, 12.6, event related services. Generally, which type of events are covered here, ma? Cultural events, artistic events, sports events, entertainment events, amusement parks, like that. Cultural events means some Bharatanatyam, Kadakal, something like that will be there. Na? Those will comes under cultural events. Artistic events, painting exhibition, like that. Sporting event, IPL. Entertainment events, December 31st night music shows, etc. Music shows, yeah. Right? So amusement parks like Wonderla, Ramoji Film City, like that. In all these cases, 12.6 will come into scene. There is 12.6 admission to event, ma'am. 12.6 deals with admission to event. That means tickets. In order to enter the premises, you need to pay an entry fee. Na? That entry fee is known as ticket price. So when tickets are sold, with respect to tickets, how to decide the place of supply? POS is the place where the event is held or where the amusement park is situated. That means where that musical event happened, or where that painting exhibition happened, where Wonderla Ramoji Film City was situated. Those places will be the POS. With respect to admission to event, what is the place of supply, ma? Where the event is held. Take the example, I think you don't know or don't know. MM actually conducted one musical event, Raga, in what is it? Sayantiniketan campus, I think, in the before some 1 year back or something. I think you are studying here only at that time. Studying here only, no? Before 1 year. Raga was one music. Okay, online. So definitely they will send you the link to see in the YouTube. Definitely the online students may have enjoyed the show very much by seeing the links. BOD batches students generally will enjoy those shows. Generally they will send you a link. No, then they will put it in the YouTube. And after seeing that in the channel, you need to. So I think they conducted very good also. Just like one musical program, somebody from Vijayawada or something. The people came, some just like me, some disco lights are also just students told me whether it's true or not, I don't know. Student told me in such a manner. So okay, with respect to Guntur, that is okay definitely. Even though it is not extraordinary, that is okay event. But actually conducted is free of cost, therefore no GST will be there. But if conducted this show by taking 200 rupees from each student, in that case, where that event is held, Santriketan, Palakaluru, that place will be the POS. That is the point. Okay. Next one is 12.7. What is 12.7 deals with? Organizing the event. What is the difference between 12.6 and 12.7, ma'am? 12.6, admission to event. Sale of tickets. What does 12.7 deals with? Organizing the events. That means event management services. 12.7 deals with event management services. With respect to event management services, what is the place of supply? B2B, register place of the recipient. B2C, where the event is held. B2B supply, registered place of the recipient. If it all B2C, then where the event is held. One exception is also there. If the event was held outside India, then place of supply will be location of recipient. Okay, say for example, some award functions will be conducted outside, will be conducted, Filmfare Awards, G Family Award, Ma Family Award, something like that. Those awards will be there, Filmfare Awards. Those things generally, let's say, who will give Filmfare Awards? Okay, Ma Awards will take. So then Ma TV or GTV, those people are going to give the awards. Then they will ask one event management company to host that particular show, to make the arrangements for that particular show. Then who is the supplier? Event management company. Who is the recipient? GTV or Ma TV. In this case, B2B. Definitely, that much event means definitely simply when it will be B2B, supplier is registered. Supplier is definitely that range person, 20 lakhs per annum is easy. Flower decoration person nowadays getting per event, they're getting 3 to 4 lakhs. Flower decoration, first, I'm not talking about marriage. Small events will be there. Other than marriage also. Birthday, first birthday of daughter or son, or some other events can be there. 3 to 4 lakhs only for flower decoration, which will last hardly 2 to 3 hours. Max to max. So then 20 lakhs even. What about pre-wedding shoots? They're charging for single event more than 20. So in single event, gunshot, you are a registered person. Nowadays it was something, the people act like what they want to do, I don't know. But whenever I see some pre-wedding shoots on the Facebook, whether it's a pre-wedding shoot or something else, I don't know. So those people, actually, some people are innovatively doing, some people are awkwardly doing. So those events, but the photographers are getting so much of money now. So easily minimum 5 to 15. The minimum range is 5 pre-wedding shoot. Maximum is generally 15 to 20. Generally, I'm not talking about Mukesh Ambani range. General range I'm talking about. Mukesh Ambani range is something different. Okay. So those things. In those cases, what is the position, ma'am? He's a registered person. Is it a B2B supply or not? Yes. If at all it is a B2B supply, then what is the place of supply? That means G or Ma TV registered office address will be there. That address will be the POS. If at all it is a B2C supply, then what is the position? Even that one also, one can say B2C. Take the example of B2C. What is example we can discuss? Let's say instead of GTV, with respect to normal marriage function, GT Ma Awards comes under B2B. But what is the other example I told you with respect to marriage? Is it B2B or B2C? B2C, marriage comes under B2C. Then what is the place of supply then? Where the marriage is going to be conducted, that mandap keepers, where it is going to be conducted, the place will be the POS. If the event was done outside India, take the example of Virat Kohli, where his marriage was done, Italy. Virat Kohli marriage was done with this girl name? Anushka Sharma. The marriage was done in Italy. In that case, where the event is held? That means within India or outside India? Outside India. Then what is the place of supply? Location of Virat Kohli will be the place of supply. Location of Virat Kohli will be the place of supply. That is 12.7. LOS? LOS outside India. Recipient also outside India. Place of supply? Outside India. Then India ఎందుకు వచ్చింది అసలు అక్కడ? What? చేసిన citizenship does not count na. Based on citizenship, taxation will not be there. You are saying that LOS outside India, POS outside India, location of recipient is also outside India. Then all the three is outside India, then why India is having the authority to levy tax? Then it will be export. LOS is there in India, POS is there in outside India, then it comes under export na. Export na, supplier ekkada unnadu India lo. Whereas where is the recipient location? Outside India. Then it is export then. Generally you will pay later on refunded to you. Those taxes. Fine. So the next one is here, 12.8. So with respect to transportation of the goods, what is the POS we need to see? If at all it is a B2B transaction, then what is the place of supply? Always if at all it is a B2B supply, registered place of the recipient will be the POS. So here, if at all it is a B2B supply, registered place of recipient will be the POS. If at all it is a B2C supply, where the goods are handed over for transportation, that place will be the POS. For example, Mastermind is offering you VOD classes. Then books will be sent through courier, na? Some DTDC like that. With respect to that, it is a B2B or a B2C? B2B. Who is the supplier? DTDC. Who is the recipient? Masterminds. Is it B2B or B2C? B2B. In that case, what is the place of supply? That means Masterminds Gayatri Nilayam, main campus. That place will be the place of supply. That is the registered address of Masterminds. Main campus Gayatri Nilayam will be the place of supply. But now you want to send one book to your friend. Is it B2B or B2C? B2C. You want to send it through DTDC, which is available in Bradipet 4th line. I think this was there somewhere else. So in that case, what is the place of supply? At which place you handed over that particular book to the courier office, that place will be the POS. I think Bradipet 4th line will be the POS. B2B, registered place of the recipient. B2C, where the goods are handed over for transportation, that place will be the POS. Next one. Special cases like satellite launching services are covered under transportation of the goods. Because satellites comes under goods. Satellites comes under goods. Therefore, satellite launching services are covered under 12.8 transportation of the goods. Sir, POS determination for satellite launching. If recipient location is known, place of supply will be the location of the recipient. If the recipient location is unknown, then POS will be the location of the supplier. Generally here when we're not talking about destination. Destination is Moon, Mars, something like that. But we are not talking about the destinations. Who is the person that is receiving the service? Who made the satellite? Because so many number of countries are actually, this is nowadays a big business in India. Because India, I think because of some geographical advantage, like what is that, Sriharikota or some other place, which is most suitable for launching the satellites, that place. We are having that edge. Because of that, even the other countries' satellites are also launching from these places. Nowadays, it is a business. In olden days, only government agencies got the exemption, but now even private agencies are also exempted. Everybody is exempted with respect to satellite launching services. But we need to find out the place of supply. Na? That's why if at all we know the recipient, sometimes recipient is Russia, China, something like that, who is launching that rocket from India, satellite from India, then their address is known. Russia, China, something like that. The location of the recipient will be the POS. Technically, it will comes under export then. If sometimes secret missions will be there, na? Those names will not be disclosed. Sometimes. In those cases, location of the recipient is not known. Then what is the POS? Location of the supplier will be the POS. That is the point. Next point is transportation of passengers. With respect to transportation of passengers, I think just mixed it with this one. Huh? So here the point is, with respect to passengers, we need to see whether it is B2B or B2C. If at all it is a B2B supply, location of recipient will be the registered place of the recipient will be the POS. If at all it is a B2C supply, then where the passenger embarks for a continuous journey, that place will be the POS. Take the example, Masterminds asked me to go to Hyderabad due to one faculty ill health and teach the classes there. I just say, okay, I will go there. Masterminds booked the tickets in its own name and send me the ticket to go there. Is it a B2B or a B2C supply? B2B, because supplier is the transporter, that is APSRTC or something, and the recipient is Masterminds. Therefore, definitely it is a B2B. If at all it is a B2B supply, then what is the POS? Registered place of recipient will be the POS. But I booked the ticket in my individual name, later on reimbursed by the Masterminds. Is it B2B or B2C? B2C. Because in my individual name I have done it. In that case, what is the place of supply? Journey starting point, continuous journey starting point, Guntur to Hyderabad. In that case, Guntur will be the place of supply. Okay. Special case. Right to passage for future use, boarding point is unknown. Is it possible? That means you will get a ticket, but journey starting point is not known. Is it possible? In reality, is it possible? Yes, 100% possible. City bus pass. Hyderabad, Metro, Vijayawada, bus passes will be there, na? You will get the monthly pass. But anywhere you can actually ride the bus, na? There is no fix unless it is a route pass. Unless it is a route pass, a bus pass, monthly pass generally can be taken and you can roam on any bus, ma. Let's say when I was actually doing my articles in Hyderabad, I am having the metro pass with me at that time. In within the city limits of Hyderabad, whatever the bus I want to ride, I can ride that. 440 or something at that time. I don't know what is the current price. At that time, 440 is the metro pass when I was doing my articles. Okay. So definitely that one, I can ride any bus, anytime, anywhere within the city limits. That means right to passage for future use, monthly pass, and boarding point is unknown. Then if at all, Masterminds has taken bus pass for me. In that case, B2B, then register place of the recipient. If at all it is B2C, then section 12.9 is not applicable, 12.2 will come into C. Address on record bus pass, at the time of bus pass, any other proof, something was submitted, okay. Otherwise, location of the supplier will be the POS. And what about this return journey? In fact, this must be linked with this. By mistake, I linked it to 12.8 when after preparation. Okay, I will rectify that while sharing with you. Okay, fine. So the next one is treatment as separate journeys for place of supply. What is meant by return journey? Sometimes what you will do is, you know how much period you need to stay at that place when you need to return. For example, I know I just need to there for some 15 days in Hyderabad for that span of time. So I just booked from Guntur to Hyderabad on this day. Exactly after 15 days, I just booked a return ticket also. Then both are treated as a single journey, or both are treated as, that return journey will be treated as a separate journey. Return Guntur to Hyderabad is one journey. Hyderabad to Guntur return journey is a separate journey. For that, a separate place of supply rules you need to follow. B2B as usual, register place for unregistered person. See, Mumbai to Delhi. Then what is the POS ma? Mumbai. That is Delhi to Mumbai. What is the POS ma? Delhi. That means the location of the supplier, technically it will be. This is 12.9, you need to remember. After that 12.10. 12.11, actually, in fact, it was a little bit bigger. I just put it somewhat after the end of this chart. What is 12.10 deals with? Services supplied on the board of a conveyance. Service supplied on the board of a conveyance. What is the place of supply? First scheduled point of departure of the conveyance will be the place of supply. What is the difference between goods supplied on a conveyance or services supplied on the conveyance? What is the place of supply? What is the difference between them? That is, what is the difference between 10.1e, which deals with the goods supplied on a conveyance, section 12.10, where services supplied on a conveyance. What is the difference between them? Goods. Okay, where the goods are loaded onto that conveyance. Let's say, with respect to Guntur to Hyderabad, or Guntur to Hyderabad, let's say the goods, the coffee can was loaded at Satyanapalli in our example. Satyanapalli will be the place of supply where the coffee can was loaded. With respect to services that are provided in Vande Bharat, Guntur to Hyderabad. Vande Bharat Express is there, Guntur to Hyderabad. With respect to those services, let's say they will provide you snacks now in Vande Bharat. They will give you tea or coffee now. For them, what is the place of supply? Journey starting point. If at all it is a good, where the goods are loaded, that place will be the place of supply. Any blankets like that will be given for night journeys. Morning journeys they will not give you, but night journeys some blankets will be provided to you. Food you can order, they will provide you the food, meals, etc. Those things comes under supply of service by Vande Bharat. In those cases, what is the place of supply? Journey starting point. Where the journey starting point? Guntur to Hyderabad. Guntur will be the POS. That is 12.10. 12.11 will be there later on. We'll see that. The next one is 12.13 insurance ma. With respect to insurance, what is the position ma? As usual, we need to check whether it is B2B or B2C. If at all it is a B2B supply, registered place of the recipient. B2C, address on record is available. That address is not available. That means given in the text means in the LIC document policy, I mean to say. So the point is here regarding this. Let's say Mastermind has taken a health insurance on the employees. Is it a B2B or a B2C? Definitely it is a B2B. Then what is the place of supply? Registered place of the recipient will be the place of supply. I take an insurance policy in my individual name. It comes under B2C. At the time of taking the policy, address proof was given. That address will be the place of supply. Address proof is not given. The location of the supplier will be the place of supply. That is the point. Next one is banking and stockbroking services. 12.12 it will be. Regarding that, if the recipient address is known, that is account holder, the location of the recipient will be the place of supply. If the recipient address is not known, not account holder, then location of the supplier will be the POS. For example, let's take the example, I just went to Hyderabad for shopping purpose. Let's say I'm there at Amirpet, I withdraw money, let us assume that I'm having Axis Bank debit card with me. I used that Axis Bank debit card in Amirpet in ICICI Bank ATM. Am I account holder of ICICI? No. In that case, my address is known to the ICICI Bank? No. What is the place of supply then? Location of supplier. Where the ICICI Bank ATM was situated, in our example, Hyderabad will be the place of supply. I change the example here. I use my Axis Bank debit card in Axis Bank ATM in Amirpet. Then location of recipient is known because I am the account holder there. Then what is the place of supply? Guntur. I am from Guntur. Na? So that's why Guntur will be the place of supply. That is with respect to bank, stockbroking and whatever the other services. This is 1214 ma. With respect to 1214, before 1214, where is, telecommunication. This is 1211. Little bit bigger one, it was unable to fit there. So, with respect to telecommunication services 1211, what is the point here ma? Fixed lines and cable services, then what is the place of supply? Where the equipment is installed. This point applies to fixed line, internet leased circuits, cable connections, dish antennas. For them, this point is applicable. Take the example of Tata Sky. What is the place of supply? Where the dish antenna is installed, that place will be the POS. The place will be the POS. Sir, what about mobile postpaid services? With respect to mobile postpaid services, billing address is available, that billing address. Billing address is not available, the location of the supplier. And with respect to prepaid services, what is the place of supply ma? In olden days, vouchers will be there na. Olden days, you need to scratch that, one number will become tikkum, you will enter in the mobile, they will get a message successfully recharged, and you'll have a proud moment at the time. Yes, I've done something today and achieved something. So those were the days. In those cases, definitely what is the place of supply? Where the vouchers are sold, that place will be the POS. And nowadays, mobile and internet services now, that means you are using phone pay, Paytm in order to recharge those things. Then what is the place of supply? Location where the prepayment is received or the vouchers are sold. That means where the amount is received, address on record based on Go. Because you are doing through phone pay. With respect to phone pay, you are having some your KYC details. Na? Based on that, place of supply will be decided. See, internet records, your records based. That is the point with respect to 1211 ma. Now the last thing is, I think the advertisement we are seeing. 1214. With respect to advertisement here, scenario 1. Supply of right to use the space on the hoarding. Hoarding is considered as immovable structure on the land. POS will be determined as per 1213 location of the hoarding. Scenario 2. Arranging holding by the vendor. Nature of service is considering as advertisement service because vendor is responsible for displaying the ad at the specified location. 12.3 is not applicable. POS will be decided as per 12.2. What is this point ma? Scenario 1 and scenario 2 here. Simple ma. In Guntur, let's say Ramesh Hospital was there near Hindu College. Upon the terrace of that particular Ramesh Hospital, one big hoarding was there. Here, the hoarding was given on rent. Hoarding was already there. And you will ask that Ramesh Hospital to display your ad on their hoarding. Then it comes under hoarding is a movable property. As per 12.3, place of supply will be determined. But place belongs to you. Ramesh Hospital terrace is there. But there is no hoarding. Now hoarding will be constructed by this vendor and they will ask this particular Ramesh Hospital to put the ad on that because they are giving the permission to use that. In that case, it comes under advertisement services ma. Definitely advertisement services is not covered under 12.3. They are not covered under anywhere. Therefore, we need to go by 12.2. So 12.14 advertisement is there na. Advertisement to government departments only. 12.14 covers. It is to common people advertisement. In those cases, what is the section we will apply ma? 12.2. This is section 12. Now the next point is ma, section 13. So what is section 13 here deals with? International services. What is section 12 deals with? Domestic supply of services ma. Section 13 deals with international services. That means whether origin or destination. Any one of places can be outside India. Overview of section 13. 13.1. Location of the service provider or recipient is outside India. That means when this section 13 is applicable, whether the service provider location or the recipient location, one of the places are there in outside India. It applies when either the location of the supplier or the recipient of service is outside India. In those cases, simply section 13 determines place of supply for international transactions. As usual, 13.2. What does 13.2 deals with, ma'am? Residuary one, just like 12.2. Section 12 domestic one, 13 is international one. As per 13.2, what is the place of supply, ma'am? Applies to all the services not covered under 13.3 to 13.13. There 14 are there, here only 13. That means it is a residuary one, where place of supply cannot be determined by using other sections. In those cases, 13.2 will come into scene. What is the place of supply as per 13.2? Location of the recipient. If location of recipient is available. If the location of recipient is not available, location of supplier will be the POS. Location of recipient is not available, the location of supplier will be the POS. This is 13.2 point. Ma. Next one is 13.3. So what does 13.3 deals with? Performance-based services. What does 13.3 deals with, ma? Performance-based services. As per 13.3, what is the place of supply? Services requires physical presence of the goods or something else. It includes job work services. What is the place of supply? Where the service is actually performed. Let's say, in order to do the repair work of the mobile must be physically presented or not? Yes. In order to do the beauty parlor service, the person must be physically present or not? Yes. In those cases, what is the place of supply? Where the service is actually performed, that place will be the POS. The services which requires either physical presence of the good or physical presence of the person. In those cases, what is the place of supply, ma? Where the service is actually performed, that place will be the POS. Next one. This one is linked with customs, ma. Services for temporarily imported goods. Why you temporarily imported some goods? First you will export the goods. Later on they will come to repairs. Once the repair is over, again they are exported. You sold nano car to a foreign country. Due to some repairs, nano car was returned to India. Once that repair work is over, automatically what will happen in those cases? The car will be again exported to the foreign country. Na? Those things. Services for temporarily imported goods. That means for repair work. Applies to the goods imported for repairs or treatment without being put to use. In that case, what is the place of supply? Where the goods are situated at the time of supply. That is, what is the place, ma? Let's say, for example, in some Mumbai or whatever the place where the imported and has done the work. That place will be the POS. Ultimately, what is the destination? US or foreign country. Therefore, it will be exempted later on. But what is the place of supply? Where that particular destination is there, that place will be the place of supply. Next one. Services provided electronically for the goods. Then, services supplied from remote location by electronic means. In those cases, as per 13.2, location of the supply recipient available that place. Location of recipient is not available. Location of the supplier will be the POS. Best example is by remote means. What is a team viewer or any desk apps, applications will be there. Na? By using them, your software problems can be resolved from anywhere in the world. Say for example, I'm using the Apple phone. Apple support app will be there. If I just book some appointment with respect to software issues I am facing, then on that particular day, say for example at 11 o'clock or 12 o'clock, for them it is day now. So I just booked an appointment. Then they will make a call to us. They will ask our Apple ID or something. We need to share them. Then they will take control of our Apple phone. Thereby they will do the whatever the debugging or whatever the things do, they will do. So then they are actually solving my phone problem from US. Na? From remote, electronic means. In that case, what is the place of supply? Where is the location of recipient? India. Location of recipient is in India. Where is the location of the supplier? Outside India. So in that case, LOS is the location of recipient is known. This place will be the POS. Otherwise, location of supplier will be the place of supply. Services requires recipient physical presence. I told you an example, saloon services, classroom teaching. In those cases, what is the POS? Where the service is actually performed, the place will be the POS. This is 13.3. Next one is immovable property related services, that is 13.4. Whatever the services that are directly in relation to immovable property, architect services, interior designer services, real estate services, construction services, with respect to them, what is the section that is applicable, whereas in section 12.3, but here international transactions 13.4 will come into scene. Includes real estate experts, renting of building, architect services, interior designing services, all of them comes under 13.4. What is the POS? Location of immovable property will be the POS. Simple as. Next one is event related services, like whether it may be admission to event or it may be organizing the event. For both of them, only one section is there. Whereas in domestic ones, organizing 12.6, I think. Admission 12.6, organizing 12.7. Yes, na. Organizing admission to event 12.6 and organizing the event comes under 12.7. But here both are there under one section only. It covers cultural, artistic, sporting, scientific, educational, entertainment, celebrations, conference, fair, exhibitions. Everything will be covered under this 13.5. Includes that supporting services also. What is the place of supply, Where the event is held, that place will be the POS. And multiple taxable territories. The services which are covered under 13.3, 13.4, 13.5 are provided in more than one country. More than one country, international. In that case, what is the place of supply? Applies where the services span multiple taxable territories, then POS will be the taxable territory where the entire contract is executed in India. In a taxable India, in India there will be one place where that particular service connection will be there. That place will be the POS. But only proportionate amount is taxable. Not the entire amount. How much amount that is attributable to India, up to that amount only it will be taxable. Next one. Services in multiple states. Previously multiple countries. In that case, what is that? In more than one state, then follow the specific rules, not detailed in the text. That means just ignore that. Specific rules means on a proportionate basis. That means how do you do that within the state generally? With respect to advertisement services, you know that based on number of subscribers, based on number of TV channels, something like that. What are the rules that are prescribed? Based on those rules, we need to divide that. We can ignore it simply. And financial and transportation services, 38, with respect to banking and NBFCs. If it all the provided service to account holders, then only 13.8 is applicable. If the service is provided to other than accounting holder, 13.2, residuary one will come into scene. Any banking services that are provided to the account holders, then only 13.8 will come into scene. The place of supply will be the location of service provider. If services are provided to non-account holders, what is the section that is applicable? 13.2. And intermediary services means broking, stock brokers or whatever the services, the location of the provider will be the POS. And with respect to hiring of transport, except vessel and aircraft, if the hiring period is up to 1 month, then what is the place of supply? Location of service provider. Sir, if the hiring period is more than 1 month, sir, then 13.8 will not be applicable. 13.2 will come into scene, which is a residuary one. Next one is here, transportation of the goods. With respect to this, now this rule was in fact removed. Previously a separate section, now covered by 13.2. Previously 13.9 was there, Now 13.9 was merged with 13.2. Based on that, you will decide the place of supply. Location of recipient is available. That place will be the POS. Location of recipient is not available. Location of supplier will be the POS. 13.9 was now merged with 13.2. Next one. Passenger transportation services ma 13.10. That means services on the board of a conveyance. What is the place of supply? Journey starting point. That is the place of supply. Next one. See, on the board supply conveyances. So here service providing during the transportation, then first schedule point will be the place of supply. What is the difference? What is the difference between these two ma? Passenger transportation means transportation, flight tickets. Whereas on-board supply of services means air hostess services, which are available on the flight. Okay, ma. 13.10 deals with flight tickets, whereas 13.11 deals with air hostess services that are available in the flight. So with respect to this journey, passenger where embarks means, let's say the flight starts from Guntur to Goa. Via actually, for example, through Gannavaram it will go. Guntur in future we can have the airport. Okay, in future we know. Who don't know that? So here the point is, Guntur to Goa is a flight route. But that fellow landed onto the particular plane at Gannavaram, Vijayawada. In this case, what is the place of supply? For as per 13.10, where the passenger starts his journey, Gannavaram will be the place of supply for the 13.10. On the flight, some food can be provided, some other services can be provided. Those things comes under 13.11. What is the place of supply? Journey starting point. What is the journey starting point? Guntur, flight journey. Flight is going from Guntur to Gannavaram, Gannavaram to Goa, in our example. In that case, what is the position, ma? What is the journey starting point there? Guntur. So 13.11, place of supply will be Guntur. 13.10, place of supply will be Vijayawada, Gannavaram. That is the difference. And this one, ma, notified services by government, simply any research and development services relating to pharmaceutical sector provided by the person in the taxable territory to any person in the non-taxable territory, place of supply will be the location of recipient. This point is applicable to medical research. Testing will be there. Na? They will initially develop a medicine. You need to test it. In those cases, with respect to those services, what is the place of supply? Ma? Location of recipient will be the place of supply. Technically, it will comes under import. Here, what is the LOS? India. Where is the POS? Outside India. But here, what is the POS now? Location of recipient will be the POS. LOS is there in India. POS is also there in India. It is taxable. If at all it was not like this, where is the LOS? India. Where is the POS generally? Where is the person who is receiving the service? Outside India. But what is the place of supply now? Location of recipient. LOS, POS, both are in India. Therefore, it will be taxable. With respect to any ships, repairs, maintenance, etc., provided by the foreign supplier to Indian shipping company. That means an Indian ship went to a foreign port. There actually some repair work was carried out. Where is the supplier? Outside India. So where is the recipient? Within India. But place of supply is technical outside India. Na? But what the law says? Place of supply is the location of recipient. Therefore, based on that, you are liable to pay if at all any exemptions are not there. Additional point, non-account holders, I told you, na, 1380 is not applicable. Instead of that, 13.2 will come into scene. There ends the entire story of place of supply. Ma. In the afternoon session, we will see the customs. That's it. First, we'll start with valuation. After that, in the important areas in FTP, if time permits, we'll go to DBK and baggage. Max to max, I will cover 4. Maximum 4, minimum 2. Minimum 2 is valuation and FTP. And 2 additional points based on the time, DBK and baggage. DBK means duty drawback. Now we are going to discuss about customs. In customs, the important areas are actually valuation, DBK and in FTP, few areas. Those are the things we are going to cover now. With respect to valuation, what is the section number that deals with customs valuation? Section 14. In that section 14, how many subsections are there? Two subsections are there. That is 14.2. Assessable value is equal to tariff value. So who will notify the tariff value, ma'am? CBIC will notify the tariff value. Once CBIC notifies the tariff value, in those cases, what is the position, ma'am? Definitely 14.2 will override 14 subsection 1. Okay, so that means only on few items as per 14 subsection 2, tariff value will be notified. If tariff value is nothing but notional taxable value, only on the notional taxable value we are liable to pay the customs duty if at all 14.2 is applicable. Okay, if nothing was notified under 14.2, in those cases, what is the section that will be applicable, ma? 14.1 will be applicable. What is the taxable value as per 14.1? Assessable value is equal to transaction value. What is meant by the word transaction value? For that, 4 conditions are required to be satisfied. What are those 4 conditions? First one, it must be a sale. Second one, place of delivery is equal to place of importation. Third one, unrelated persons. Fourth one, price is the sole consideration. If all these 4 conditions are satisfied, taxable value is equal to transaction value. What are those 4 conditions, ma? First one, it must be a sale. Second one, place of delivery is equal to place of importation. Third one, buyer seller should be unrelated persons. Fourth one, price is the sole consideration. If these 4 conditions are satisfied, then what is the position, ma? Taxable value is equal to transaction value. Sir, that means other than sale also importation can be done? Yes. Holding company may send the goods to the branch, ma, or holding company may send the goods to the subsidiary. Head office may send the goods to the branch. In those cases, the transaction is not a sale, na? That's why in those cases, what is the position, ma? 14.1 will not be applicable. Second one, place of delivery is equal to place of importation. What is meant by the word place of importation? Custom station. What is meant by the word custom station? It depends upon the mode of transport. If at all it is a sea route, customs port. If at all it is a land route, if at all it is a air route, customs airport. If at all it is a land route, land customs station will be the place of delivery. Third one, buyer seller should be unrelated persons. Sir, when the buyer and seller will be treated as related persons? The buyer and seller will be treated as related persons if at all few points are there. Like what we can say. See, these are the cases where buyer and seller are treated as related persons. Common directors, partners, employer and employee, more than same family members. Both of them are controlled by a third person. Both of them controls the third person. One of them controls the other, means holding and subsidiary. Whereas any person who is having 5% or more voting power, these are the cases where the parties are related, ma. If the buyer and seller are related, in those cases, 14.1 will not be applicable. Instead of that, we should go by the valuation rules. Fourth condition is price is the sole consideration. That means whatever the consideration that is moving from buyer to the seller, it must be quantified in terms of money. If all these 4 conditions are satisfied, assessable value is equal to transaction value. If transaction value is not acceptable due to any reason, then what will be applicable, ma? Valuation rules are to be applied. Those rules are needed to be applied in a sequence. Okay, so assessable value is equal to transaction value if 4 conditions are satisfied. First one, it must be a sale. Second one, place of delivery is equal to place of importation. Third one, buyer seller should not be related persons. Fifth one, price is the sole consideration. If all these points are satisfied, taxable value is equal to transaction value. If transaction value is not acceptable due to any reason, then valuation rules are to be applied in a sequence. Okay, ma'am. Now, with respect to imports, on which value the customs duty is needed to be paid, ma? CIF value. What is the notified exchange rate? CBIC notified exchange rate. If at all it is export goods, on which value customs duty is payable, ma? FOB value. With respect to imported goods, on which value we are liable to pay the customs duty, ma? CIF value. With respect to export goods, on which value we are liable to pay the customs duty, ma? FOB value. Sir, what is meant by the word FOB value and what is meant by the word CIF value? So if we go to the seller's place and we purchase the item, then definitely what is the position, ma? It will be called as X factory price because we are purchasing at the factory of the exporter. Okay. Once the goods purchased at X factory or the goods are needed to be removed to the port area, na? In order to remove the goods to the port area, local freight is needed to be paid. Local taxes are needed to be paid. Now the goods reached the port area. It is called FAS, free alongside. Once goods reached the port area, they must be loaded onto the ship. Those loading charges and exports duty. By adding all these items, we will get the FOB value. We will get the FOB value. Once FOB is there, that means free on board. Now the goods reached the ship. But the ship is needed to be transported to this particular India. That is, now it will be called as freight and definitely insurance. By adding FOB plus freight plus insurance, it is called as CIF value. It is called as CIF value. So with respect to imports, we are liable to pay the customs duty on CIF value. With respect to export, we are liable to pay the customs duty on FOB value. And these are the valuation rules we should remember, ma. First point is, as per rule number 3, assessable value is equal to transaction value plus rule 10 adjustments. So, now assessable value is equal to transaction value subject to rule 12. With respect to rule 12, what is the point, ma? Proper officer shall not have any doubt as to the truth and accuracy of the declared value. Proper officer shall not have any doubt as to the truth and accuracy of declared value. What is the value that is declared by the importer is to be acceptable to the department, ma. Then only what will happen? This assessable value is equal to transaction value plus rule 10 adjustments, but subject to rule 3.2. That means along with the conditions that are prescribed in 14.1, rule 3.2 conditions are also required to be satisfied. Rule 3.2 conditions are required to be satisfied. In that case, then only assessable value is equal to transaction value plus rule 10 adjustments. So what are those conditions, valuation conditions that are to be satisfied? First one, it should be unrestricted sale. Second one, unconditional sale. Third one, sharing of subsequent sale proceeds, if any, should be quantifiable. Fourth one, unrelated persons. These are the 4 cases. First one, unrestricted sale. Second one, unconditional sale. Third one, sharing of subsequent sale proceeds, if any, shall be quantifiable. Fourth one, unrelated persons. If these 4 conditions are satisfied, then only assessable value is equal to transaction value plus rule 10 adjustments. Okay. With respect to this, if these rules, that means if rule 12 department has not accepted the value, or rule 3.2 conditions are also not satisfied, in those cases, what is the position, ma? Valuation rules will be applicable. From rule 4 to rule 9, we need to apply them in a sequence. And rule 4, assessable value is equal to transaction value of identical goods. Rule 5, assessable value is equal to transaction value of similar goods. If identical or similar goods rules also fails, we should go by rule number 7. Assessable value is equal to deductive value. That means from Indian sale price, post importation and certain deductions will be there. Thereby we will get the assessable value. And rule number 8, assessable value is equal to computed value. If rule 8 also fails, we should go by rule number 9. Assessable value is equal to best judged value. Okay. Now first we will see what are the adjustments that will be there in rule 10 if rule 12 department accepted those points. So these are the points as per rule 10.1. These are the adjustments we need to add as per rule 10. 10.1, that is with respect to this, first point is commission or brokerage. With respect to this commission or brokerage, they are payable in India. That means commission means buying commission or selling commission. Commission means buying commission or selling commission. Definitely it is what we can say, selling commission is includable, but buying commission is not includable. Sir, selling commission payable in India, includable. Selling commission payable in Indian rupees, includable. Selling commission payable abroad, includable. Selling commission in foreign currency, includable. Whatever the way you pay this selling commission, it is always includable. But the thing is, buying commission shall be excludable. Buying commission shall be excludable. Sir, if the question is silent regarding the type of the commission, which type of commission it will be then? Then we can assume it as a selling commission or a buying commission. Selling commission. It should not be considered as a buying commission, means we should consider it as a selling commission. That is the first adjustment. Second one, cost of containers. If the containers are returnable, not to be added. Containers are non-returnable, to be added. That means the containers in which the goods comes to the customer are returnable to the seller, then those costs will not be added to the transaction value. If the containers are non-returnable, then it will be added to the taxable value. Third one, packing charges. Packing can be divided into three types. Primary packing, secondary packing, special packing. All the three types of packings are includable. Fourth one, molds, dyes, tools, etc. If at all they are supplied from India, that is supplied by the buyer. In that case, we need to check whether they are supplied free of cost or at a concessional rate. If at all they are supplied free of cost, in those cases, their full value will be added to the taxable value. If at all they are supplied at a concessional rate, only the amount of concession will be added to that. Let's say the value of the item is 10 rupees. We just gave it for 4 rupees. Then what is the concession we just gave there? 6 rupees. That 6 rupees will be added to the taxable value. Okay. And if at all they are given free of cost, then 10 rupees will be added to the taxable value. Next one is designing, development, artwork, etc. If done in India, then the cost not to be added. Designing work carried in India, their cost will not be added to the taxable value. If the same designing work is carried abroad, in those cases, that cost will be added to the taxable value. Okay, ma'am. Next one is royalties. Royalties paid as a condition of sale, includable. Royalties paid not as a condition of sale, we need to exclude that. Royalties that are paid as a condition of sale, they are includable. Royalties which are paid not as a condition of sale, we will not consider that. Okay, ma'am. And in the same way, any part of the subsequent sale proceeds which are to be quantified in terms of money, definitely they are includable in the taxable value. Already I told you, whatever the subsequent sale proceeds that are moving from buyer to the seller, if at all they are quantifiable in terms of money, those amounts are also needed to be added to the taxable value. Next one. Any payment made by the importer on behalf of the supplier to any other person is required to be added. Any payment made by the importer on behalf of the supplier means here seller obligation was met by the buyer. Let's say selling commission is needed to be paid by the seller, but the amount was paid by the buyer. Then those amounts are also needed to be added to the taxable value. Next one. Inspection charges. Inspection charges of the imported goods where the contract does not specify for certification by the independence agency, not includable. Any inspection of the imported goods prior to the import is includable in the assessable value. If done at the request of the buyer or under the contract, but the inspection is done by the supplier at his will, is not includable. Simply when these inspection charges are includable, if at all they are done at the request of the buyer or there is a contractual obligation to do that, then only the inspection charges are includable. If inspection is done by the supplier at his will, then those amounts will not be added to the taxable value. And important point is expenses will be added if those are incurred at or before the time of importation. But if these expenditures are incurred after the arrival of the goods in India, then it is not to be added. Simply post-importation expenditure will not be added to the taxable value. Post-importation expenditure will not be added to the taxable value. Okay, ma'am. So that is a point we need to remember. So these are the 10-1 adjustments, ma'am. These are the 10-1 adjustments. These are 10-2 adjustments, ma. There are only two 10-2 adjustments. One is transportation and second one is insurance. So with respect to transportation, within India will not be added to the taxable value. Within India will not be added to the taxable value, and up to India we need to check whether it is by sea route or by air route. If at all it is by sea route, then actual amount is given, that actual amount will be added to the taxable value. If actual amount is not given, 20% of the FOB will be the taxable value. 20% of the FOB will be the taxable value. And that means transportation cost, and it will be added to the assessable value. If the goods are coming through sea route, actual expenditure is given in the problem, actual amount will be added to the taxable value. If actual amount is not given in the problem, then 20% of the FOB will be added to the taxable value. Sir, if at all it is air route, sir, actual amount is given in the problem. Actual amount or 20% of the FOB, whichever is lower, that will be considered. If actual amount is not given, 20% of the FOB will be the taxable value. Here, please remember that FOB means here customs FOB. Sir, how do you arrive for customs FOB? FOB plus rule 10-1 adjustments is equal to customs FOB. On that customs FOB, 10-2 adjustments will be done. FOB plus 10-1 adjustments is equal to customs FOB. On the customs FOB, 20% we need to calculate for this 10-2 adjustment, that is transportation. Sir, what about this ship demurrage charges? What is meant by this ship demurrage charges? Ship demurrage charges means once the goods reach the port area, they must be cleared either for the home consumption or for the what we call it as warehousing within 30 days. If neither of these things happened, then you need to pay some delayed payment charges. Those charges are known as ship demurrage charges. Up to the place of importation or includable. Therefore, ship demurrage charges are includable. Sir, what about lighterage or barge charges? Whether they are includable or excludable. So, lighterage or barge charges, what is the position, ma'am? Lighterage or barge charges. With respect to lighterage or barge charges, let's say very small cargo is needed to be unloaded at an Indian port. In order to get the entry inwards, sometimes you need to wait for 2 to 3 weeks, sometimes months also. For delivering such a small cargo, what is the thing? Definitely that much time waiting is a waste of time. That's why they will take small boats from the custodian, which are called as barge, and those small boats will now go to this particular mother vessel, that is big vessel, and the goods are unloaded onto these small ships. Now they are transported to India. That means now they are transported to the port area. So for bringing the goods from that big vessel to port area, what are the charges you will incur? They are known as barge charges. Barge charges are includable or excludable? Up to the place of importation, includable. Therefore, barge charges are incurred to bring the goods to the port area. Therefore, they are includable or excludable? Includable. Next one. What about the port to ICD or port to CFS? ICD means Inland Container Depot. CFS means Container Freight Station. Port to ICD, port to CFS means post importation expenditure. Within India transport cost it is. So within India transport cost will not be added to the tax transaction value. I already told you post importation, what is the transport expenditure that is there within India? It will not be added to the taxable value. Therefore, port to ICD, port to CFS will not be added to the taxable value. Second point in this 10-2 adjustments is insurance. If insurance within India, post importation will not be added, up to India, actual amount is given, that amount will be added to the taxable value. If not given, 1.125% of FOB will be the taxable value. Up to India, given 12, that is actual amount. That means actual amount is given, that amount will be added. If actual amount is not given, 1.125% of customs FOB here also. FOB means 1.125% of customs FOB will be added to the taxable value. What is customs FOB? Transaction value plus 10-1 adjustments is equal to customs FOB. On that customs FOB, 1.125% should be taken. So this is valuation rule ma. If these amounts are added, thereby we will get the CAF value. FOB plus 10-1 adjustments is equal to customs FOB plus 10-2 adjustments is equal to CAF value. On that CAF value, conversion rate will be applied, CBAC conversion rate. Thereby you will get the assessable value in Indian rupees. On that BCD at applicable rate. On the BCD 10% social welfare surcharge. By adding all these amounts, how much amount we will get, on that IGST will be levied. So this is a format of the problem. Sir, if this 14.1 conditions or rule 3.2 conditions are not satisfied, then what is the thing we need to go? Then we need to go to the valuation rules, rule number 4 to rule number 9. What does rule number 4 deals with? Transaction value of identical goods. What is meant by this identical good ma? First point, they must be imported goods. Second one, PQR shall be the same. PQR means physical features, quality and reputation. Third one, must be produced in the same country. Producer may be same or different. So these are the three conditions. First one, they must be imported goods. Second one, PQR shall be the same. Third one, they must be produced in the same country. If all these three conditions are satisfied, they are treated as identical goods. But few identical goods are disqualified to be identical goods, or in other words, few imported goods are disqualified to be identical goods. What are they? For which the designing work is carried in India and supplied to the exporter either free of cost or at a concessional rate, those imported goods are disqualified to be identical goods. Their designing work must be carried in India and they must be supplied to the exporter either free of cost or at a concessional rate. So these are the points ma. If these points are satisfied, then what is the position ma? Those identical goods are disqualified to be taken. Okay sir, once these are the identical goods, next what is the next step we need to see? This is a process. The identical goods to be imported at or about the same time. That means for which valuation we are doing now, those identical goods must be imported at or about the same time. Second one, their identical goods assessment must be completed. They must be finally assessed once. They must be finally assessed transactions. Third one, identical goods which are assessed as per rule 3. That means their assessment must be completed as per the normal procedure, but not by the valuation rules. If all these points are satisfied, those identical goods value will be treated as taxable value for our imported goods. What is the first condition? It must be imported good. Second one, PQR shall be the same. Third one, produced in the same country. If all the three are satisfied, they are called as identical goods. Which ones are disqualified? Designing work carried in India and supplied free of cost or at a concessional rate. Okay. Once identical good is identified, what is the next process we need to do? We need to check whether those identical goods are imported at or about the same time. Second one, they are finally assessed transactions and their final assessment must be completed as per Rule 3. That means their valuation should not be done as per the valuation rules. If all these points are satisfied, assessable value is equal to transaction value of identical goods. Sir, if at all there are no identical goods, then what is the next thing we need to do? We need to go by the similar goods. Similar goods means they are also imported goods, they are also produced in the same country, but PQR will not be the same. That means they are commercially interchangeable. That means it can be used as a substitute for another, but they are not identical ones. PQR, physical features, quality and reputation will not be the same. Remaining points are copy paste in rule number 4. So if rule number 4, there are no identical goods, in those cases their valuation will be done as per rule 5, similar goods. So rule 5 also fails, then we should go by the deductive value. Sir, what about rule 6, sir? Rule 6 simply says, if instead of rule number 7, directly we can jump to rule number 8 with the department prior approval. Sir, what is this rule number 7 deductive value? This rule number 7 deductive value will be, first point, there are 3 sub-rules here. First point, we imported cashews, for example. These items must be sold within India. Second one, they must be sold to unrelated persons. Third one, they must be sold at or about the same time. Fourth one, they must be sold as such. If these 4 conditions are satisfied, then assessable value is equal to Indian sale price minus 3 deductions. What are the 4 conditions that are required to be satisfied in order to apply the deductive value? First one, the imported goods must be sold after importation into India. Second one, they must be sold to unrelated persons. Third one, they must be sold at or about the same time. Fourth one, they must be sold as such. That means without any further processing. If all these 4 conditions are satisfied, then assessable value is equal to Indian sale price at the greatest aggregate quantity. At what price higher number of goods are sold, from that Indian sale price, 3 deductions will be there. One is profit and general expenses. Second one is cost of transport and insurance within India. Third one, taxes paid within India. By deducting all these 3, we will get the assessable value. On that assessable value, we are liable to pay the customs duty. Next one is 7.2. What is 7.2 deals with? One condition is missing there. What is the condition? Sold at or about the same time, condition is not satisfied. Remaining 3 conditions are satisfied. In that case, how to compute the assessable value? Initially, the consignment will be cleared on a provisional basis. After that, the sale transaction that happens within 90 days will be considered as the Indian sale price. From that, those 3 deductions, what we have discussed, it will be reduced and remaining amount will be treated as assessable value. That means first provisional assessment will be done. Later on, within 90 days, final assessment will be completed. 7.3. What is the condition that is missing there? Sold as such. That means after further processing they are sold. See, we imported cashews, we sold roasted cashews. Here, they are not sold as such. In that case, along with these 3 deductions, further processing cost will also be deducted. Along with these 3 deductions, further processing cost also deducted. Okay, ma. So thereby we will get the assessable value. On that assessable value, we will pay the what we can say, the customs duty. And next eighth one is ma, last 2 points here, computed value. Just like cost sheet model, raw material cost plus processing cost plus profit plus general expenses plus 10 to adjustments. By adding them, whatever the value we will get, it is known as computed value. On the computed value, we will pay the customs duty. Raw material cost plus processing cost plus general expenses plus profit plus rule 10 to adjustments. What is the amount we will get? It is called as computed value. Okay, on the computed value, we will pay the customs duty, but practically the cost data will not be available with the importer unless the seller and buyer are related parties. Last but not the least, if every rule fails, then its valuation will be done as per rule number 9, best judged value. That means by keeping in mind the spirit of remaining rules, like only imported goods data must be used, or post importation expenditure shall not be considered. By keeping in mind these points, what is the thing they will do, ma? Definitely, by keeping in mind all these points, we can value them. Say, for example, rule number 4 or 5 with flexibility, like goods must be produced by the same person, but here what we can do, same country, but here goods produced in other country may be considered by following rule number 9. In the same way, deductive value, what is the time? I told you 90 days for final within that time period. But by using the power that is given by rule number 9, we can have some flexibility there. We can take the post clearance sales beyond 90 days also. These are the flexibilities that can be there as per rule number 9. And few things are there which are available in the material. It is a direct theory question. You can read them. So these are the things. But in CMA final level, generally they are focusing on the first part. Valuation rules are asked very rarely. So the format for this is general problems is FOB value plus rule 10(1) adjustments, customs FOB. On the 10(2) adjustments will be there. We will get the CIF value. On the CF value, exchange rates will be given. RBA rate, CBIC rate, like that will be given. But we need to consider only the CBIC. What is the relevant date for rate of exchange, ma? You come across these things in CMA Inter. What is the relevant date for rate of exchange? Bill of entry. Okay. Then we will convert those amounts into Indian rupees, ma. On those assessable value in Indian rupees, BCD will be applied. After that, social welfare surcharge. By adding all the three, whatever the amount we will get, on that IGST will be calculated. So these are the ways how the problems are going to be asked in your CMA final in valuation. Next topic we need to see is FTP. In that FTP, I'm going to discuss about only the schemes that are most probably may come in the exam. With respect to this, generally, FTP means foreign trade policy. And who will design this foreign trade policy? DGFT, Director General of Foreign Trade. Based on them, so based on that particular FTP, customs or GST or in olden days excise, all these things will be modified as per the guidelines that are issued by the DGFT in his foreign trade policy. Okay. The next point is here. With respect to this FTP, there are some export benefits that can be there. Some benefits are pre-export benefits. Some benefits can be post-exportation benefit. Pre-exportation benefits means before exporting the finished goods or something, you can import duty-free. That is pre-export benefit. What is meant by post-exportation benefit? Post-exportation benefit means what we can say. After exporting the goods, you will get the goods that can be imported duty-free. Okay, these are the post-export benefits. So we are going to discuss about few schemes which are sometimes pre-export benefits can be there as well as post-export benefits can also be there. One is pre-export incentive. Here, what is the scheme? advance authorization scheme. With respect to advance authorization scheme, what does that it indicate, ma? Pre-export incentive. Pre-export incentive means what is the position, ma? Before exporting the goods, you will get the benefit here. What are they? First one, you need to make the application for authorization, that is dgft.gov.in. dgft.gov.in. Obtain the authorization for duty-free import. That means first you need to make the application for authorization is nothing but import license, ma'am. For what? For duty-free import. How much quantity? All these things will be specified therein, ma'am. Once this import license was granted, what is the period of this validity of import license, ma'am? 12 months from the date of issue. And if at all they are deemed exports, 12 months from the date of contract. So that means simply the validation of this import license will be 12 months. Okay, you got the import license. Next, what is the thing you will do? You will import those goods. Let's say in our example from USA, we are importing those goods. We can import raw materials, consumables, fuel, oil, catalyst, even spare parts also we can import under this import license, ma'am. But what is the maximum, ma'am? 10% of the CF value of authorization. Spare parts can be imported up to 10% of CF value of authorization. 10% of CF value of authorization, up to that maximum limit only spare parts can be imported. And apart from that, what are the duties that are exempted while importing these goods? Everything. BCD, CVD, anti-dumping duty or IGST, cess, everything will be exempted. Okay. Who is having the eligibility to get this particular scheme, advance authorization scheme? Manufacturer or a trader who is having the tie-up with this manufacturer? Simply manufacturer exporter, merchant exporters, both are eligible, but the service providers are not eligible for this advance authorization scheme. Okay, first step, you got the import license. Second step, you imported the raw materials duty free. By using those raw materials, another point, sir, just now you said that the raw materials can be imported. Now, how will decide the quantity? How many number of inputs we can import? How we will decide that? Based on SION. SION means Standard Input Output Norms. This is a book that is available in dgft.gov.in website. What is the finished goods you want to export? For that, how much raw material is required? Simply input-output ratio this is. It will be notified in advance in that FTP related bookmark. Then based on SION, the quantity can be imported. Sir, if SION is not available, you can apply it to the concerned officer and he will notify you the SION. Based on that, you can import. Sir, this importation will be done on a transaction basis or on a per annum basis. Generally, whatever the import license import you will do, it will be on a transaction basis. But sometimes you can go for annual requirement. If SION is available for that product, max to max, see how much quantity you can import at once. 300% of the FOB of the preceding financial year. Simply, what is your export turnover in the preceding year? 3 times or 1 crore, whichever is higher. Up to that extent, you can import all at once to meet your annual requirement. If SION is not available, then this facility will not be available. Okay, ma. And in order to get the benefit, export experience must be minimum 2 years. If all these points are satisfied, you can import. And later on, by using these finished goods, by using these imported goods, finished goods must be produced and that finished goods must be exported. It can be either physical export or it can be a deemed exports to 100% EOU, foreign going vessel or aircraft, etc. Those are also deemed to be fulfilling these criteria. Sir, any export obligation is needed to be met? Yes, there should be a value addition of 15%. Let's say with respect to outflow, that means imported goods value is $1,000 ma. In that case, what should be the export goods value? 15% value addition means 1000 into 15%, 150. It must be a minimum of $1150. And here in our example, it is 2400, more than 15%, then the export obligation was met. So what is the time limit to meet the export obligation? From the date of import clearance, within 90 days, the goods must be exported. No extension will be granted and no transfer of the material is allowed. That is actual user condition. This advance authorization scheme is under actual user condition. That means even the export obligation was fulfilled, but still the goods cannot be transferred to other party. However, waste can be sold. That means while producing the finished goods, waste can be produced. That particular waste can be sold. That is a point you need to remember. Okay. This is the advance authorization scheme. Next one is DFIA. That is duty-free import authorization. Technically, it is a post-export benefit. That means first you will export, later on you will get the benefits. First, what is the first thing you need to do? You will file the online application on dgft.gov.in for the import authorization. After that, you will make the export, whether it can be physical export or a deemed export. Okay. Once after that, request for the issue of transferable DFIA. That means first you will make the application, later on you will make the export, then you will request for issue of transferable duty-free import authorization. Once it was granted, it will be valid for 12 months from the date of issue. Okay, sir. Now you got the import license. What is the next step you will do? You can import. But if you observe, only raw materials, consumables can be imported. Spare parts are not allowed to be imported here. And there is no annual requirement concept here also. In the same way, only BCD is exempt. But whereas under advance authorization scheme, almost every customs duty was exempted. But whereas under DFIA, only BCD will be exempt. And the quantity will be based on CON. That means if CON is not available, then duty-free import authorization cannot be given. The scheme is not available where CON of any product is not available. And who can be eligible for this scheme? Manufacturer exporter and merchant exporter. Is there any export obligation to be met? Yes, a minimum of 20%. So this is the difference between advance authorization scheme and DFIA. What is the nature of the scheme? Pre-export benefit, and DFIA is a post-export benefit. Value addition. In advance authorization scheme, it is 15%, and DFIA, it is 20%. What is the duty exemption? Under advance authorization scheme, all the duties are exempted. Under DFIA, only BCD is exempted. And availability. CON or non-CON, in both cases, advance authorization scheme will be applicable. Whereas with respect to DFIA, only on CON based. Transferable, no. DFIA, yes. So this is a point you need to remember. And another scheme we need to see is EPCG. So with respect to this EPCG scheme, it is also just like the pre-exportation benefit. The first thing is, under advance authorization scheme or DFIA, you will import the inputs. But capital goods are not covered under those schemes. Therefore, in order to cover the capital goods, EPCG scheme was designed, Export Promotion Capital Goods Scheme. With respect to this point, domestic or imported capital goods. First one is type of capital good. Which type of capital goods are imported? Computers, software, spares, molds, dies, jigs, fixtures, refactory materials, but does not include second-hand capital goods and generator set. Second-hand capital goods and generator set. Okay. And sir, for which purpose we imports or we are eligible for this EPCG scheme? It may be used for pre-production activity, or it may be used in during the production, or it may be used after production also. And which form if we imports, we are eligible for this, what we can say, this EPCG scheme. It may be a CKD, complete knockdown form, or semi-knockdown form, or in assembled form. Which form you are receiving the good is immaterial. From India or USA, that means domestic as well as imported, both are covered under EPCG scheme. Sir, what is the condition for exemption? Actual user condition till the export obligation fulfilled, either general or specific, and export obligation discharge certificate is granted, then you can transfer those capital goods to somebody else. Okay, this is the point. So, okay, sir, once the capital goods are imported, what is the next thing we need to do? We need to export. It can be a physical or a deemed export. Sir, is there any export obligation that is there? Yes. Under EPCG scheme, two types of export obligations will be there. One is general, second one is specific. With respect to this general export obligation, what is the export turnover? In the previous 3 financial years, average, you must actually do the export obligation in the current financial year. And what is the specific obligation? How much amount duty you saved? If at all it is a foreign item, that means imported item, how much duty you saved into 6 times within 6 years from the date of license, you need to meet that export obligation. If it already is a domestic one, then 4.5%, 4.5 times of the duty that was saved domestically within 6 years, you need to meet that. Okay, but keep it in mind, generally while computing the export obligation, the exports that are done under advance authorization scheme or a DFIA or EPCG, all the 3 can be clubbed, because raw materials and finished goods together you can make the export now. That's why the export turnover under advance authorization scheme, the export turnover under DFIA shall also be included in the calculation of export obligation under EPCG, except these 2 schemes. Remaining export schemes turnovers will not be merged here. If at all this export, general export obligation and 75% of specific export obligation was met within 3 years, it is deemed that the export obligation was fulfilled 100%. So this is with respect to EPCG scheme, you need to remember, these are the 3 areas, most important areas in FTP you need to keep focus. So the last topic in this marathon session is duty drawback. So what is meant by this duty drawback? Generally DBK means refund of any customs duty or sometimes excise duty paid on the non-GST goods or the inputs to the exporters on the export goods. That means once the goods are exported, whatever the customs duties you paid, whatever the customs duties you paid while importing the goods, whatever the customs duties you will pay, those customs duties will be refunded once the goods are exported. So that concept is known as DBK. With respect to DBK, there are 2 types of DBKs. One is DBK under section 74, second one is DBK under 75. Generally, DBK under 74 is merchant exporting. DBK under 74 deals with merchant exporting. You purchase, that means you will import some goods. The same goods are going to be exported. In those cases, whatever the customs duty you will pay, you will get it as a refund. Simply for merchant exporters, DBK under 74 will be applicable. DBK under 75. That means raw materials are imported here. By using those raw materials, finished goods are produced. Those finished goods are sold. Then this 75 will come into C. Okay. With respect to 74, in order to allow the DBK, few conditions are required to be satisfied. First one, the goods must be imported into India. Second one, on those imported goods, customs duty must be paid. That means without payment of customs duty, DBK is not allowed now. That's why first condition, the goods must be imported into India. Second one, on those goods, import duty must be paid. Third one, the goods which are imported and the goods exported must be the same. That's why it is called as merchant trading. Same imported goods is entered for export. It can be exported in any of the three ways. It can be exported as a cargo. It can be exported as a baggage. It can be exported by post. Whatever the means, definitely you can export it. Okay. And as a proof that the goods are exported, there must be some proof. What is the proof that will be there? Shipping bill, bill of export, must be filed by the exporter, and the goods imported and exporter are the same. It must be certified by the assistant commissioner or deputy commissioner, and there must not be any prohibited goods. If all these points are satisfied, the goods must be exported. And later on, export, what is the time limit to make the export? Within 2 years from the date of payment of customs duty. If without being put to use, the goods are exported, then how much customs duty you will paid on that? 98% will be refunded to you as a DBK. That's why I told you with respect to 74, what does 74 deals with? Merchant trading. What does 74 deals with? Merchant trading. Okay. So that's why the imported goods and exported the goods must be the same. What is the time limit to export that? 2 years. Is it possible to extend that? Yes, for another period of, unlimited period of time. It depends upon the CBIC intention. What is the maximum DBK that is allowed? If at all it was without being put to use, 98%. Sir, if at all they are exported after being put to use, how much DBK is allowed to them? So this is 74. See, imported goods, value of the goods 20,000 and customs duty was paid at the time of import is 50. Those such goods, that means the same goods, after used or without being put to use or re-exported, then as per 74, DBK is allowed as a refund. Okay. These are the conditions what we have discussed. The first point is the goods must be easily identifiable. That is, imported goods and exported goods are the same. It must be satisfied by the AC or DC. Second one, what is the time limit to make the re-export? Within 2 years. Okay. Sir, from which date this 2 years shall be counted from? From the date of payment of customs duty. Sir, if at all it is a provisional assessment, then date of provisional assessment will be considered or date of final assessment will be considered. Date of provisional duty, from the date within 2 years you need to make the export. And third important one, in order to allow the DBK, what is the market price of the goods exported should not be less than the amount of DBK. The market price of the goods exported should not be less than the amount of DBK. That means how much DBK you are claiming, at least the market value of the goods must match with the DBK amount. And claiming DBK amount is minimum 50 rupees. And if at all without being put to use they are exported, what is the maximum DBK you will claim? 98%. Okay. Sir, after being put to use, then what is the position? No DBK is allowed after being put to use. This is a negative list. Wearing apparels, teachers means tea samples, movies, okay, and films, x-rays, papers and plates. Generally, if you observe, they are of one-time use maximum. Or once they used, their value will be reduced to the maximum extent. That's why, with respect to these cases, if at all you want to export them after being put to use in India, DBK is not allowed except these items. Here, goods for not for personal use, that is business purpose, and this is for personal use and motor car. For them, how much DBK is allowed? If at all the goods are imported for business purpose and the usage time period, from which date to which date they shall be counted, ma? Date of clearance up to the date when they are put again for export. In the time period is not more than 3 months, 95% DBK is allowed. More than 3 months, up to 6 months, 85%. 6 to 9, 75%. 9 to 12, 70%. 12 months to 15, 65. 18 months, 60. After 18 months, no DBK is allowed. That means how much period you used in India, based on that, DBK is allowed to you. That is the point. Okay. Next point is motor car are goods for personal use. If at all goods are used for imported for personal use, how much DBK that is allowed, ma? That depends upon first year. For every quarter or part thereof, 4% will be reduced. Second year, every quarter or part thereof, 3% will be reduced. Third year, for every quarter or part thereof, 2.5% is reduced. Fourth year, every quarter or part thereof, 2%. Let's say the customs duty paid is 100 rupees. After 1 year, we are re-exporting it. How much DBK is allowed now? 1 year means 4 quarters. 4 into 4, 16 will be reduced. 100 minus 16, 84 is the DBK that is allowed. Sir, after 2 years we are exporting, sir. How much DBK that is allowed? That means first year, 16%, 4 into 4. Second year, 4 into 3, 12. 16 plus 12, 28. 100 minus 28, 72 is allowed as DBK. Sir, after 3 years we are re-exporting, sir. How much DBK that is allowed? First year, 4 into 4, 16 will be reduced. Second year, 4 into 3, 12 will be reduced. Third year, 2.5 into 4, 10 will be reduced. 16 plus 12 plus 10, I think 38. 100 minus 38, I think 62. Definitely is allowed as DBK. Fourth year, what is the position, ma? Per quarter, 2%. That means 16 plus 12 plus 10 plus 8. I think 16 plus 12, 28 plus 10, 38 plus 8, 46 will be reduced. 100 minus 46, 54 is allowed as DBK. After 4 years, no DBK is allowed. This is with respect to 74. And what is the manner of claiming the DBK, ma'am? What is the time period to make the application? The claim for a DBK must be filed within 3 months from the date of let export order. Sir, what is the time limit? This is a time limit, ma. With respect to AC or DC, Assistant Commissioner or Deputy Commissioner, what is the original period? 3 months for filing the claim for a DBK. Is it possible to extend that? Yes, for a further period of another 3 months by AC or DC, that is Assistant Commissioner or Deputy Commissioner. And what is the fee that is payable? 1% of the FOB or 1000, whichever is lower. Okay. Sir, is it possible to further extend that? Yes. Initial 3 months, further extension by AC or DC. After that also, another 6 months can be given by the Principal Commissioner or Commissioner. Extension. For that, any fee, double the fee. 2% of the FOB or 2000, whichever is lower. That is a late fee, you need to pay for that. This is a time limit to make the application as per 74. Sir, are there any documents that are needed to be filed in order to claim the DBK there? Yes. First one is 3 copies of the shipping bill. After that, copy of the bill of entry, import invoice, evidence of payment of customs duty, export invoice, bill of lading or airwayable copy, and permission, if at all, permission of RBA for re-export of the goods, if at all they are necessary, and any other documents that are specified in deficiency memo. What is meant by the word deficiency memo? Just like a normal case, a show cause notice will be issued now. In the same way, if DBK application is not proper, then a notice will be issued to rectify the mistake. That particular notice is known as deficiency memo. These are the various documents you need to submit. Next one is 75. What does 75 deals with, ma? DBK on the imported material used in the manufacture of exported goods. That means under 74, merchant exporting, same good will be exported. Under 75, raw materials are imported. By using those raw materials, finished goods are exported. Okay, see, imported raw material, customs duty paid, goods purchased in India, GST, input services, GST. By using all these things, finished goods are produced. Those finished goods are exported. Okay, in those cases, 75 will come into scene. So, sir, when this DBK is allowed under 75, they must be using imported materials or within India, domestic ones, but duties and taxes must be paid. Then only DBK is allowed under 75. What are the conditions for availing DBK under 75? Whereas 74, merchant exporting, DBK is allowed on every item except those negative list items. But whereas DBK under section 75 is allowed only on the notified goods by the government. Second one. Second condition. Market price of the goods exported, this point is also there in 74, should not be less than the amount of DBK. How much DBK you are claiming? For example, you are claiming DBK of 1 lakh. Then the export value of the goods must be 1 lakh minimum. Then only you can claim the DBK under 75. And the maximum DBK that is allowed is 1/3 of the market price. Let's say market price is 300. Then what is the maximum DBK that is allowed? 100. 300 into 1/3. 100 rupees is the DBK that is allowed under 75. Sir, is there any value addition? Yes. Export value should be more than imported value. That means there should not be negative value. Export value should be more than imported value. And the DBK amount minimum claiming is 50 rupees. If the above conditions are satisfied, DBK is allowed. Otherwise, no DBK is allowed. So here the goods must be exported either as a cargo or as a postmark. But as a baggage is not possible under 75. But whereas under 74, by baggage also you can export. Sir, in which way the DBK rates will be there under section 75? First one is all industry rate. Generally, this all industry rate will be notified by the government based on the FOB value of the exported goods. Every year on 1st June, it will be revised based on the changes that are there in the budget. Okay. Generally based on the considerations that how much tax that was paid on inputs, what are the tax that is paid on input services. By considering all these factors, the government will decide a fixed rate. Okay, this percentage of customs duties paid will be refunded to you. Those rates are known as all industry rates. You will get the DBK every year. June 1st, it will be revised. Based on that, you will get the refund of the customs duties paid. Next point is brand rate. What is this brand rate? When all industry rate was not announced by the government, okay, within 3 months from the date of announcement of all industry rate announcement will be given, but within 3 months for your product, all industry rate was not notified. In those cases, definitely, what is the position, you can apply for the brand rate. Sir, for my product, all industry rate was not notified. So please grant me the brand rate. What is the time limit to make the application? 3 months. Is it possible to extend that? Yes, for a further period of another 3 months by AC or DC. For a further period of 6 months by principal commissioner or commissioner. For that, already you know, these are the fees you are required to pay. 1% of the FOB or 1,000 or 2% of the FOB or 2,000. This is the second rate. One is all industry rate. If all industry rate was not notified, then you can request the commissioner to fix a brand rate. And another one, next one is special brand rate. What is meant by this special brand rate? Actually, all industry rate was notified, but it is less than 80% of the taxes paid by you. In those cases, you can apply for special brand rate. A particular manufacturer may find that actual duty paid on the inputs is higher than all industry rate fixed for his product. In such a case, he can apply to special brand rate within 3 months of that particular notice. But the condition is when you can go for special brand rate, what is the all industry rate that was notified by the government? Should be less than 80%. Then only you can go for special brand rate. Then only you can go for special brand rate. That is the point. Okay. And the last point in DBK is 75A. What does 75A deals with? Interest on DBK. So, any DBK that is payable to the applicant as per 74 or 75 is not paid within 1 month from the date of filing the application for a DBK, then definitely interest will be granted to you at the rate of 6% once the time expires. So, from which date interest is calculated? The day when this 1 month expires, from that particular date, interest will be paid to you at the rate of 6%. Sir, if at all it is a erroneous DBK, sir, then what is the position? Then a show cause notice will be issued to you. Then within 2 months of demand, you must repay the DBK to the department. Otherwise, you are required to pay the interest at the rate of 15%. From which date this interest will be calculated? It will be calculated from the date of payment of DBK until it was paid again to the department. For the time period, you are required to pay the interest at the rate of 15%. So this is with respect to DBK, you must remember. So that's it with respect to this marathon session. So I hope this particular video will be useful to you. And whatever the marathon session we covered, almost 60 in out of 100, at least 60 marks we covered in this, 60 to 70 we covered in this marathon. Hope this video will be useful to all.